Okay, good morning everyone. So today is actually an auspicious day. So that's why I wanted to take this revision class today. So today is what you know, Sri Ram Navami. So it's a very good day. So with all good energy, positive vibes. So we will have this and so this exam is not getting postponed for you, correct? So therefore, so the exam is on time only and hope you are preparing well. And this is just a like effort from my side so that quickly we can complete GST revision today. Okay, so that is the agenda, and already you might have got that's it book with you, and for those who are watching in online, so we have shared this that's it book with some of our regular students, but I have made it free also, so it is available in my website. So in so you tell to your friends also, suppose if they want, because book we have not published this time, so but it is available in the downloads, so they can see here download CA Inter. So in that they can see in my website under downloads CA Inter, that's it book for May 24 exam. Even you also download in your mobile and keep it. Sometimes you may not carry the book, but maybe you are traveling somewhere or etc, you can read at least from your mobile. So quickly when you want to recollect some points, no, so you can see that at least we will make use of the mobile effectively this way. Okay, so because we use mobile only for social media, but for reading also we can use this. Okay, then and whatever book that has been provided to you, little bit changes are there, so because of the amendments, but while I am showing here, you make note in the book itself those amendments. And I'll be little fast only because it is a revision. I cannot take slowly because already I have uploaded fast track batch. I think some of you might have attended that fast track batch. I don't know whether you attended or not. It's there in my YouTube channel. So fast track batch is there. You can see that that will be detailed. So but it will be quick recap, because so before exam you will have only 1 day time. So in that 1 day, so morning to evening, you will be able to sit and watch this. This is being recorded. It is actually in YouTube live also. So therefore it will be there in the YouTube forever, and I will not delete it etc and all. So 1 day before the exam, what you can do, you can watch this in 1.5x speed, so that if it is taking like 6 hours like that, so in 4 hours, 4.5 hours you will be able to complete it. So this will be a quick recap for you, and without further delay we will proceed to the discussion. So all the topics I have included, all the chapters which are there for May 24 indirect taxes exam, that is a 50 marks portion I have included. In that, the first chapter that we are starting with is introduction to GST. So in this chapter, mainly from MCQ point of view only, the questions will be tested. So the first thing that we need to know is the effective date of implementation of GST in India is with effect from 1/7/2017. How GST is formed? By subsuming various old indirect taxes. What are those old indirect taxes which got subsumed? So indirect taxes levied by central government. What are they? Excise duty, service tax, central sales tax got subsumed into GST. So CST, central sales tax, even though levied by central government, but it is collected and retained by the state government. So CST revenue will go to state government, and now CST got subsumed into GST. And customs duty is outside the ambit of GST. Customs duty is not covered under GST. So on import and export we have still customs duty. However, we have some additional customs duties called as CVD and SAD to counterbalance excise duty and sales tax. As excise duty and sales tax got subsumed into GST, CVD and SAD also got subsumed into GST. And state government specified indirect taxes only got subsumed into GST. What are those specified indirect taxes levied by state government? Value added tax, advertisement tax, luxury tax, entertainment tax, betting tax, purchase tax, also known as octroi. Only these 6 indirect taxes levied by state government got subsumed into GST. Apart from these 6, any other indirect taxes levied by state government like professional tax, local body tax, mandi tax, etc., or corporation tax not got subsumed into GST. Even taxes levied by local authority like entertainment tax is levied by local authority also, but that entertainment tax not got subsumed. But we have entertainment tax levied by state government that got subsumed into GST, but local authority levy is not got subsumed into GST. And India follows which model? Dual GST model. Dual GST model means what? Both central government and state government parallelly levy GST on the common tax base, that is dual GST model. And this dual GST model is incorporated in the constitution Constitution 101st Amendment Act 2016. So for the purpose of bringing GST, they have made a constitution amendment, and that constitution amendment happened in which year? 2016, but the GST is implemented from 2017, and India adopted this dual GST model from Brazil and Canada, where both central government and state government have power to levy on the common tax base, that is on the value. Then there is something called as GST Council, which is a decision making body of GST. So as per Article 279A of the Constitution, so this GST Council is constituted by President of India. Who will be there in this GST Council? Union Finance Minister will be its chairman, and state finance ministers and MPs, like MP of State Affairs in charge of revenue or its members. So total there will be 33 members, one Union Finance Minister, and for 5 union territories one Union MP, and for 31 states there will be 31 MLAs. So they will be there. And how 31 states? We have 28 states plus 3 union territories with state legislature, that is Delhi, Jammu and Kashmir and Puducherry. And next, so total 33 members. What is the quorum? 50% is the quorum, 50%. So 50% means what? 33 into 50%. So there should be 17 point, that is 16.5, that will be 17 members should be there, but 50% you remember. And in that voting, central government vote will have a 1/3 weight and state government vote will have 2/3 weight, and they need to have a weighted majority. So in order to take any decision, what is the weighted majority that is required? 3/4 of the weighted majority that is required, and basically it is a decision making body of GST. And what are the various types of GSTs that we have? So we have CGST. CGST full form Central Goods and Services Tax, levied by central government. On which supply? Intra or intra-state supply. Same way SGST, levied by state government. So SGST full form State Goods and Services Tax, levied by state government. On what supply? Again intra-state supply. So whenever the supply takes place within the state, it will be CGST plus SGST. Whenever the supply takes place within the union, like within the union territory, then it will be called as CGST plus UTGST. UTGST is Union Territory Goods and Services Tax. So it is on intra-state supply within the union territory, but it is levied by the central government, and this is applicable, for union territories without state legislature. What if it is a union territory with state legislature? That is 3 union territories with state legislature. It will be SGST Act only that will be applicable there. And IGST is Integrated Goods and Services Tax, on which sale or which supply? Interstate supply, levied by central government. But in this IGST, what happens? So 50% will go to the consuming state based on place of supply. And there is something called as GST compensation cess. It will be levied on notified goods to central government, and this money is collected by central government, not retained completely by the central government. It will be given to the states for the purpose of compensating the loss of revenue to the states on account of implementation of GST, and this GST compensation cess is not on all goods, only on notified goods, and it will be levied up to one date. What is the date? 31/3/2026. It will be levied at present, and it may be extended in future. And IGST levied by central government, and 50% out of that is transferred to state based on place of supply. What if place of supply cannot be ascertained? If place of supply cannot be ascertained, it will be given to the consuming state. Now, what is the importance of place of supply? So in order to classify a transaction into intrastate or interstate, place of supply is relevant. So intrastate means what? If location of supplier and place of supply is in the same state, it is intrastate. If location of supplier and place of supply is in 2 different states or 2 different union territories, a state and a union territory, then it will be coming under interstate supply. So what are the 2 factors? Location of supplier and place of supply. So in the question, we need to check the location of supplier, and then we need to determine the place of supply. Then we will know whether it is intrastate or interstate, which is given in section 7 of IGST Act and section 8 of IGST Act. You need to remember the section number also, because in the updated syllabus, so these IGST provisions are also made applicable for you. So section 7 of IGST interstate, section 8 of IGST intrastate. Then generally location of recipient is considered as the place of supply, that is general provisions. So in place of supply chapter, we will again see that. So the general provision is location of recipient, but we have some specific provisions also. Then there is something called as zero rated supplies. Zero rated supplies means what? Export of goods or services or supply of goods or services to special economic zone is known as zero rated supplies. And why is it called as zero rated supplies? Because the burden will become zero. So whether GST is paid on inward supply? Yes. So when my outward supply is zero rated, I will have some inward supply on which I will pay GST and I can avail it as ITC. And on my outward supplies, I have 2 options. Option 1, I will not pay any GST or I will pay GST. Option 1, I will pay GST on outward supply. by utilizing the ITC and I will get refund. First I will pay GST and I will get the refund of it. And second option is I will not pay GST on outward supply, but on my inward supply whatever GST I have paid, I will get the refund of that ITC with respect to inputs and input services. Then we have state of Jammu and Kashmir divided into two union territories, that is Union Territory of Jammu and Kashmir and Union Territory of Ladakh. So Union Territory of Ladakh is union territory without state legislature. So the GST that is applicable there will be UT GST. Whereas Jammu and Kashmir, Union Territory of Jammu and Kashmir is union territory with state legislature, and the type of GST that is applicable there will be SGST. And Union Territory of Dadra and Nagar Haveli and Union Territory of Daman and Diu got merged into a single union territory, so that will be considered as one union territory only. Then there is something called as GST network. So basically GST network, section 146 of CGST Act, it provides information technology infrastructure for the purpose of implementation of GST, and it is referred to as common portal, and it provides services to whom? Central government, state government, taxpayers and other stakeholders. And basically what are the activities that can be done through the GST portal? We can do registration, we can do filing of returns, and we can pay the taxes, settlement of IGST, e-way bill. These are the various activities. Then the next area we are moving on to is supply under GST. Supply under GST is the taxable event. So every time whether the GST is applicable or not depends upon whether a transaction is supply or not. Supply is defined under section 7 of CGST Act. Section 7 of IGST Act is interstate supply. Section 8 of IGST Act is intrastate supply. But this section 7 of CGST Act is meaning of supply. And supply, 7 subsection 1 is inclusion in supply, 7 subsection 2 is exclusion from supply. So whenever we are referring to 7 exclusion from supply, we need to write 7 subsection 2 read with schedule 3. And whenever we are telling that it is including supply, we need to write 7 subsection 1. And 7 subsection 1a is classification of supply into goods or services. And 7 subsection 3 we don't have at present. So government is having power to reclassify supply of goods into supply of service and vice versa, but they have not done anything at present. So therefore 7 subsection 3 is not there. And 7 subsection 1 supply includes, so we have total 4 clauses. 7(1)(a), any activity for consideration in the course or furtherance of business. First there should be any activity, and that should be in the for a consideration, and that should be in the course or furtherance of business. So between any person, then it will become supply under 7(1)(a), whereas 7(1)(aa) is not between any two independent parties, it is between a person other than individual and its members. Person other than individual means HUF, AOP, company, partnership firm, etc., and its members. So partnership firm and partners, company and its shareholders, or HUF and its co-partners. Between them if there is any transaction, then 7(1)(aa) will be applicable. Any activity between a person other than individual and its members, but this should be for a consideration. 7(1)(b) is import of services. That import of services should be for a consideration, and that should be whether or not in the course or furtherance of business. It may or may not be in the course or furtherance of business. Example, Netflix, Amazon Prime, Zoom, cloud storage, all these are import of service, not in the course or furtherance of business. Even then it will become supply under 7(1)(b). 7(1)(c), there are 4 activities which are given in schedule 1. These 4 activities can be remembered in an easy way. DRIP, DRIP. D for disposal of business asset on which ITC is availed, and that is we have purchased some business asset on which ITC is availed, and that business asset is disposed of without any consideration. That disposal may or may not be in the course or furtherance of business. Then R for related party transaction, including transaction between distinct persons. Then I for import of services. From whom? From a related person or from a establishment located outside India. Our establishment located outside India, and that should be in the course or furtherance of business. P for principal agent transaction. That principal agent transaction should be only for goods, not for services, and these 4 activities are treated as supply even though without consideration. And first we need to check if an activity is covered under 7 subsection 2. If it is covered under 7 subsection 2, it is not a supply. If the activity is not covered under 7 subsection 2, then you need to refer to 7 subsection 1, inclusions. If it is covered under inclusion, then it is supply, otherwise it is not a supply. If an activity is not covered under 7(2), then 7(1) should be checked. If the activity is not in 7(1) also, then the activity is not a supply. Then 7 subsection 2 talks about exclusion from the supply. So supply excludes. What are the activities? We need to read with schedule 3. So spelled slow. S for sovereign functions of the government. Sovereign functions of government means all activities of government other than 4. That is transportation of goods or passengers, post department of post services, airport or port service, and services to business entities. Means these 4 activities are only covered as supply and all other activities are excluded from supply. Then post refers to government post, constitutional post and nominated post. And government post, for example, MLAs, MPs, constitutional post will be so like governors, president, and nominated post. So we have some body and the head of that body like SEBI chairman or RBI governor appointed by government, that is nominated post. So whatever remuneration that they receive is excluded from supply. Then actionable claim other than specified actionable claim. So what are the specified actionable claim? Other than specified actionable claim. Other than specified actionable claims. So what are considered as specified actionable claims? So HC blog are considered as specified actionable claim. H for what? Horse racing. C for what? Casinos. B for betting. L for lottery. O for online gaming. And G for gambling. So these are only covered under supply, but all other actionable claims are excluded from supply. So H for what? HC blog. H for horse racing. H for horse racing. Horse racing. And C for casinos, and B for betting, L for lottery, O for online gaming, then G for gambling. So these are the activities which are covered under supply now. All other actionable claims are excluded from supply. And next, L for legal fees collected by court or tribunal. So court or tribunal collecting some fees will be excluded from supply. Then next L will be land sale including sale of building, where entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier, which means I am selling land, that is excluded from supply. Building also excluded from supply. But when building is excluded from supply, when the entire consideration is received after obtaining completion certificate or first occupation, whichever is earlier. What if consideration is received before completion certificate? It is covered under supply. What if part consideration before and part consideration after? Then also it is covered under supply. Only if entire consideration is after completion certificate or first occupation, whichever is earlier, then it is excluded from supply. First occupation means the day on which the property is occupied first. Completion certificate means a certificate which we get from the Urban Development Authority. Then next one, E for employee to employer in the course of employment. So there is an employee who is providing service to the employer in the course of employment, that is excluded from supply. And D for death related, that is funeral, burial, crematorium, mortuary, all post death activities also excluded from supply. Spalled slow. S for sale or before import. So when the goods are in transit, I transfer the document of title to some other person. That some other person will only clear the goods from the customs. So my sale is excluded from supply. And then L for liquor license. Who will grant this liquor license? By the state government. O for outside the country movement of goods. So goods starting point outside India, ending point outside India. So that will be excluded from supply. And W warehoused goods under customs. That is, goods are imported and deposited in the warehouse without payment of customs duty. I transfer the documents to some other person. That some other person clears and pays customs duty. So I am excluded from supply. That is known as sale of warehoused goods under customs. So these activities are excluded from supply. And next we have two special points in this regard. Gifts by employer to employee. So whenever employer is giving a gift to the employee, so we need to check, is this gift or perquisite? If it is a perquisite, it will be covered under salary offer document. So if it is covered under salary offer document, it will be part of salary. It will not be treated as supply. If it is not covered under salary offer document, then it will be called as a gift. So gift, we have exclusion up to 50,000. So gift by employer to employee per annum, we need to see how much it is. Less than or equals to 50,000, not a supply. What if it exceeds 50,000? Entire gift value, for example 53,000, entire 53,000 will be treated as supply under 71C. So why it is 71C? Because employer and employer are treated as related parties. Then next, specified actionable claim, HC block, horse racing, casinos, betting, lottery, online gaming, including online money gaming and gambling. So these are the specified actionable claims which are covered under supply now at present. Then sale of land. So usually we will be purchasing a land and we will do the development. After development we will be selling the land. So now in that case, whether that sale of developed land is also excluded from supply? Yes. But what if we collect some amount towards the development charges? Say land value is 2000 rupees per square feet and development charges is 1000 rupees per square feet. So 2000 rupees per square feet land is excluded from supply. But towards the development charges we are collecting 1000 rupees na, that will be covered under supply. We don't have any exclusion with respect to that. So sale of land after some development such as leveling, laying down drainage lines, electricity lines, etc. is also sale of land and is excluded from supply. However, services provided for development of land is not excluded from supply and shall attract GST. Then perquisite. The difference between gift and perquisite is the perquisite is mentioned in the offer document, but the gift is not mentioned in the offer document. If the perquisite is mentioned in the offer document, and it will not be subject to GST because perquisite will be added to salary and salary is excluded from GST. Then this is summary of 7 subsection 1. First we need to see 7(1)(a), nature of activity. Any activity consideration should be there in the course or furtherance of business. From whose point of view? Supplier point of view. 7(1)(a), activity between person other than individual and its members. Consideration yes. Course or furtherance of business also yes. Point of view supplier. 7(1)(b), import of services. Consideration yes, it may or may not be in the course or furtherance of business and it should be seen. Always import of service should be seen from the recipient point of view. Rest of the transactions and all will be from supplier point of view. 7(1)(c)(d), disposal of business asset. So R and IP, all these cases consideration is not required. In case of disposal of business asset, that disposal may be in the course or furtherance of business or not in the course or furtherance of business, it will come and from supplier point of view, and rest 3 should be in the course or furtherance of business. Wherever we have import of service, that should be from recipient point of view. And next we have some important definitions. So meaning of goods and services. Goods is defined under, all the definitions are in section 2. You just remember section 2. So goods means what? Any kind of movable property. Immobile property will not come under goods, and goods includes 2 things: actionable claims or growing crops and things attached to or forming part of land agreed to be severed. Severed means cut before supply or under a contract of supply, and it excludes money and securities. Even service definition also excludes money and securities. Services means anything other than goods. And as money is excluded from both goods and services, but if there is a transaction in money for a separate consideration, then it will be treated as service. So then facilitating or arranging transaction in securities. Only sale of securities is excluded from supply, but facilitating or arranging transaction in securities like stockbroker service or depository service will be covered under services. And next we have actionable claims. Actionable claims means an instrument which satisfies 4 conditions. First, you should have a right to receive a benefit or recover a debt that is transferable and legally enforceable, and the holder of such right is entitled to receive the benefit or recover the debt. Example, bill of exchange, promissory note, lottery ticket, etc. These are some actionable claims, but not all actionable claims are covered under supply. First, actionable claims which are covered under money definition are neither goods nor services, that is bill of exchange, promissory note, etc. These are covered under money definition, so neither goods nor services. But other actionable claims we have treated as goods, but in that also only specified actionable claims are treated as supply and others are not treated as supply. Then, so these important points related to specified actionable claims, we need to know what is the meaning of online gaming. So online gaming, so means basically offering a game on the internet or an electronic network, and includes online money gaming. So whenever we play the game over the internet, so we need to spend some money for that. That will be called as online gaming. Whereas online money gaming means we deposit some money, we use that money for playing the game by betting the game. For example, Dream 11, Rummy Circle, these are all examples of online money gaming. Online gaming means a normal game where we spend money to play the game. Whereas online money gaming, we spend the money by way of betting. So that is Dream 11, etc. will be coming under online money gaming. So both are covered under specified actionable claims. Online money gaming will be treated as goods, whereas online gaming will be treated as service, OIDR services. That is what important point you need to remember. So online gaming will be treated as OIDR services, whereas online money gaming will be treated as goods. Okay. And next, basically in online money gaming, what will happen? You will deposit the money. For what purpose you will deposit the money? To make a betting. So here, whether or not the outcome of performance is based on skill, chance, or both, which means that betting involves skill, or that betting involves chance, or that betting involves both, but it will be coming under online money gaming. Online money gaming is treated as what? Goods. Is treated as goods, whereas online gaming is treated as services. The two what services? Treated as OIDAR services. Next one, money means what? Money means Indian currency or foreign currency or any instrument recognized by RBI, but money excludes. So cryptocurrency, like money excludes any currency which is not in circulation, currency held for numismatic value. So whether cryptocurrency and sale of gold coins is treated as supply of goods? Yes. Why? Because cryptocurrency is not an instrument recognized by RBI. So therefore it is not money, and sale of cryptocurrency attracts supply of goods. Same way sale of old coins. Old coins is excluded from the meaning of money. So due to that reason it will also be treated as supply of goods. Then next definition, consideration. Consideration includes and consideration excludes. Consideration includes two, either monetary or non-monetary consideration, and monetary means something received or receivable. Non-monetary can be in the form of goods or services. But consideration excludes what? Subsidy. Subsidy from whom? Subsidy from central government or state government, or refundable security deposit. These two are excluded from consideration. From whom we should receive the consideration? Either from recipient or from any person. So presence of consideration is only relevant, and consideration should be in respect of, in response to, or for inducement of supply of goods or services. Then suppose if there is any activity without consideration, or there is a consideration without any activity, it will not be coming under supply 7(1)(a), because in order to become supply under 7(1)(a), there should be activity for consideration. What is the meaning of consideration without any activity? Donations. So the donations are divided into two, conditional and unconditional donation. Conditional donation means what? You are giving me money, in return I need to do something in return for you. So that is conditional donation. So I am doing some activity against that money. So the conditional donation is treated as consideration, and this activity will become supply under 7(1)(a). Unconditional donation means you are giving me some donation and I don't have any obligation to do anything in return for you. That is called as unconditional donation. That is not treated as consideration, and it is not a supply. What about display of donor's name in the premises? Whenever we display the donor's name, is it required by the donor or not required by the donor? So not required by the donor. You don't want your name to be displayed, but as a gratitude I displayed the name. What name I displayed? If I display a business name, means that gives you a business advantage, means I am promoting your business, so it will become supply under 7(1)(a). Suppose if the display of name is not giving you any business advantage, then in that case I am not promoting any business of yours, so therefore it will not be treated as supply. So display of name, business name displayed, supply under 7(1)(a). Display of name does not result into business advantage, not a supply. Then meaning of person. Person is defined under section 2 clause 84, and person under income tax plus person under GST difference is what? Central government and state government. What is person under income tax? Individual, HUF, AOP, BOI, company, cooperative society, artificial juridical person will come under person under income tax act, plus central government, state government is person under GST, even government is also person under GST. Then meaning of business. So business we have a general meaning. So in the general meaning we have trade, commerce, manufacture, then profession, occasion, adventure, or wager, any other similar activity. So these 7 activities will be coming under the general meaning of business, and this may be, so irrespective of the volume, frequency, continuity or regularity, incidental or ancillary, so it's also covered under the meaning of business. But there are some specific activities which will always be treated as business. That is, when the time of commencement of business or closure of business, if you supply any goods or services, that will be coming under business. Then provision of services or facilities by club association to its members. Example, maintenance charges collected by resident welfare association. Then admission for a consideration, entry tickets will come. Service supplied by, that is a person is holding an office which is accepted by him in the course or furtherance of his trade, profession or occasion. So for example, CA becoming central council member, that is also business. And activities of a race club, all activities of a race club including betting transactions, and an activity or transaction undertaken by central government, state government or local authority in which they are engaged as public authorities, that is government activities also will be treated as supply, the business. Okay, so these are all the various points that are covered under the meaning of business. Then we have meaning of related. So meaning of business is not that much important, because majority of the activities that is covered under business. So therefore in exam easily by reading the question itself you will know whether it is business or not business. Only personal activities will not be treated as business. Whereas related definition we need to understand. Total 9 points we have in related definition. Point number 1, such persons or officers or directors of one another's business, which means that I am appointed as officer in your business, you are appointed as officer in my business, now we both are treated as related. Number 2, they are legally recognized partners of a firm. So partners of a firm will be related, but the firm and partners are not related, only partners of a firm are related. Number 3, employer and employee are always treated as related. These are the first 3 points. Then next one, so related to control. So there are two companies having a common shareholder. That common shareholder should be holding how much? 25% or more. Now these two companies will be treated as related. Then control, one company controls the another. Control means what? Either investment more than 50% or majority common board of directors, or controlling by way of operations. And next point is that they are under the common control of a third person. There are two subsidiary companies and having a same holding company. So definitely these two subsidiary companies are also treated as related, because these two companies are under the common control of a third person. And next 3 points, so special cases, that is both of them directly or indirectly controls a third person. For example, two shareholders together controls more than 50% of the equity of the company. Now these two shareholders will be treated as related. And next point, they are members of the same family, and family is defined. What is the meaning of family? Spouse and children. Spouse and children, whether or not dependent. Whereas brothers, sisters, parents, grandparents, if they are wholly and mainly dependent on that person, then only they will come under family. And next one, 9th one, sole selling agent. Sole selling agent means there is only one agent and all the activities will be happening through that agent only, and that sole selling agent is also treated as related. So total 9 points we have in related definition that we need to remember, and we have to apply this in the exam. So next one, meaning of various supplies. So taxable supply means what? Balancing figure actually. So we have zero rated supply. Zero rated supply given under section 16 of IGST Act. Zero rated means what? Export of goods or service, or supply of goods or services to SEZ. And non-taxable supply means what? Three things will come under non-taxable supply. So which are not leviable to GST. So two things actually. So what are not leviable to GST? Alcoholic liquor for human consumption and petroleum products. What are the petroleum products that we have? Crude oil, petrol, diesel, aviation turbine fuel and natural gas. So alcoholic liquor for human consumption and petroleum products are treated as non-taxable supplies. Exempted supplies means what? Notified as exempted from time to time. Nil rated supplies and non-taxable supplies, these three will come under exempted supplies. So the balancing figure which are leviable to GST is known as taxable supply. So supply of goods or services divided into two. Chargeable to GST, that is GST payable, or not chargeable to GST, GST not payable. If GST payable, it is called as taxable supply. If GST is not payable, why GST not payable? Maybe it is leviable to GST but it is nil rated. So nil rated means the rate of GST is nil, or notified for non-payment, or it is not at all leviable to GST, that is non-taxable. These three will come under exempted. So the balancing figure is only taxable. And all these four should be included in the meaning of aggregate turnover. In aggregate turnover, we need to take taxable supply, exempted supplies, then non-taxable supplies, even zero rated supplies, exports, etc. So usually aggregate turnover is computed on what basis? All India basis. So if I have business across the country, all the businesses, all the supplies should be taken together, that is called as aggregate turnover. But two important points, aggregate turnover excludes inward supplies, because basically turnover means outward supply. So even though you have some inward supply on which you need to pay GST and RCM, that will not be taken into aggregate turnover. Even taxes, CGST, SGST, only CGST, SGST. What about the old indirect taxes? Suppose if excise duty and VAT is there, will it be added to aggregate turnover? Yes, it will be added to aggregate turnover, but GST alone will be excluded from the aggregate turnover. Then GST on sale of flats or buildings, already we have seen. If entire consideration is received before completion certificate, is it covered under supply? Yes, and GST payable, and it will be treated as works contract service. If entire consideration is received after obtaining completion certificate, is it covered under supply or not? No, it is excluded from supply and no GST, because it is sale of immovable property. If part consideration before and remaining money after, is it covered under supply? Yes, entire amount is covered under supply and we need to pay GST on the entire amount, and it will be treated as works contract. And first occupation means date on which the flat is occupied by the buyer in the project, it is deemed as completion, and whatever remaining flats unbooked will be excluded from supply. And works contract means what? Works contract means a contract involving both supply of goods as well as services. For example, I am constructing a building. While constructing a building, I will only supply the cement, bricks, etc. required for construction. I will only do the construction activity. So for a single consideration, then it will be called as works contract. Works contract should always be treated as service. Meaning of job work. Job work means what? Carrying out process on the goods belonging to other person. So you are giving me some raw material. On the raw material, if I do the process, then the activity is called as job work. For example, you are giving me cloth and I am doing the stitching, then the activity is called as job work. And next, meaning of distinct person. So distinct person means one registration of a person to the other registration is known as distinct person. Why a person will have more than one registration? If they are doing business in different states, definitely they need to get two separate registrations. If they are doing business in the same state but in different place of business, they have an option. Either they can go for single registration, or they can go for separate registration. If they go for separate registration within the state itself for multiple place of business, one place of business to another place of business will be treated as distinct person. But between the states we don't have an option. Always we need to get separate registration in each and every state. So another establishment in another state, whether registered or not, is also treated as distinct person. For example, I have establishment in another state that is engaged in exempted supply. So I have not registered that. Even that will also be distinct person. Yes. So there are two meanings of distinct person. Number one registration to the other registration, or one registration in this state to other registration in the to another establishment in the another state, even though not registered, is also treated as distinct person. And meaning of recipient, generally who will be called as recipient? If consideration is involved, the one who is liable to pay consideration is the recipient, not one who is paying consideration. For example, I am providing services to you and you are liable to pay consideration, but you are not paying, some other person is paying, but for me you are only the recipient because you are liable to pay the consideration to me. Whereas consideration is not involved in the transaction, the one to whom we are supplying the goods or the one to whom we are supplying the services. So the person who receives such goods or the person who receives such services will be taken as the recipient. Then once an activity becomes supply, we need to classify that activity into goods or services. So that is given in 7 subsection 1 here read with schedule 2. And first we need to see the activity is movable property. If there is a transfer of title, it is supply of goods. If there is a transfer of right to use, it is supply of service. For example, I have a car. If I am selling the car, it is supply of goods. If I am renting out the car, it is treated as supply of services. And this sale of car may be at present or at a future date. Example, hire purchase. In hire purchase, I enter into contract today, I give the possession today, but the title will be transferred at a future date. So it will be treated as supply of goods only. Immovable property will never come under supply of goods, but it will come under supply of service when? If there is a transfer of right to use immovable property, like renting of immovable property or constructing the immovable property, will be coming under services. Then intellectual property rights. If there is a permanent transfer of IPR, so I have a patent that completely I have transferred to you, permanent transfer. Now it is treated as supply of goods. Suppose if it is temporary transfer, it is supply of services. Example, music director composing music for a movie is a temporary transfer. Whatever consideration received will be coming under supply of service. Carrying out process on the goods belonging to other person. So you are supplying the raw material. For example, you are giving me the cloth. I am doing the stitching. This activity is supply of service. So majority of the material given by you, I am doing the process, it is supply of service. Suppose if I only buy the cloth, I only do the stitching and I give, it will be treated as manufacture, supply of goods. If the substantial material required for the process is supplied by the supplier, then it is supply of goods. If the substantial material required for the process is supplied by the recipient, then it will be called as supply of services. Then supply of goods along with supply of services means in the activity there involves both goods and services. If it is notified supplies, what are the notified supplies? Works contract, information technology software, and supply of food. Works contract, even though it involves both goods and services, it is always supply of services. Information technology software, it involves both goods and service, always services. And then supply of food, food involves both goods and services, but it will always be treated as supply of services. Apart from this, if there is any other activity that involves both goods and services, how we need to classify? We need to check whether it is composite supply or mixed supply. Composite supply, so if the is based on principal supply, if the principal supply is goods, entire activity is treated as goods. Example, AC and installation is composite supply and principal supply is AC. As AC is goods, entire activity will be treated as goods. And in case the principal supply is service, entire activity is treated as service. For example, coaching and study material is composite supply. In that, coaching is the service and study material is the goods, but the principal supply is what? Service. So entire activity will be treated as supply of service. Suppose if it is a mixed supply, if the highest rate is goods, entire activity is treated as goods. If the highest rate is service, entire activity is treated as service. Example, TV and optional warranty. TV is goods, optional warranty is service. Highest rate is TV, so entirely it is treated as goods only. And then video lectures and pen drive. In video lectures and pen drive, highest rate is for video lectures, service, so entire activity will be treated as supply of service. Then apart from this, any other activity will be coming under doing an act, not doing an act, tolerating an act. Doing an act, so normal, any activity that is being done. Not doing an act, example, non-compete fees. We are collecting some money for not starting a competing business. Then tolerating an act, so that is we are collecting some damages, so from the other person for breach of the contract. So we are tolerating his act of breach for which we are collecting some damages, that is coming under tolerating an act. Then next one we have composite supply and mixed supply. So when we will apply composite supply, mixed supply, first we need to check whether there are 2 or more supplies involved in a transaction. Only then composite supply and mixed supply will be coming. If 2 or more supplies naturally bundle, 3 conditions should be satisfied for composite supply. What are the 3 conditions? All the supplies should be taxable, naturally bundled in the ordinary course of business, and principal supply is identifiable, then it will be called as composite supply. Price may be single or different. If it is composite supply, what we will do, we will take the rate of principal supply and apply it on all all the amounts, okay. Whereas if any of these three conditions, that is all must be taxable and one of which should be principal supply and it should be naturally bundled in the ordinary course of business. If any one condition is not satisfied, we need to check whether it is a mixed supply or not. To become a mixed supply, only one condition. What is that? It should not be a composite supply and there should be a single price. There should be a single price, then only it will be mixed supply. Suppose if there is no single price, it is not a composite supply, it is not a mixed supply, then it will be coming under individual supplies. We will take respective rate for the respective supplies. So AC and installation is an example of composite supply because all are taxable, naturally bundled in the ordinary course of business, and the principal supply is AC. So it will be treated as supply of AC and the AC rate will be taken on the entire transaction. Same way transportation and insurance, replacement of parts during servicing of vehicles plus labor charges, and then mixed supply inverter and battery. Why inverter and battery is mixed supply? It is not naturally bundled. What is the meaning of naturally bundled? If one has to be supplied along with the other, then it will be called as naturally bundled, okay. And suppose if it is like one can be supplied even without the other, then it will be called as not naturally bundled. And renting of building and renting of furniture can be given separately also. Popcorn and Coke also can be given separately also. That's why these three are not treated as naturally bundled. And here we need to see it from the supplier point of view, not from the consumer point of view. For example, inverter and battery, even though from consumer point of view, if you see without inverter battery will not work, without battery inverter will not work, but from the seller point of view only we need to see that he can sell the inverter separately, he can sell the battery separately, he can sell it together also. That's why it will not come under naturally bundled. Suppose if it is there are two or more supplies which is not composite supply and not involving single price, then it will be individual supplies and it will be taxable accordingly. So how to determine the taxability here of a transaction or activity? Mainly this will be useful for this 14 marks questions. So first you need to check whether the said activity is supply or not. If the activity is not a supply, GST is not payable. And suppose the activity is supply. So this already I have discussed in the fast track batch also. So we have this flow chart over there. I told you this. So that is, if the activity is not a supply, GST not payable. If the activity is supply, so then we need to check whether it is exempted. So what is the first aspect we need to see? Supply or not. What is the second aspect we need to see? Whether it is exempted or not. What if it is exempted? Then also GST not payable. What if it is not exempted? Then it will be taxable. When it is taxable, then the next aspect is what? Whether it will be FCM or RCM. First we need to check supply, then we need to check exempted supply, then we need to check FCM or RCM. So in that, so RCM, whether the transaction is covered under RCM, yes, then who will pay GST? Recipient only will pay GST, and the recipient is compulsorily required to get registered unless they are exempted from registration. So unless they are covered under section 23 exemption from registration, they are compulsorily required to get registered. Every recipient who is liable to pay GST under RCM is compulsorily required to get registered. Now suppose if it is no, so then who will pay? If it is not covered under RCM, who will pay? FCM. Supplier will pay. What is the difference between FCM and RCM? FCM is forward charge mechanism, RCM is reverse charge mechanism. In forward charge mechanism, who will pay GST to government? Supplier will pay GST to government. In RCM, who will pay GST to government? Recipient will pay GST to government. Okay. So supplier is liable to pay GST to government in case of FCM. And now we need to check supplier is registered or not. See, it is a supply, it is taxable supply, supplier is liable to pay, but the supplier is not registered, then there won't be any GST liability. So GST is not payable. What if the supplier is registered? Then GST will be payable. Whether compulsory registration is applicable for the supplier? No. Only for the recipient liable to pay GST, compulsory registration will be applicable. So this chart will help you in solving that, like questions, big questions are there. The first question that you have. The first question that you have is like, consolidated question. So there it will be helping you. Then the next one, that's it, 3 liability to pay GST. So even though these informations are not there in your book, don't worry, I already told you, you can download the PDF, it's there, and from there you can take the screenshots of that and you can keep the extra information also from that. Okay. So now liability to pay GST. In this liability to pay GST, we have 3 sections, section 9.3, 9.4 and 9.5. 9.3 says that there are like 9.1 and 9.2 liability to pay GST is on supplier, that is FCM, whereas 9.3 there are some notified goods and services where the liability to pay GST is on the recipient. 9.4 there is a promoter or builder who is purchasing inward supply from an unregistered person, and the promoter or builder is required to pay GST under RCM. 9.5, there are some notified services supplied through e-commerce operator. Liability to pay GST on notified services is on the e-commerce operator. First we will see 9.3, notified goods or services supplied. What are notified? List of services are notified. These list of services are notified in notification 13 of 2017. That we have to remember with a keyword sir, CG, got, salads. So these are the list of activities. And who will be liable to pay GST? Recipient will be liable to pay GST, and supplier may or may not be registered. Whereas in case of 9.4, inward supplies by a notified registered person from unregistered person. Here basically supplier is unregistered person. Who will pay GST? Recipient will pay GST. What is notified? Promoter or builder who is purchasing goods from an unregistered person is only notified. 9.5, there are some notified services supplied through e-commerce operator. Who will pay GST here? E-commerce operator will pay. What are those notified services? HATE, H for housekeeping services. Example, urban company, and where services, housekeeping service like plumbing, carpentry, AC mechanic service which is provided. Then accommodation services, example, Goibibo, OYO, etc. And then transportation of passenger service through any motor vehicle, that is Ola, Uber, and eating food from the restaurant, Swiggy or Zomato. So these are covered under notified services. Liability to pay GST is on e-commerce operator, and supplier in case of housekeeping service and accommodation service, the supplier should be unregistered. If the supplier is registered, it will not be coming under 9.5. So whereas the next two, that is T and E. What is T? Transportation of passengers and eating food from the restaurant. Supplier may or may not be registered. It will always come under notified service 9.5, where liability to pay GST is on e-commerce operator. That is, for example, there is a restaurant which is registered selling food through Swiggy. Liability to pay GST is on Swiggy only. So whereas the restaurant is not registered, selling food through Swiggy, liability to pay GST is on Swiggy only, because in case of transportation and eating food from the restaurant, the supplier may or may not be registered. Whereas in case of first two, the supplier should be unregistered, then only 9.5. For example, there is a hotel which is registered and they are providing accommodation through Goibibo or MAY'24, etc. Now who will pay GST? The hotel only will pay, as a hotel is registered. What if the hotel is not registered and they are listing through Goibibo or MAY'24? Who will pay GST? That Goibibo or MAY'24 will be paying GST. Then next 9.3, what are the list of services? So whenever you are referring to RCM, you need to write section 9 subsection 3 read with notification number 13 of 2017. What are the list of services? First, yes. Yes refers to security lending services. Security lending services provided by lender of securities to borrower of securities, and liability to pay GST is on borrower of securities. Here, won't it come under exclusion? No, it will not, because transaction in securities is only excluded from goods and services, but facilitating or arranging transaction in securities is covered under services. So therefore this is a service, and liability to pay GST is on recipient. We don't have any exemption condition for RCM or non-applicability of RCM. Then import of services. In case of import of service, supplier is outside India, recipient in India. Is there any exemption? Yes, we have one exemption. What is that exemption? Import of other than OIDR services by non-taxable recipient is exempted. So import of other than OIDR by non-taxable recipient. So what is the meaning of OIDR service? Any service which is mediated through internet, it will be called as OIDR services, and imported by non-taxable recipient. Who is a non-taxable recipient? Three people will come under non-taxable recipient: individual, trust, government. Individual, unregistered; trust, registered, unregistered; government, registered, unregistered. Individual for what purpose? Personal purpose. Trust for what purpose? Charitable activities. Government for other than business or commerce. So import of other than OIDR by non-taxable recipient is exempted. All other import of service will be taxable. Generally import of service will come under RCM. So we don't have any condition for RCM, but non-applicability of RCM. In one case, supplier only will pay GST under FCM. What is that one case? Import of OIDR services by non-taxable online recipient. So OIDR services imported by non-taxable online recipient. Who is a non-taxable online recipient? Any unregistered person. For example, we are importing Amazon Prime services. We are unregistered person. So therefore, we will not pay GST. Amazon Prime only will be paying GST. Any unregistered person or registered person only registered for deducting TDS will come under non-taxable online recipient. This is an amendment, very important point. This will be tested. Then R for renting of motor vehicles. In case of renting of motor vehicles, so what are the exemptions that we have? So we have hiring of motor vehicle greater than 12 passengers to a state road transport undertaking, hiring of vehicle, that is I have a vehicle that has more than 12 passengers, I am giving on rent to a like a road transport corporation, or I have a electric motor vehicle that can carry more than 12 passengers, I am giving on rent to a local authority, or I have a lorry, so which I am giving on rent to a goods transport agency for carriage of goods, or I have a bus which I am giving on rent to a person to provide transportation service to educational institution up to 12th standard. So these 4 cases it is exempted, all other cases it is taxable. And what are the conditions for RCM? So condition number 1, supplier should be other than body corporate, and the recipient should be body corporate, and the rate of GST should be 5%. All these 3 conditions satisfied, then only RCM. If any one condition not satisfied, it will be coming under FCM. Then next, renting of residential property. Renting of residential property, we have 2 exemptions. What are the 2 exemptions? If it is given on rent to an unregistered person, it is exempted. If it is given on rent to a what property? Residential property, given on rent to an unregistered person, exempted. Given on rent to a registered individual for his family stay, then also it will be exempted. In other case, it will be taxable. And who will pay GST? So recipient will pay GST. So recipient should be registered. That is the condition. Then copyright services. In copyright services, we have temporary transfer of copyright related to original literary. Original literary means books, dramatic works means story writing, musical works means composing music, artistic works means paintings, drawings, designs, etc. So these 4 copyrights RCM will be applicable. What are the 4 copyrights? Original literary, dramatic, artistic and musical works. RCM will be applicable, and we don't have any exemptions, we don't have any condition for RCM. But we have one exception. What is that exception? In case of original literary, so if the author opts to pay GST under FCM, for the next 1 year, author only will pay GST under FCM. So there is a lock-in period of 1 year from the date of exercising the option. So means for the next 1 year. For example, author today opts for FCM, for the next 1 year, author only will pay GST under FCM. Then next, goods transport agency services. GTA services, what are exempted? So we have 3 exemptions for GTA services, that is notified goods. What are the 6 notified goods? Agricultural produce, food grains including flours, pulses, milk and salt, organic manure, then newspapers and magazines, relief material for natural and man-made disasters, defense and military equipments. And then second exemption is if the recipient is individual HUF or artificial juridical person which is registered, so unregistered and not having a factory. Then third exemption is if the recipient is government which is registered only to deduct TDS. So in these 3 cases, GTA services will be exempted. In all other cases, it will be taxable. And GTA has 2 options like original literary. GTA is also having 2 options. Either GTA can pay GST under FCM or the recipient can pay under RCM. So they have to exercise the option for every financial year by previous quarter of the previous financial year. So this financial year, whether FCM or RCM, depends upon January 1st to March 31st of the previous year, last quarter. So they need to decide this. And if they go for FCM, again they have 2 rates. What are the 2 rates that they are having? 12% with ITC, 5% without ITC. So therefore, the moment you see 5%, don't blindly take that it has RCM. So it depends upon FCM or RCM. We need to check for the question. Suppose if the question is silent, you take the assumption that it will be covered under RCM. So if GTA opts to pay GST and FCM, lock-in period is 1 financial year. So whereas what is the difference between author and GTA? Author 1 year from the date of exercising the option. So that can be any date to any date. So whereas in case of GTA, financial year. And next option to be exercised between 1st January to 31st March of the preceding financial year. Then next we have government services. So whenever government is providing services to the business entities, including services provided by parliament, state legislature, court or tribunal, so that will be covered. We have some specific exemptions and some general exemptions. So we are discussing specific exemptions. RTA charges, any charges collected towards Right to Information Act. Then interdepartmental service, one department of central government or state government to another department of central government or state government is exempted. Then I have a telecom spectrum, that is government is having telecom spectrum. They are giving the telecom spectrum before 1/4/2016 and for which they collected one-time charges or annual royalty, everything will be exempted. Suppose if they have right to use natural resources, that right to use natural resources they are giving to an individual farmer. So that will be fully exempted. But if they are giving right to use natural resources to any other person, so that should be before 1/4/2016, only one-time charges will be exempted. And next we have merchant overtime charges collected under customs for clearances after office hours or working hours. Then safety certificate charges for providing the safety certificate, consideration for tolerating an act, you entered into contract with government and you breach the contract for which you pay some damages, that amount, and share of profit petroleum. So whenever government and leaseholder enter into a joint venture for giving the mining rights for extraction of crude oil or natural gas, so government will get a share of profit. That share of profit received by the government is exempted. And then registration charges under any law and fee for birth certificate, death certificate, the driving license, visa or passport, guarantee commission for guaranteeing the loans given to PSU. So government will be giving the loans to the public sector undertakings for which they will collect some guarantee commission, that one, and excess royalty collection contractor to the extent of variable royalty. So usually ERCC will be appointed by the government, that ERCC will pay some variable like fixed royalty to the government and ERCC will receive the variable royalty. So when ERCC is paying money to the government to the extent of variable royalty, it is exempted. And fee for granting national permit. So permit charges for going from one state to another state or across the country. These are the 14 exemptions that we have with respect to services provided by whom to whom? Government to business entities. Apart from these 14 exemptions, we have 2 general exemptions. So apart from these 14 services, any other activity provided by government to business entity, if that business entity turnover during previous year does not exceed threshold limit for registration, that is exempted, but this is not applicable in case of renting of immobile property or any other service where the value of supply does not exceed 5,000 rupees. In case of continuous supply of service, it should be 5,000 rupees in a financial year. So these cases it is exempted. Apart from this, all other cases, services provided by government to business entity will be taxable and we don't have any conditions. But in 2 cases it will be FCM. What are the 2 cases it will be FCM? Railways will always be coming under FCM, and renting of property, renting of immobile property by government to a business entity, unregistered business entity, then government only will pay GST and FCM. In case of renting of immobile property to an unregistered business entity, FCM, or in case of supply of goods or services by Indian Railways, always FCM. Then next one we have is overseeing committee services. So there is a overseeing committees which is providing services to the RBI. So basically overseeing committee services is provided to RBI. So RBI only will pay GST under RCM and we don't have any exemptions, condition for RCM, non-applicability of RCM not applicable. Then TDR FSI long-term lease. So this TDR FSI long-term lease is given by the landowner to the promoter or builder. So promoter or builder only will pay GST under RCM, but we have proportionate exemption with respect to residential units booked before completion certificate or first occupation, whichever is earlier, divided by total number of units. For example, I am a promoter or builder, I am getting some inward supply of TDR FSI long term lease. Now to what extent it is exempted? So value of inward supply, value of inward supply, we have a formula for this, value of inward supply into 18%, into, so carpet area, area of residential units, booked before completion certificate, booked before completion certificate or first occupation, whichever is earlier, divided by total carpet area, So this will be taken as the exemption. So first we need to see what is the value of inward supply. Say for example, the value of inward supply is 10 lakhs. So that 10 lakhs into rate of GST 18% into what is the carpet area of the residential units booked before completion certificate. So in that project, how much is the total carpet area? Say the total carpet area of that project is 10,000 square feet. Means the total constructed area in that project is 10,000 square feet. In the 10,000 square feet, how much is the residential units and which is booked before completion certificate, and what is the carpet area of that residential units? Say there are some flats we have in that project, and that flat booked before completion certificate, its carpet area is 6,400 square feet. Now to this extent it is exempted. So what is exempted with respect to TDR, FSI and long term lease? So 10 lakhs into 18%, 1,80,000 into 6,400 divided by 10,000, that will be 1,15,200 is exempted. So remaining amount will be chargeable to GST. So what is the remaining amount payable? Total 1,80,000 is the GST liability. From that 1,15,200 is exempted. So 64,800 we need to pay GST under RCM. So this is the proportionate exemption that we have. So the proportionate exemption is value of inward supply into 18% into area of residential units booked before completion certificate of first occupation, whichever is earlier, divided by total carpet area. And we don't have any condition for RCM or non-applicability of RCM. Then next one, sponsorship services. So generally sponsorship services is provided by organizer of an event, and we have one exemption. What is the exemption? In case of sponsorship service, be careful. The one who is organizing the event is a supplier, and the one who is paying the sponsorship money is the recipient. If it is in relation to sponsorship of a recognized sporting event, so that sporting event related sponsorship money is exempted. All other sponsorship monies will be taxable. And the condition for RCM, yes, the recipient should be body, corporate or firm. If the recipient is other than body, corporate or firm, it will not come under RCM, it will be FCM. Then agent services, total 5 agents are covered. Insurance agent to insurance company, there is an insurance agent providing service to insurance company, recovery agent providing service to bank, financial institution or NBFC, direct selling agent providing services to bank or NBFC, business facilitator to banking company, agent of business correspondent to business correspondent. These are the 5 agents, that is insurance agent, recovery agent, direct selling agent, business facilitator, agent of business correspondent. Their outward supply covered under RCM. In that, insurance agent to insurance company, if it is insurance agent working in rural area, so then it will be exempted, and we don't have any condition for RCM, non-applicability of RCM. Recovery agent services to bank or NBFC, we don't have any exemption condition for RCM, non-applicability of RCM. Direct selling agent to bank or NBFC, no exemption, but we have a condition for RCM. Direct selling agent should be other than body, corporate or firm. What if direct selling agent is body, corporate or firm? It will not be covered under RCM, it will be FCM only. So direct selling agent should be other than body, corporate or firm. Then business facilitator to banking company. If the business facilitator is working in rural area, the commission received by them will be exempted. Same way, agent of business facilitator to business, agent of business correspondent to business correspondent, if they are working in rural area and they are getting commission, that is exempted. Then next one, so sir, yes for sponsorships, yes for security lending services, I for import of services, are for renting of motor vehicle, another are for renting of residential property, C for copyright services, G for GTA services, then GOT, government services to business entities, O for overseeing committee services to RBI, and T for TDR FSA long term lease. And in this salads, S for sponsorship service, A for agent service, L for legal services provided by individual advocate or firm of advocate to business entity. And we have 4 exemptions here. What is that? If they are providing service to a person other than business entity, it will be exempted. If they are providing services to central government, state government, local authority or government authority, it is exempted. And if they are providing services to individual advocate, another individual advocate or firm of advocate, it is exempted, but this exemption is not applicable for senior advocate. Then 4th one, services provided by advocate to a business entity whose turnover during previous year does not exceed threshold limit for registration, then it is exempted. These are the 4 cases it is exempted, and all other cases advocate service will be taxable. Wherever it is taxable, who will pay GST? Business entity will pay, advocate will not pay. Whereas arbitrator, we have only 3 exemptions. What are they? First, third and fourth. What is the first exemption? If they are providing service other than to business entity, or services to central government, state government, local authority, or service to a business entity whose turnover during previous year does not exceed threshold limit. So these are the exemption for arbitrator service to business entity. And apart from these 3, wherever it is taxable, business entity only will pay GST. Then next one, director services. There is a director who is providing services to a company or body corporate. The liability to pay GST is on the company or body corporate under RCM. But what if the director is an employee of the company? Then it is not a supply. What if the director is providing service to the company or body corporate in their personal capacity? Then also it will not be coming under RCM, it will be FCM. Director providing service in personal or private capacity will be FCM. Then security agency services, we don't have any exemption. What are the 2 conditions for RCM? The security agency should be other than body corporate, and the condition, another condition is that recipient should be registered but not opting for composition scheme, or not registered only to deduct TDS. And non-applicability of RCM, if any condition is not satisfied, then it will be FCM. So what are the 2 conditions for security agency? Supplier should be other than body corporate, recipient should be registered, but they should not be opting for composition scheme, or not registered only to deduct TDS. Then next we have, these are the notified service under 9.3. Then 9.4, inward supply of a promoter or builder. So promoter or builder, we need to check inputs and input service other than, so these 5, electricity, high speed diesel, motor spirit, natural gas, TDR FSA long term lease. So this you don't bring under 9.4. So electricity no GST, high speed diesel no GST, motor spirit no GST, natural gas no GST, TDR FSA long term lease already it is covered under RCM. Apart from this, any other, at least 80% of total in a year should be from a registered person. Otherwise, they need to pay GST under RCM at the rate of 18% on the shortfall up to 80%. But cement should always be purchased from a registered person. Otherwise, they need to pay GST under RCM at what rate? 28%. Whereas capital goods should always be purchased from a registered person. Otherwise, they need to pay GST under RCM at the rate applicable to capital goods. Just these 3 points you remember, that is sufficient. What is that? So, inward supplies, inputs and input services. Inputs and input services are than 5. Electricity, petrol, diesel, the high speed diesel, motor spirit, natural gas, TDR FSA long term lease. Now, in this, cement always should be purchased from a registered person. Otherwise, you need to pay GST and RCM at 28%. Any other goods or services, so 80% should be from registered person. Suppose if there is any shortfall less than 80%, on that shortfall you need to pay GST under RCM at 18%. Capital goods should always be purchased from registered person. Otherwise, you need to pay GST under RCM at what rate? At the rate applicable to capital goods. Then next 9.5. Liability to pay GST on e-commerce operator in case of notified services. So, notified service, housekeeping service, supplier should be unregistered. But what if the supplier is registered? It will not come under 9.5. So, supplier only will pay GST. Then accommodation service also, supplier should be unregistered. What if the supplier is registered? So, supplier only will pay GST. Then transportation of passengers by any motor vehicle, supplier registered unregistered. But we have one exception to this. What is that? Omnibus. One omnibus point is there. Transportation of passengers in a omnibus. Omnibus means what? Capacity greater than 6 passengers. If that is through omnibus by a company. So, there is a company which is transporting the passengers through omnibus through e-commerce operator. Company only will pay GST. So, if transportation is through omnibus by a company, then the company only will pay GST. 9.5 will not be applicable. Then eating food from a restaurant. Who will pay GST? Recipient like e-commerce operator will pay. Supplier may or may not be registered. But we have one exception here. What is that? If the restaurant is in a hotel, that hotel is having a tariff more than 7,500 rupees per day. That is like a 4-star or 5-star hotel. In that hotel, there is a restaurant. That restaurant is supplying food through Swiggy or Zomato. Swiggy or Zomato will not pay. The restaurant only will pay. So, if the restaurant in the specified premises, that is in a hotel having a declared tariff greater than 7,500 per day, 9.5 will not be applicable. So, liability to pay GST is on the supplier only. Then some important points. When e-commerce operator is liable to pay GST on above services, they are not required to deduct TCS. So, TCS under section 52 and 9 subsection 5 are mutually exclusive. Wherever 9.5 comes, TCS will not be applicable. Otherwise, TCS will be applicable on e-commerce operator. Only in case of notified services, that is 9.5, e-commerce operator is liable to pay GST. In case of other supply of goods or services, who will pay GST? Supplier only will pay GST. Only for 9.5 services, e-commerce operator will pay. Every e-commerce operator liable to pay GST or liable to deduct TCS is compulsorily required to get registered. So, remember, e-commerce operator is compulsorily required to get registered. Also, supplier of goods through e-commerce operator, if I am selling goods through e-commerce operator like Amazon or Flipkart, etc. So, the seller who is selling goods through Amazon or Flipkart is compulsorily required to get registered, but we have a relaxation there. If the seller is making only intra-state supplies and he is getting a unique enrollment number, he is not required to compulsorily get registered. Again, I am repeating, if I am a seller, if I am selling goods through Amazon or Flipkart, I have to compulsorily register. But if I am making only intra-state supplies within the state and I am not making any interstate supplies, so then I can get a unique enrollment number. Without getting registration, I can supply through e-commerce operator. That is this amendment. And supply of notified service or other than notified service through e-commerce operator, they are required to get registered only when their aggregate turnover exceeds threshold limit for registration. Then next we have some summary of important circulars. So, whether interstate movement of conveyances, when a conveyance is going from one state to another state between the distinct person, whether any GST payable on the conveyance? No. On conveyance, we do not have to pay GST because that conveyance will be returned. Also, same way, spare parts which are taken from one distinct person to another distinct person, we do not have to pay GST on the spare parts also. Then next one, when the agent is called as agent acting on behalf of principal. So, if the invoice is raised by the agent in his name, or if the purchase invoice is the name of the agent, then the agent is acting on behalf of the principal. Then in case of printing activity, when it will come under supply of goods or supply of services, if paper is the goods and printing is a service, if paper constitutes principal supply, it is supply of goods. If printing constitutes principal supply, then it is supply of service. In case of books, brochures, flyers, etc., printing is a principal supply, not the paper ending, therefore it will be treated as supply of service. Whereas in case of tissue papers where the hotel logo is printed, their tissue paper is the principal supply, not the printing, so it will be treated as supply of goods. Then whether the activity of bus body building, again we need to classify based on principal supply. In bus body building, they use the metal, materials, etc., that is goods, whereas fabrication and installation is the service. The principal supply is service, so bus body building will be treated as supply of service. Whether rethreading of tires, in case of rethreading of tires, you will give me the old tire on which I do the rethreading, it is supply of service. Suppose if I buy the old tire from you and do the rethreading and sell the rethreaded tire to you, then it will be treated as supply of goods. Then priority sector lending certificates. Generally priority sector lending certificates is between banks. One bank will be selling priority sector lending certificate to another bank. It will be treated as sale of goods and always chargeable to IGST under RCM. So means it's treated as deemed interstate supply. Whether artwork sent by the artist, when an artist is sending the artwork to the art gallery and the art gallery thereafter selling it to the customer. Only when art gallery is selling it to the customer, that is the date on which it is treated as sale in the hands of the artist. Then whether tenancy rights or pagadi system is chargeable to GST. Tenancy right, that is when I have a tenancy right to have the property as I have a property tenancy right, means I will only be the tenant of that property. When I transfer the tenancy right as a tenant, it will always be taxable in my hands. Whereas in the hands of the property owner, it will be taxable if the rent of that property is exempted, then the tenancy right also exempted. If the rent of that property is taxable, tenancy also taxable. But tenancy right, transfer of tenancy right, transfer of tenancy right always taxable in the hands of tenant, always taxable in the hands of tenant. Then next, GST on director remuneration, already we have seen. What if the director is an employee of the company? So which means TDS will be deducted under 192. So whenever director is getting remuneration from the company and the TDS is deductible under 192, then it will come under salary, so there is no GST. If the TDS is deducted under 194J, then whatever money received by the director is treated as professional remuneration, and on that GST will be applicable, and RCM, company or body corporate, is required to pay. That is the circular. Then whenever insurance company is giving no claim bonus to the insured, so from paying the premium, so that no claim bonus is treated as a deduction from the insurance premium. So therefore on net premium only GST will be computed. And next one, whether interest received by a del creditor agent is chargeable to GST. Now interest is received by del creditor agent, whether invoice is raised by del creditor agent or not, you need to see. If invoice is raised by del creditor agent in his name, the interest is on account of delay in receipt of consideration, it will be taxable. If the invoice is raised by the principal, then the interest received by the del creditor agent is only for giving the finance facility, and that interest received by del creditor agent will be exempted. Then when a company is investing shares in the other company, so is that activity treated as supply? No. Investment activity is not treated as supply. So therefore holding shares by one company in the other company will not become supply, because transaction in securities. Securities are neither goods nor services. Then whenever food and beverages are sold by a cinema theater, so to the people, so along with the ticket, whether it will be treated as composite supply? Yes. So exhibition of film will be 28%. Sale of food and beverages will be 5%. If you go to the theater and buy the food and beverages separately, then the rate of GST for food and beverages will be 5% and theater will be 28%. As a part of the ticket itself, if they sell food and beverages, means like a complimentary. So along with the ticket, they are also giving you food and beverages as complimentary. Even on food and beverages, the rate of GST will be 28%, because the principal supply is exhibition of film. So that rate will be taken. So these are the various circulars we have. And the next area is value of supply. So value of supply, usually what should be taken as a value of supply? Transaction value will be taken as a value of supply. What is the transaction value? Price actually paid or payable for supply of goods or services. And if two conditions are satisfied, what are the two conditions? Supplier and recipient should not be related, and price must be the sole consideration. If any one condition is not satisfied, or both the conditions not satisfied, so then transaction value will not be taken, means the price involved in the transaction will not be taken. We need to determine the value as per rules. Usually as per rules, what should be taken? The open market value will be taken. Okay, value will be determined as per rules, and that rules is not applicable, but usually remember the market value, the fair market value or the open market value will be taken. So there is a supplier who is supplying some goods or services to the recipient, for which recipient will make some payment. That payment will be taken as the transaction value. And if the supplier incurs the expenditure and recovers the expenditure from the recipient, will it be included in the value? Yes, provided that expenditure is recovered by the supplier from the recipient before or at the time of supply. Suppose if the expenditure is after supply, that will not be included. If the expenditure is before or at the time of supply, then it will be included in the value. And next one, taxes, duties and cess by whatever name called other than GST should be included in the value, that is 15(2)(a). So for example, we have customs duty. While computing IGST, whether the customs duty should be included? Yes. While computing customs GST, whether we need to add the entertainment tax? Yes. All taxes, duties and cess by whatever name called you add, and finally only GST you will be computing. And next one, suppose if recipient is incurring expenditure on behalf of the supplier, actually that supplier should incur the expenditure, but recipient is incurring, means it's an indirect consideration to the supplier, so then it should be included. Recipient incurs expenditure on behalf of supplier, it should be included. What if recipient incurs the expenditure on his own account? That will not be included. Then next one, interest, late fee or penalty for delay in receipt of consideration. You have to pay money to me on time, you did not pay. So therefore, I am giving you extended credit period. For that extended period, I will collect some interest, late fee, penalty, that should be included in the value. So first one, 15(2)(a). 15(2)(a) says taxes, duties and cess by whatever name called other than GST should be included in the value. And second one, 15(2)(b), any amount incurred by the recipient on behalf of the supplier should be included in the value. 15(2)(c), any expenditure incurred by the supplier and charged to recipient before at the time of delivery of goods or services to be included in the value. 15(2)(d), interest, late fee or penalty for delay in receipt of consideration. Then 15(2)(e) is subsidy. Subsidy should be divided into two. That is directly linked to the price, not directly linked to the price. Not directly linked to the price means it's a lump sum subsidy or a general subsidy. So means it will not be connected to our outward supply. That subsidy you ignore in the question. You don't have to bother. So because it will be, not considered in the value, it is treated as donations. It should be ignored. Whereas if it is directly linked to the price, directly linked to the price means what? So it is related to outward supply. For example, subsidy 2000 rupees per unit sold or 2000 rupees per service. So like that, if they are linking it to the outward supply, then it will be directly linked to the price. Sir, what if the question is silent? You consider the subsidy as directly linked to the price and you treat it accordingly. Okay. Now, directly into the price is again divided into two, from CGRSG or from others. If it is from CGRSG, to be excluded from value. If it is from others, to be included in the value. And suppose if the question is silent, consider the given price after reducing the subsidy amount given in the question. Means what? So whatever is the original price, we don't know. The price given in the question is silent. So the given price is after considering subsidy. Net of subsidy means what? So to arrive at the given price, there is some original price. They have already reduced the subsidy and they arrived at the given price. Okay. So now this subsidy is already reduced. Now given price is taken as a base. This given price we will take as a transaction value. Subsidy is reduced. It is from central government or state government. It is to be excluded and it is already excluded. So ignore. Suppose if the subsidy is from others, so it is to be included, but in the given price it is excluded. So we need to add. Just these two treatments you need to follow. Then next one, exclusion from value of supply, section 15 subsection 3, the exclusion is discount. So discount is excluded from supply, but the discount can be before or at the time of supply. If it is discount before the time of supply, like trade discount, it is always allowed as deduction. If the discount is given after supply, but the terms are agreed before at the time of supply, is it allowed as deduction? Yes. For that, supplier has to give one document called as credit note to the recipient, and the recipient should reverse the ITC. It is also allowed as deduction. What if the discount is given after supply, but the terms are not agreed before at the time of supply? It will not be allowed as deduction. Example, end of season sale discount, not allowed as deduction. So for example, first I gave a sale, I sold the goods for 1 lakh. And I have not agreed any discount terms. Later on I gave a 50% discount to you. So even though I collect only 50,000 from you, but I need to pay GST on 1 lakh because the post supply discount is not allowed as deduction as the terms are not agreed before the time of supply. Then whether GST is applicable on additional penal interest on overdue loan. So remember, in a EMI. So in a EMI, non-payment of EMI, we have to pay some interest. Interest payable, penal interest payable for non-payment of EMI. In the EMI, if the interest is taxable, penal interest also taxable. In the EMI, if the interest is exempted, penal interest is also exempted. Example, housing loan interest is exempted. So why housing loan EMI interest is exempted? Because interest on loans, advances, deposits is exempted. As interest on loans, advances, deposits is exempted, so the housing loan EMI interest is exempted. If you are missing a EMI, you have to pay penal interest. That penal interest is also exempted. Then suppose if credit card EMI is there. Credit card EMI, the interest involved in credit card is taxable. So as credit card interest is taxable, so for non-repayment of credit card EMI, they will levy a penal interest. That penal interest is also taxable. What you need to remember, if the interest involved in the transaction is exempted, penal interest is also exempted. If the interest involved in the transaction is taxable, then penal interest is also taxable. Okay. So that is what hire purchase transaction. In hire purchase transaction, the interest is taxable. So penal interest also taxable. In hire purchase financing, in the EMI, the interest is exempted because it is on loans, advances, deposits. So penal interest is also exempted. Then no claim bonus, already we have discussed, it will be allowed as deduction because no claim bonus will be like a pre-supply discount. Before supply itself, they will be giving this discount. Then incentive, usually what happens, so in case of low value UPI transaction up to 2000 rupees, so government will be giving incentive to the companies like acquiring companies or banks, financial intermediaries. That's why they will not be charging any amount to the vendors. So there won't be any processing fee because they get an incentive. How this incentive should be treated? This incentive should be treated like subsidy from central government or state government. So it is considered in the nature of subsidy by central government, therefore not included in value. Then TCS. Under Income Tax Act, there is something called as TCS. So that will be collected by supplier from the recipient. For example, you are buying a car. Now the car dealer will be collecting TCS from you. Is the TCS to be included in the value? No. So TCS under Income Tax Act should not be included because basically TCS is an interim levy to know your source of income. That is not actually your tax on income. So TCS under Income Tax Act should not be included in the value. So car dealer selling car to you, he is collecting TCS 1%. Should that 1% be included in the value for computing GST? No. So TCS not to be included in the value. Then GST implications on debit note and credit note as per section 34. So who will be giving debit note and credit note? Supplier will be giving debit note or credit note to the recipient. When the debit note will be given, whenever there is a increase in the invoice value, debit note. Whenever there is a decrease in the invoice value, then it will be credit note. Both will be given by supplier to recipient only. And whenever recipient has to pay extra amount, debit note. Whenever recipient has to pay amount less than the invoice value, credit note. Okay. And is there a time limit for debit note? No time limit for debit note. Because of debit note, what will happen to the supplier? Supplier's liability will increase and the recipient can take ITC based on that. Based on credit note, what will happen to the supplier's liability? It will be reduced and the recipient has to reverse the ITC. If he don't have ITC, he need to add it to his liability. Is there a time limit for credit note? Yes. The time limit for credit note is 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. What are the cases? Like this time limit, we have same time limits. So time limit for availing ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, time limit for rectification of GSTR3B return, time limit for rectification of GSTR8. In these 5 cases, the time limit is same, 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. Then the next area, invoice and time of supply. So section 31 talks about what is the due date of invoice. So due date of invoice in case of goods, 3 provisions you need to remember. Generally, what is the due date of invoice in case of goods? Normal cases. If supply involves movement of goods, at the time of removal. If supply does not involve movement of goods, at the time of delivery. For example, it so happens that, so you are placing the order with me and I have to deliver the goods to your home. Now the date on which I remove the goods from my location, that will be taken as the due date of invoice. Suppose if you are coming and collecting the goods and going, then on the day when I hand over the goods to you, that date will be taken as the due date of invoice. Supply involves movement of goods at the time of removal. Supply does not involve movement of goods at the time of delivery. In case of continuous supply of goods, continuous supply of goods means there will be successive supply of goods for which the payments are settled on a periodical basis. So we need to see whether the payments are received based on account statement or irrespective of account statement. If the payments are received based on account statement, means I will give an account statement, based on that only you will pay. Then the account statement date will be the due date of invoice. Ad hoc you have to pay some money irrespective of the account statement. So whenever you pay money to me, that date will be taken as the due date of invoice. So date of account statement issued or the payment received, as the case may be. Then sale on approval or on return basis. In sale on approval or on return basis, first I will hand over the goods to you and thereafter you will use it, and if you like it you will buy, otherwise you will return. Now in this case, 6 months from the date of removal or date of acceptance by you, whichever is earlier will be treated as the date of sale and I have to raise invoice at that time. So 6 months from the date of removal or date of supply, whichever is earlier. These 3 provisions in case of goods. In case of services, normal cases, if it is banking sector or insurance sector, time limit for issuance of invoice is 45 days from the date of completion. If it is other cases, 30 days from the date of completion. Then continuous supply of services, we need to check 3 points. So whether the installment date is ascertainable from the contract, then the due date of installment is the due date of invoice. What is a continuous supply of service? A service which takes more than 3 months to complete and involves periodic payment obligations is a continuous supply of service. Example, so insurance contract is a continuous supply of service, telecommunication postpaid is a continuous supply of service, and even construction is a continuous supply of service. So if in the construction contract the due date of installment is ascertainable, the due date of installment itself is taken as the due date of invoice. Suppose if the due date of installment is not ascertainable but the payment is linked to completion of an event, like upon completion of first floor you have to pay this much, second floor you have to pay this much, final you have to pay this much, like this. So means whenever that first floor is completed or second floor is completed, the date of completion will be taken as the due date of invoice. Nothing is there, then whenever you pay the installment amount, that date will be taken as the due date of invoice. Remember, in continuous supply of service, 2 conditions. First, the service should take more than 3 months to complete and it should involve periodic payment, mean installment, then only it will be called as a continuous supply of service. Otherwise it will be a normal service, 30 days or 45 days invoice will be applicable. Cessation of service means abruptly stopping the service is known as cessation of service, and when the invoice to be given, immediately after cessation the invoice needs to be given. Then time of supply in case of goods and services. So section 12 deals with time of supply in case of goods and section 13 deals with time of supply in case of services, and here the first provision is common for both goods and services. The liability to pay GST is determined on the basis of time of supply. Then next one, time of supply in case of FCM for goods is different and for service it is different. First, what is the time of supply in case of FCM for goods? In case of a person opting for composition scheme or specified actionable claims, we have 3 dates: due date of invoice, actual date of invoice, or date of payment, whichever is earlier will be taken. So these 3 dates for whom? In case of a person opting for composition scheme and specified actionable claims. So due date of invoice means when the invoice needs to be issued. Actual date of invoice, when the invoice is, due date of invoice when it should have been issued. Actual date of invoice when it is issued, and date of payment whichever is earlier. As date of payment is also one of the dates, so they need to pay GST on advances. Whereas others means other than those opting for composition scheme or other than specified actionable claims, it will be due date of invoice or actual date of invoice whichever is earlier. Means GST not payable on advances. Why GST not payable on advances? Suppose this month we receive the money but we raise invoice in the next month, or due date of invoice also next month, so we don't have to pay GST this month, we need to pay GST only next month because time of supply is that. So 2 provisions you need to remember. For a person opting for composition scheme or specified actionable claims, due date of invoice, actual date of invoice, date of payment whichever is earlier, and for others, due date of invoice or actual date of invoice whichever is earlier. And also remember one point, that GST not payable on advances if date of payment is not there for time of supply. Then in case of services under FCM, you see service under FCM, section 13 subsection 2. So if the invoice is given within the due date, then invoice date or payment date whichever is earlier. If invoice not given within due date, completion date or payment date whichever is earlier. What is the time limit within which invoice to be given? 30 days or 45 days. So within that time if you give whatever date you gave invoice or payment date whichever is earlier. If you miss to give the invoice by the due date, so take the completion date or payment date whichever is earlier. As payment is also one of the date, so GST payable on advances in case of service under FCM. Then in case of goods RCM, you see goods RCM 3 dates we have. So date on which goods are received, date on which payment is made to supplier, and 31st date from the date of invoice. So this we need to see from the recipient point of view. Date on which goods are received, date on which payment is made to supplier, or 31st day from the date of invoice. But in case of services, this first date is not there. Date on which payment is made to supplier, instead of 31st day it will be taken as 61st day. Then in case of vouchers, then residual cases and addition to value by way of interest late fee, we don't have any difference in the provision between goods and services. The provisions are same. In case of vouchers, let it be goods or services, check whether the voucher is identifiable voucher or non-identifiable voucher. Identifiable voucher means that voucher can be redeemed against a particular product or particular service, then it is identifiable voucher. So today itself I know against which product you are going to redeem, so the date of issuance of voucher will be taken as a time of supply. Whereas non-identifiable voucher, you will be redeeming against so any product or service, so I don't know, so whenever you actually redeem, that is the time of supply. Identifiable voucher at the time of issuance of voucher, non-identifiable voucher at the time of redemption of voucher. And then in case of residual cases, So whether the person is required to file periodical return, yes, the due date of that return, otherwise whenever he pays GST, that will be taken. Suppose interest late fee penalty, always interest late fee penalty is taxable on what basis? Receipt basis. Only when we are actually receiving it, we need to pay GST. Then some additional points in this regard. In case of goods covered under FCM on advance, GST not payable, but in all other cases GST is payable on advances. Then up to 1000 rupees received beyond invoice. I have raised an invoice for some amount. Say for example 12,300 I raised invoice, but you have made a payment of 13,000 rupees. Now 700 rupees received in extra. So for the 700 rupees, either I can take invoice date. For the 700 I will give invoice in the future. So invoice date in future or payment date now, whichever is earlier, or I will raise invoice, so at the time itself I will pay GST. So I have two options, either I can choose date of invoice or as per 13.2, that is invoice or payment, whichever is earlier, supplier has option to choose. What is considered as the date of payment? From supplier point of view, date on which entry is made in the books or date of credit in the bank account, whichever is earlier. From recipient point of view, date of entry in the books or date of debit in bank account, whichever is earlier. Then in case of import of services from an associated enterprise, so there is a recipient in India, supplier outside India. Usually import of service RCM, date on which payment is made to supplier or 61st day from the date of invoice, whichever is earlier. But between associated enterprise there won't be any invoice. So date on which payment is made to supplier or date of entry in the books of recipient, whichever is earlier should be taken. Date of entry in the books of recipient or date of payment to supplier, whichever is earlier. When goods are taken outside India for exhibition, but the goods are not brought back within 6 months, on expiry of 6 months we need to consider it as supply and we need to raise invoice because of sale on approval or on return basis. 6 months from the date of removal or date of acceptance, whichever is earlier. So we have taken it, they have not returned, means it is deemed as supply, and as and when the goods are returned, you raise a credit note for cancelling this invoice. Then as per section 33, it is telling that tax component should always be shown separately in invoice. So whenever we are raising an invoice, in that invoice the tax component separately we need to show. So we should never give the invoice as inclusive of GST. We need to give the invoice as amount plus GST separately. Then various documents involved in GST. The first document is tax invoice. So tax invoice is given by registered person who is making taxable supplies. And what is the time limit? Already we have seen the time limit. And who will be giving tax invoice to whom? If the supplier is registered, supplier will give the tax invoice to recipient. But if the supplier is unregistered, then recipient will give the tax invoice to the supplier in case of RCM. And next one, bill of supply. Who will give bill of supply? Registered person who is making exempted supplies or a person coming under composition scheme. And supplier only will be giving it. Time limit same as due date of invoice. Invoice come bill of supply. Who will give? A registered person who is making both taxable and exempted supply in a single transaction to an unregistered person. Then they will be giving invoice come bill of supply. Supplier will be giving same as due date of invoice. But in case of low value supplies, low value supply means value of supply less than 200. Neither a tax invoice nor bill of supply is required. Three conditions. It is a B2C supply. B2C means recipient is unregistered and recipient do not require tax invoice, but they need to prepare a consolidated invoice at the end of the day. So low value supplies, tax invoice as well as bill of supply not required. First condition, recipient is unregistered. Second condition, recipient do not require tax invoice. Third condition, a consolidated tax invoice is generated at the end of the day. But in case of multiplex theatres, even if the value of supply is less than 200, they need to give an invoice and e-ticket will be treated as invoice. And debit note, credit note already we have seen. So when it will be issued. And next we have revised tax invoice. When revised tax invoice will be given, so whenever a person is liable to get registered and he made application for registration and he got registration. So from the date he is liable to get registered till the date he got the registration certificate, he cannot recover the GST. So due to that reason, after registration, for the period from the date he is liable to get registration till the date he got the registration certificate, for that period he can give a revised tax invoice. When the revised tax invoice will be given after registration certificate, what is the time limit within which registration, they need to give revised tax invoice within 1 month from the date of registration, they need to give revised tax invoice. For example, a person is liable to get registered from 1/5, he is liable to get registered, and thereafter he got registration on 25/6 only he got registration. Now from 1/5 to 26 he is liable to register, but he not got registered. So he will get registration certificate only on 25/6. So he will be making outward supply. For that outward supply, he cannot collect the GST. So to recover the GST, he can give a revised tax invoice to his customers. When he can give revised tax invoice? After 25/6, within 1 month. Within 1 month, he can give revised tax invoice after 25/6 for the outward supplies between which period? 1/5 to 25/6. That is called as revised tax invoice. But remember, revised tax invoice can be issued only if application for registration is made within 30 days. So because we have a effective date of registration, what will be taken as the effective date of registration? If applied for registration within 30 days, the date on which the person is liable to get registered is the effective date of registration. If not applied within 30 days, then the date on which they get the registration certificate. So if the application is not made within 30 days, revised tax invoice cannot be issued. Then next, receipt voucher. Who will be giving receipt voucher to whom? Supplier to recipient. When? Advance. Simple, advance. Whenever supplier collects advance from the recipient, supplier will be giving receipt voucher to the recipient immediately upon advance. Payment voucher, who will be giving to whom? Recipient to supplier in case of RCM. So recipient is making payment to supplier, at that time they will give payment voucher. Refund voucher, which case supplier has given a receipt voucher for collecting advance. Now the supply is cancelled, the advance is returned, then the supplier has to give the refund voucher to the recipient. And next, delivery challan. So delivery challan, in case when there is a movement of goods without supply. Movement of goods without supply means goods sent on job work or goods taken from one place to another place within the same registered person. They have not got separate registration. So in all these cases, there is a movement of goods but without supply. In that case, that movement of goods should be under the cover of a delivery challan. Supplier should be giving that. Then next we have HSN code in invoice. So usually in case of goods, we need to enter HSN code, and that we have a relaxation. Suppose if the aggregate turnover during previous year does not exceed 5 crores, we need to enter only 4 digits, that too for B2B supplies. If the aggregate turnover during previous year exceeds 5 crores, whether it is B2B supply or B2C supply, we need to enter 6 digits. For services, it is called as service accounting code, that is always a 6-digit number. Then there is something called as e-invoice. What is e-invoice? Obtaining 3 things from the invoice registration portal for a normal invoice is known as e-invoice. That is invoice reference number, quick response code and digital signature from invoice registration portal is called as e-invoice. Whenever e-invoice is prepared, the physical copy of the invoice is not required. Usually we need to prepare the copy of invoice in triplicate and duplicate. So triplicate in case of goods, original for buyer, duplicate for transporter and triplicate for assessee. Whereas in case of services, original for recipient, duplicate for supplier. But the physical copy of the invoice is not required, where e-invoice is applicable. And type of transaction for which e-invoice is required: B2B transactions, outward supply whether covered under FCM or RCM, 0 rated, credit notes and debit notes. When e-invoice is required, so whenever aggregate turnover of the registered person during any previous year from 2017-18, any previous year from 2017-18 exceeds 5 crores, then only e-invoice is required. When dynamic QR code in invoice is required, whenever the registered person's aggregate turnover in any previous year from 17-18 exceeds 5 crores, for B2C supplies, dynamic QR code is required. So if the aggregate turnover during any previous year from 17-18 does not exceed 5 crores, for B2B, e-invoice not required. For B2C, dynamic QR code not required. B2B means sale to registered person, B2C means sale to unregistered person. Then suppose if it exceeds 5 crores but does not exceed 500 crores, for B2B invoice required. For B2C, dynamic QR code is not required, because dynamic QR code limit is what? 500 crores. If the aggregate turnover during previous year exceeds 500 crores, for B2B invoice, for B2C, dynamic QR code. Then invoice should be in prescribed form, that is INV1. It is optional for a taxpayer whose aggregate turnover does not exceed 5 crores. Even though my aggregate turnover does not exceed 5 crores, so I can still generate the invoice. Once the invoice is prepared, this will automatically be populated in GSTR1 and e-way bill. And physical copy of invoice is not required in case where e-invoice is applicable. Okay. And previously this 5 crore limit was 10 crores. And now they have reduced this limit to 5 crores. For your attempt, it will be 5 crores only. And physical copy of invoice not applicable. QR code can be produced before the proper officer for verification whenever required. And next, what is this dynamic QR code? Dynamic QR code means we need to enter these details and prepare a QR code, and that QR code should be entered in the invoice. That is supplier GSTIN, UPI ID of the supplier, bank account and IFSC code of the supplier, invoice number and date, invoice amount with breakup of value and tax. For UPI ID of the supplier, we have an exception that if the payment is collected by e-commerce operator, so then the e-commerce operator UPI ID should be there. Bank account and IFSC code, we have an exception not required if UPI ID is linked to the bank account. Invoice number and date, if it is a retail transaction, multiple counters are there, we don't have to enter the invoice number, just a unique number is sufficient. Invoice amount with breakup of value and tax. Remember, if the money is collected before preparing invoice, dynamic QR code is not required. If the money is collected after preparing invoice, only dynamic QR code is required. If part collected before, part collected after, only for the remaining amount we need to create the dynamic QR code. And exception to mentioning dynamic QR code invoice, if the payment is received before or at the time of generating invoice and cross reference of such payment received is mentioned in the invoice, then dynamic QR code not required. Another exception is supplier in India, recipient outside India. Place of supply is in India, it's not an export of service, but the consideration is received in convertible foreign exchange. The recipient outside India cannot scan and pay. So due to that reason, dynamic QR code is not required. Then even though aggregate turnover exceeds 5 crores or 500 crores, in some case e-invoice and dynamic QR code not required. What are the cases where e-invoice is not applicable? Remember the keyword biggest. B for what? Banking company, I for insurance company, G for goods transport agency, another G for government department or local authority, E for exhibition of film in a multiplex theatre, S for SEZ unit, and T for transportation of passengers by any mode. In these cases, e-invoice is not required. Remember the keyword biggest. Then big toe. So in case of QR code, big toe. B for banking company, I for insurance company, G for GTA, but goods transport agency, then government department you remove. So you just remember big toe, BIGTOE, BIGTOE, banking company, insurance company, goods transport agency, then T, transportation of passengers, extra O we have here, OIDR services, and E for exhibition of film in multiplex. In these cases, even though turnover exceeds 500 crores, dynamic QR code not required. Now, suppose if there is a banking company is not required to give e-invoice now. If they make any other service also, invoice not applicable, yes, yes. So that is the circular. So whether the exemption for mandatory registration, generation of e-invoice available for the entity as a whole or only for certain supplies, entity as a whole. If they are not required to give e-invoice means for any transaction they are not required to give e-invoice. So what is the e-invoice process? First the taxpayer will prepare a normal invoice that will be converted into .json file, and thereafter it will be uploaded in the invoice registration portal. Invoice registration portal will do the deduplication check and generate three things: invoice reference number, digital signature, and QR code. Thereafter it will be sent to the GST system and e-way system, and GSTR1 of the seller gets updated, GSTR2B of the buyer gets updated, and the buyer can view this invoice, and this invoice, even though supplier is required to give a e-invoice, but he gave a normal invoice, even though it comes in 2A, 2B of the recipient, he cannot take it. It's a very, very important point. If a supplier is required to give e-invoice, but not issued e-invoice and issued a normal invoice, then recipient cannot avail ITC, even though it reflects in 2A or 2B of the recipient. Then next one, we have input tax credit. So we'll take a small break and then we will continue with this. Okay, we'll start. The next area is input tax credit. So input tax credit, first we have various returns. GSTR1 is a statement containing the details of outward supplies. Who will be filing GSTR1? Every registered person. And based on the GSTR1 of the supplier, the input tax credit will be reflected in 2A and 2B of the recipient. So supplier will be filing GSTR1. Based on supplier GSTR1, the data of inward supplies will be reflected in 2A and 2B. The difference between 2A and 2B is that 2A is a static, it's a dynamic document. It will get updated automatically whenever GSTR1 is changed, whereas 2B is a static document, so it will not be changed. If the GSTR1 is filed by the due date, so those details only will be reflected in 2B. But for the purpose of availment of ITC, whether 2A ITC is relevant or 2B ITC is relevant, 2B ITC is only relevant. Then 3B is a consolidated document that contains the details of outward supplies, input tax credit and net GST payable as per section 39. So section 37 is GSTR1, 38 is GSTR2B and 39 is GSTR3B. The difference between 2A and 2B can be asked as a short note question. You need to write these points. So the type of document, GSTR2 is a dynamic document, but 2B is a static document, and TDS details, TCS details will not be there in 2A, will be reflected in 2A but not reflected in 2B. Details of invoices if GSTR1 filed after due date. If GSTR1 is filed after due date, will it be coming in 2A or not? Yes, but it will not be coming in 2B of this month, but it will be coming in the 2B of the next month. Then purpose, 2A is only for reference, but 2B is for the purpose of availment of ITC. And here we need to check how much ITC to be taken. This computation we need to keep in mind. First we need to see the supplier outward supplies reported in GSTR1 or IFF. IFF refers to invoice furnishing facility. Whenever the person is under QRMP, quarterly return monthly payment scheme, so they will be furnishing the details in invoice furnishing facility, and that details, if they file by the due date, who by the supplier, if they file by the due date, these details will be reflected in 2B of the recipient, and that ITC which is reflected in 2B of the recipient is known as matched ITC. To this matched ITC, we need to make some adjustments. Total 6 adjustments we need to make. That is known as self-assessed ITC availed in 3B. What is the ITC availed in 3B? First you need to take the matched ITC as per 2B and 3 adjustments. Even though it is coming in 2B, but you should not take ITC. Ineligible. What are they? Blocked ITC, or used for non-business purpose, or used for exempted supplies. The next 3 not reflected in 2B, but it is eligible, we can take ITC. What is that? Add GST paid under RCM, re-availment of ITC reversed earlier. So already we have reversed in the previous months and now we are re-availing it. Or ITC pertaining to the earlier tax period, not availed at that time, now we can take. So ITC not available in earlier period but reflected in 2B of that period, but we have not taken that time, so we have to take now. So we can take even though it is not coming in 2B of this month. And as per section 41, only matched ITC can be availed. Suppose if it is not at all coming in 2B except these 3, can we take extra ITC? No, we cannot take the extra ITC. Then we have reversal of ITC if supplier not filed 3B, section 41 read with rule 37A. Supplier filed the invoices in GSTR1 and GSTR1 is filed within the due date. Based on supplier GSTR1, the data is reflected in 2B of the recipient. Now 3B ITC has been taken by the recipient based on 2B. Now what happened? Supplier has not filed 3B by 30th September of the succeeding financial year. If supplier not filed 3B by September 30th of the next financial year, then recipient should reverse the ITC availed by 30th November of the succeeding financial year. So supplier should file GSTR 3B by September 30th of next financial year. If not, 2 months is there for the recipient to reverse the ITC, that is October and November. By November 30th, recipient should reverse the ITC. If recipient is not reversing the ITC by November 30th of next financial year, then they need to pay interest at the rate of 18% per annum from the date of utilization till the actual date of reversal. And suppose at a later point of time, if supplier filed 3B, can the recipient re-avail the ITC? Yes. So whatever ITC that is reversed by the recipient can be re-availed without any time limit, but the interest is gone in this case. So then next one, section 49. Section 41 talks about availment of ITC. Section 49 talks about the manner of utilization of ITC. In this we need to remember a few principles. The first principle is that there is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Whereas between the other three, that is CGST, SGST and UTGST, respective credits only can be used for payment of respective liability and cross utilization is not allowed. Then second principle talks about the priority. I have IGST credit. First I need to use IGST credit for what? IGST liability. Thereafter between CGST, SGST in any manner and in any proportion. Then CGST credit first for CGST payable and then for IGST payable. SGST credit first for SGST payable and then for IGST payable. Then UTGST credit first for UTGST payable and then for IGST payable. So therefore, except this IGST credit, all other credits first for its liability and then for IGST. But IGST credit first for IGST, then for CGST or SGST, any manner, any proportion. So we need to ensure minimum cash outflow that should be maintained. And principle 3, before utilizing CGST and SGST credit, the credit of IGST should be exhausted. So completely the credit of IGST should be exhausted and then only we need to touch CGST and SGST credit. And so fourth principle is that when I have all the credits but I have to pay the IGST liability, first I need to use IGST credit, then CGST and then SGST or UTGST credit. Then IGST credit after utilizing for payment of IGST liability can be utilized for payment of CGST, SGST in any proportion. But depending upon how CGST, SGST liability is there, in that way you use it, that is better. So just follow the proportion of CGST, SGST liability, in that ratio you distribute it. And GST compensation cess also can be availed as ITC, but it can be utilized only for payment of GST compensation cess on outward supply. Then section 16 talks about condition for availment of ITC. So there are total 8 conditions. So only a registered person can avail the ITC, unregistered person cannot avail. And the inward supplies on which ITC to be availed should be used or intended to be used, in the course or furtherance of business. And recipient should be in possession of tax paid document. What are the various tax paid document? Tax invoice, debit note, input service distributor invoice or bill of entry. These are the various tax paid documents on which they can take ITC. And then recipient should be in possession of tax paid document, and then recipient should have actually received the goods or services. So if they have not received, for example, invoice is January but they have received the goods in February, they cannot take ITC in January, they can take ITC only in February. And supplier should have furnished the details of invoice in GSTR1, and that supplier should have paid the tax by September 30th of the next financial year. And recipient should file the returns. Which return? GSTR 3B for availing the ITC. And supplier who filed the GSTR 1, it should not be restricted in 2B of the recipient. So GST paid on inward supply should be reflected in GSTR 2B under which column? ITC available, and should not be restricted. So in this total 8 conditions, first 2 are basic conditions, that only a registered person can take ITC. The inward supply should be used or intended to be used in the course or furtherance of business. And next 3 conditions from supplier point of view. Supplier should file GSTR1, he should pay GST by September 30th of next financial year, and his GSTR1 when he files, it should not come in 2B as ITC not available. Then next 3 conditions in the hands of the recipient. Recipient should be in possession of tax paid document, should have actually received the goods or services, and should file the GSTR 3B. Then next, input tax means what? Input tax means CGST, SGST or UTGST, and it also includes tax paid under reverse charge. So whatever GST that is paid under RCM can be availed as ITC if eligible, and GST paid under RCM should always be paid using the cash ledger, which means for payment of GST under RCM we should not use the credit ledger balance. So what is the way in which we compute the net GST payable? For computation of net GST payable, first we need to take gross GST payable under FCM. GST payable under FCM. We need to take GST payable under FCM. After taking FCM liability minus input tax credit. In this input tax credit, so we need to take even RCM paid or FCM paid. We would have paid on inward supply na, whether it is FCM or RCM, whatever inward supplies we have paid GST, that should be taken in input tax credit. Thereafter we need to add GST payable under RCM. So we need to add the GST payable under RCM last. Why? So because GST payable under RCM cannot be paid using input tax credit. So this is the treatment that you need to follow. First you need to take FCM liability minus input tax credit. In that input tax credit it also includes GST paid under RCM on inward supply. So once you adjust it, finally you need to again add GST paid under RCM. So GST paid under RCM has two treatments. One, it will be taken as ITC and adjusted against FCM liability, plus it should also be shown as separate liability because it should be paid in cash. It cannot be paid using the electronic credit ledger. Then next one, IGST paid on import of goods can also be taken as ITC, but input tax does not include tax paid under composition scheme, because first of all a person opting for composition scheme should not charge GST to us. Even if we charge GST to us, we cannot take ITC with respect to that. And then what are the contents of invoice for availing the ITC? So in the document minimum these details should be there, then it will be called as a valid invoice for availment of ITC. What are the minimum details? It should have description of goods or services, it should have the details of supplier and recipient, and value and GST and place of supply. So supplier and recipient GSTIN, description, value, tax and place of supply. So these things should be there in an invoice, then it will be called as a valid invoice. Then inward supply means what? Inward supply means either inputs, input service or capital goods. Inputs means goods which are purchased and charged to P&L. Capital goods means goods which are purchased and capitalized in the books of the recipient. Then input service means any service which is received. Then there is a concept of deemed delivery. If goods are not received in my premises, but the goods are received in the third party premises, that is bill to ship to transaction. Invoice is raised to me, but the goods are received in some other place. So can I take ITC? Yes. As and when the goods are received in the shipping address, it is deemed that the billing address has received the goods or services and the billing address can take the ITC. So that is with respect to deemed delivery. And next, goods received in lots or installment, when the ITC can be availed only on receipt of last lot or installment. Reversal of ITC for non-payment of consideration to supplier. Suppose if the recipient has not made payment to supplier within 180 days from the date of invoice, so much of the ITC availed by the recipient needs to be reversed along with interest at the rate of 18% from the date of utilization till the date of payment or reversal. And however, interest is not payable if availed ITC is not utilized. What if within 180 days 60% is paid and 40% is not paid? Then we need to reverse the ITC proportionate to 40% only. Then the above proviso is not applicable to. So in these three cases, we don't have to bother about 180 days condition. Means even if the recipient has not made payment to supplier within 180 days, it is okay. What are those cases? Supply is covered under RCM, or supply is without consideration, or payment is made to third party on behalf of the supplier. So in these three cases, even though 180 days is not fulfilled, it is okay. That is 7(1)(c), supply without consideration, or supply covered under RCM, or 15(2)(b), payment is made to some other person on behalf of the supplier. Then next one, as and when the payment is made after 180 days, within 180 days we have not made payment to supplier, so we are reversing the ITC. Again, as and when we made payment to the supplier, can we re-avail the ITC? Yes, without any time limit, but the interest is lost. The interest is lost here. Then section 16 subsection 3 talks about depreciation. If the depreciation is computed on tax component, we purchase capital goods for 10 lakhs, GST 1,20,000. If the depreciation is computed on 11,20,000, can this 1,20,000 be taken as ITC? No. If the depreciation is computed on 10 lakhs, then this 1,20,000 can be taken as ITC. Then the time limit for availment of ITC 16(4) is same, that is 30th November of succeeding financial year or date of filing annual return, whichever is earlier. And this time limit is not applicable in case of re-availment of ITC reversed earlier. Means first we are availing the ITC and we are reversing. Why we are reversing? Maybe we have not made payment to supplier within 180 days, or supplier not filed GST 3B by September 30th, we are reversing the ITC. Again, for re-availing the ITC, we don't have any time limit. And in case of debit note, the time limit for availment of ITC depends upon the debit note date and not the invoice date. Next, apportionment of credit. Apportionment of credit here is that I have purchased some inward supply which is used exclusively in taxable outward supply. Can I take ITC? Yes. I have purchased some inward supply used for exclusively taxable outward or business, I can take ITC. If I have purchased some inward supply used exclusively in exempted or non-business, can I take ITC on the inward supplies? No. If the inward supplies is used for both taxable and exempted, can I take ITC? Yes. Proportionate ITC. How much proportionate ITC? Total ITC into taxable turnover divided by total turnover. And then inward supply used for both business and non-business purpose. Can I take ITC? Yes. Proportionate to what? Proportionate to business purpose. For example, 30% used for business, 70% for non-business. How much credit I can take? 30% credit I can take. And zero rated supplies will be treated as taxable supplies for ITC, because when our outward supply is zero rated, we may pay GST or we may not pay GST, depends upon the option that we follow. So option 1 pay GST, option 2 don't pay GST, it is up to us. But on the inward supply, can we take ITC? Yes. So therefore, for ITC purpose, the zero rated supplies will be treated as taxable for availment of ITC. Then what are treated as exempted supplies? So there are some outward supplies which are treated as exempted, even though it is not exempted actually, but it should be treated as exempted so that we cannot enjoy the ITC on inward supply. What are they? First three meaning of exempted, that is notified as exempted, nil rated, non-taxable. Then next we have supply covered under RCM. Actually supply covered under RCM, recipient will pay GST, but for the supplier it will be treated as exempted supply. Then sale of land, sale of building, sale of securities and supply of warehoused goods. These four transactions, even though it is excluded from supply, sale of land, sale of building where entire consideration is received after obtaining company certificate or first occupation, whichever is earlier, even sale of securities and supply of warehoused goods under customs, these four activities are actually excluded from supply, but for ITC purpose it should be treated as exempted supply. What should be taken as a value? In case of land and building, you take the stamp duty value. In case of securities, you take 1% of sale value of securities. In case of supply of warehoused goods, you take the sale value, whatever is the sale value of that. Then there is one transaction, actually two transactions, even though it is exempted, but we should treat it as taxable. What are they? Generally it is exempted for payment of GST, but for ITC purpose it should be treated as taxable. What are they? Interest on loans, advances, deposits, usually exempted, but for ITC purpose it should be treated as taxable for a person other than bank, financial institution, NBFC. And then sale of duty credit scrips. Actually sale of duty credit scrips is exempted, but for ITC purpose it should be treated as taxable. These are the two transactions. So interest income, interest on loans, advances, deposits and sale of duty credit scrips, generally they are exempted for payment of GST, but while doing ITC, proportionate formula. What is the proportionate formula? Total ITC into taxable turnover divided by total turnover. There we need to classify it under taxable. Then next point, generally if purchased goods are distributed as gifts or free samples, it's a blocked ITC. However, if the gifts or free samples constitute supply, we can take ITC. Example, an employer purchased a mobile phone for 50,000, exactly like 40,000, and he gave it as a gift to his employee. Is that gift supply or not a supply? Not a supply, because the value of gift does not exceed 50,000. So can the employer take ITC on the mobile purchase? No. Suppose if the mobile value is 70,000 and he gave it as a gift to the employee, is it supply under 71C? Yes. As the value of gift exceeds 50,000. Now can the employer take ITC on the gift purchase? Yes, he can take ITC. So means if the purchased product is given as gifts or free samples, if it becomes supply, then he can take ITC on the gift purchase, otherwise he cannot take ITC. Then next we have 17 subsection 4, special provision for availment of ITC by banking company, financial institution, NBFC. So for banking company, financial institution and NBFC, they have two options. Option 1, they can take the proportionate ITC. What is the proportionate ITC method? Total ITC into taxable turnover divided by total turnover, or 50% of the eligible ITC, which means total ITC into 50% they can take. And in case of option 2, exclusively used for non-business and blocked credits, ITC should not be availed, but in all other cases we need to take 50% of the remaining ITC. Means one, if inward supply is exclusively used for taxable, if inward supply is exclusively for exempted, everything we need to take 50% in option 2. Then in case of option 2, 50% restriction shall not apply to inward supply from a distinct person. So whenever one bank is purchasing from another bank any services, so in that case 50% we don't have to reduce, full credit is available, and they have to exercise this option once in the beginning of the financial year, and that option exercised in the beginning of the financial year will be applicable throughout the financial year. Then we have some blocked credits. So blocked credits means ineligible ITC. Even though it is used for business purpose, we cannot take ITC. We have three block credits: motor vehicle block credit and construction related block credit and other blocked credits. So first one, motor vehicle related block credit. Motor vehicle is divided into three: for transportation of persons, vessels and aircrafts and others. Other motor vehicles always eligible for ITC, but for transportation of persons, capacity does not exceed 13 or capacity exceed 13. Capacity exceed 13 also always eligible for ITC, we don't have any restriction. But the restriction is only in capacity not exceeding 13. It is a block credit, but in 3 exceptional cases we can take ITC. What is that? If it is used for further supply, if it is used in the business of transportation of passengers, if it is used in driving schools, ITC can be taken. In all other cases, ITC not available. Same way, vessels and aircrafts also block credit, but we have 4 exceptions. First 3 exceptions are same, that is further supply, used in the business of transportation of passengers, driving schools, and extra use for transportation of goods, ITC available. All other case ITC not available. Then we have 4 services: repair and maintenance services, authorized service station services, then insurance services, and hiring, renting and leasing of motor vehicles. These 4 services in relation to motor vehicles, vessels and aircrafts. If the motor vehicle, vessel and aircraft is eligible for ITC, on these 4 services also ITC can be taken. If the motor vehicle is not eligible for ITC, on these 4 services ITC cannot be availed. Then some key points while determining the capacity. Here capacity does not exceed 13 is there. The 13 is including driver seat or excluding driver seat? Including the driver seat. What is the meaning of further supply? Because we have exception further supply. If it is for further supply, we can take ITC. Further supply means either sale of motor vehicles or renting of motor vehicles. I am buying and selling motor vehicles. Can I take ITC? Yes. I am buying the motor vehicle and giving it on renting. Can I take ITC? Yes, I can take. Further supply includes purchase and sale of motor vehicles or motor vehicles used in the business of renting, hiring or leasing. Then repairs, insurance and servicing of motor vehicles received by a general insurance company is always eligible for ITC. There is an insurance company which insures the motor vehicle, and when the motor vehicle met with an accident, the insurance company will make the payment. Can they take ITC on that repair expenses? Yes. Then hiring, renting and leasing of motor vehicles, generally it is a blocked credit. But if the motor vehicle is eligible for ITC, hiring, renting, leasing is eligible for ITC. But what if hiring, renting and leasing of motor vehicles is under a statutory obligation? They can take ITC. So for example, car purchased by a company for transporting its employees is a block credit. They cannot take ITC. So if they take the car on rent also, they cannot take ITC. But if the car they need to take on rent because government has mandated that they need to provide cab facility to the employees, then it will be under statutory obligation, they can take ITC. Ambulance and caravan are not motor vehicles for transportation of persons, means it will come under other motor vehicles, so ITC will be available. Then next we have construction related block credit. So that is any service received, works contract or any goods purchased in relation to construction of an immovable property, ITC not available. 3 inward supply, works contract, any service received or goods for construction of immovable property. For that 3 exceptions are there. What are the 3 exceptions? Suppose if these 3 are received by a builder for providing the output service of construction, can the builder take ITC? Yes. The restriction is only for the owner of the property. Also if this expenditure is charged to P&L, can they take ITC? Yes. Or suppose if this expenditure is for construction of a plant and machinery, can they take ITC? Yes. But plant and machinery excludes telecommunication towers and pipelines laid outside the factory gate. Now next one, other blocked credits. Other blocked credits we have membership of a club, health and fitness center. So it is a block credit. So a membership of a club, health and fitness center. What about membership of an association eligible for ITC? Membership of a club, health and fitness center is block credit. However, if it is under a statutory obligation, can they take ITC if it is incurred by employer to employee? Yes. Next one, travel benefits extended to employees on vacation. What if it is under a statutory obligation? They can take ITC. Then imports like inward supplies of non-resident taxable person. Non-resident taxable person is a person who come from outside India to India and is not having any physical place of business in India. Generally on his inward supplies he cannot take ITC. Exception is import of goods by NRTP. Then food and beverages, outdoor catering related to food. Beauty treatment, cosmetic and plastic surgery. So hair transplantation related to beauty. Then insurance, life insurance and health insurance. So these are block credits, but we have 3 exceptions. What are the block credits? Related to food, food and beverages, outdoor catering, related to beauty treatment, cosmetic surgery, plastic surgery, hair transplantation, related to insurance, health insurance and life insurance. But 3 exceptions are there. If inward supply, outward supply in the same category, they can take ITC. If inward supply is used as a part of outward supply, they can take ITC, or if it is under a statutory obligation, they can take ITC. Then balance, suppose if you are purchasing from a person opting for composition scheme, it's a block credit. If purchased goods are used for personal consumption, it is block credit. If purchased goods are lost, stolen, destroyed or written off, it is block credit. Or if the purchased goods are used as CSR obligation, corporate social responsibility obligation, that's an amendment now, so then also it is a blocked credit. So these are various block credits. Then we have section 18, input tax credit in special cases. 18.1 talks about availment of ITC on closing stock. In which case we can take ITC on closing stock total 4 situations. First situation, you are liable to get registered and you made application for registration within 30 days. Second, you voluntarily got registered. Third, you are a registered person migrated from composition scheme to normal scheme. 4, you are a registered person whose outward supply is exempted, now became taxable. In these 4 cases, you can take ITC on closing stock. In the first 2 cases, you can take ITC only on inputs held in stock, inputs in the form of WIP in stock, inputs in the form of FG in stock. But on capital goods, you cannot take. But in case of next 2 cases, inputs in stock, inputs in WIP in stock, inputs in FG in stock, even on capital goods you can take. And in the first 2 cases, matching is not required. In the second 2 cases, matching required. Means in the first 2 cases, it need not come in 2B. But in the second 2 cases, it should come in 2B. On which date? In case of first situation, you need to see the closing stock immediately before the date you are liable to get registered. In the second case, immediately before the date you got the registration certificate. In the third case, immediately before the date of migration from composition scheme to normal scheme. In the fourth case, immediately before the date of conversion from exempted supplies to taxable supplies. And what is the time limit? So all these goods, that is inputs and capital goods, should have been purchased within 1 year prior to the closing stock date. And ITC with respect to GST paid on inputs can be taken, but for capital goods we need to adjust. What is that adjustment we need to do? We need to reduce depreciation. What is the depreciation? 5% for every quarter or part thereof from the date of purchase till the date of conversion. So we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. And here for every quarter or part thereof means, for example, Jan 25th to April 6th. How many quarters? Jan 25th to April 6th. How many quarters? 1 quarter or 2 quarters? 2 quarters. Because Jan, Feb, March is 1 quarter. In April, even if few days are there, that should be taken as 1 quarter. Then they need to file an electronic declaration for taking ITC on closing stock, that is form GST ITC1, and that they should make within 30 days or such extended time by the commissioner from the date of eligibility of availment of ITC under 18.1. And this declaration should be certified by a practicing CRCMA if the claim of ITC exceeds how much? 2 lakh rupees. Then transfer of ITC. 18.3 talks about transfer of ITC when there is a transfer of business with specific provision for transfer of liabilities. Means all assets and liabilities should be transferred. Then whatever is the unutilized ITC in the electronic credit ledger of the transferor will be transferred to the electronic credit ledger of the transferee. For that, the transferor should file one form. What is that form? ITC 02. And they need to get a certificate from CACMA, and the CACMA should prove that the transfer of business is with specific provision for transfer of liabilities. In case of demerger, what will happen? In case of demerger, credit will be transferred to the new entities in the ratio of net assets, whether ITC is availed or not on that assets. For example, AB Limited is getting split into A Limited and B Limited. Now see the assets of A Limited and B Limited. In that ratio, the ITC will be transferred from AB Limited to A Limited and B Limited. And transfer or change in ownership also includes transfer or change in ownership on account of death of sole proprietor. Say there is a death of sole proprietor and his son has taken over the business. Now the son is required to get a new registration, and the son should cancel the registration of his father, and the unutilized ITC from the father can be transferred to the son. And when a single registration is getting converted into multiple registrations, so far within the state I have a single registration. Now for multiple places of business I have an option now whether to have a single registration or multiple registration. Say within Tamil Nadu I have 4 places of business. For these 4 places of business I have a single registration. Now I am getting into separate registration. Now so far whatever ITC that was there in the single registration will be transferred to the separate registration based on the assets ratio of the separate registration. For that the form will be ITC 2A, and this ITC 2A need not be certified by CRCMA. Then next we have 18 subsection 4 read with 29 subsection 5, reversal of ITC on closing stock. When there will be reversal of ITC on closing stock, opposite of 18.1C 1D. What is 18.1C 1D? Registered person from composition scheme to normal scheme. So opposite is what? Normal scheme to composition scheme. Then opposite of 18.1D, what is that? Exempted supplies to taxable. So opposite is what? Taxable to exempted. So normal scheme to composition scheme, taxable to exempted, or cancellation of registration. Whenever these 3 things happen, either whenever you are going into composition scheme, or your taxable supplies become exempted, or you are cancelling your registration, you need to reverse the ITC on closing stock. What is a closing stock? Input as such held in stock, input in the form of WIP, input in the form of FG, how much ever ITC you avail, that much you need to reverse. But in case of capital goods, how much you need to reverse in case of capital goods? While availing the ITC, total GST paid minus 5% for every quarter or part thereof. But while reversing, it is different. It is total ITC divided by 60 months into balance life. You don't follow quarterly model here. So it is total ITC availed divided by 60 months. Life of the capital goods is 60 months into whatever is the balance life. For example, you use the capital goods for 24 months and the balance life is 36 months. Out of 60 months, 24 minus if you do balance life is 36 months. So total ITC divided by 60 into balance 36 months, you need to reverse the ITC on capital goods. Then additional points, inputs on capital goods can be purchased anytime on which ITC is availed. If ITC not availed, then reversal not arise. But in case of 18.1, what we have seen, the inputs on capital goods should be purchased within 1 year prior. But in this case of reversal, we don't have to buy within 1 year, we can buy any time. If capital goods are purchased before 5 years and ITC availed, then reversal shall not arise. Why reversal shall not arise? Divided by 60, balance life is 0. So anything into 0 will be 0. 5 years over here, when 5 years is over, there is no balance life. 60 months means 5 years. So ITC availed divided by 60 months, balance life will be 0. So we don't have to reverse anything. If invoice pertaining to such capital goods is not available, then what we need to do? So we need to take the market value as on the closing stock date, and that market value should be certified by a CA or CMA. And all these details of ITC reverse should be reported in ITC 3. And if there is any balance in ITC, after reversal, the balance shall be lapsed. Suppose if there is a shortfall, for example, they need to reverse ITC on this closing stock 1,50,000, but they have only ITC 1 lakh. So from 1 lakh they will adjust 1,50,000, remaining 50,000 they will be paying. What if they have a ITC balance of 3 lakhs and 1,50,000 only they need to reverse? So they will adjust, remaining 1,50,000 will be lapsed. So that is this. If there is any balance in ITC after reversal, it will be lapsed. If there is any shortfall, that has to be paid. And the computation we need to make separately for CGST, SGST, IGST. Then last section, section 18, subsection 6. This is I am purchasing some capital goods. On purchase of that capital goods, I have availed the ITC and that capital goods are sold. Then what is the treatment? So I need to take ITC avail minus 5% for every quarter or part thereof from the date of purchase till the date of supply, or GST on sale value, whichever is higher. For example, I purchase the capital goods on say 1/10/2022 and this is purchase date. This is purchased date, and thereafter I sold the capital goods on 25/11/2023 sale date. Now what we need to do is that, what is the value of the purchased capital goods? 10 lakhs excluding GST at 18%. Now what is the sale value? The sale value is 6 lakhs excluding GST at 18%. Now what I need to do is that, first I need to take ITC avail. What is the ITC avail? 1,80,000 minus 5% for every quarter or part thereof. 1/10/2022 to 25/11/2023. 1/10 October. So October, November, December 1 quarter. So then in next year till November means 4 quarters. So therefore 5 quarters is there. 5 quarters into 5%, that will be 25%. I need to reduce. So 1,80,000 minus 25%. So do the calculation. 1,80,000 minus 25%, 1,35,000, or B, GST on sale value. What is the sale value? 6 lakhs into 18%, that will be 1,08,000, whichever is higher. Which is higher? So therefore 1,35,000 is the GST payable. This is how we need to do. So GST ITC avail minus 5% for every quarter or part thereof from the date of invoice till the date of supply, or GST payable on the value of the capital goods, whichever is higher. Okay. And in case of sale of molds and dies, then refractory bricks, jigs and fixtures as scrap. Okay. You don't have to follow this ARB, whichever is higher. Just you take GST payable on sale value. So this is an exception to 18.6. And first of all, when 18.6 is applicable, you purchase a capital goods on which ITC is available. Then only 18.6 will be applicable. What if ITC not available on purchase of capital goods? Then you will not follow this normal section 15. Section 15 says what? Take the sale value, on that you pay the GST. Then we have a circular on replacement of parts during warranty period. I just gave the summary related to this circular. So remember, reversal of ITC by manufacturer shall not arise if such replacement of part is without consideration. Sir, I am entering into contract and I sold one machinery to you. I need to replace the parts during warranty period. But for replacement of that parts, I will purchase a part. Can I take ITC on the part purchased? Yes. We don't have any restriction. We can take ITC on the parts purchased, even though I am not charging anything for the part replaced during warranty period. If any consideration is charged with respect to such replacement, suppose some money I am collecting, then it is supply under 71A and GST payable on such consideration, then also reversal of ITC shall not arise. Amount paid towards additional warranty taxable at the rate applicable to the product for which warranty is taken. So, suppose you am collecting some extra amount towards additional warranty. What is the rate of GST for this additional warranty? Whether the warranty is given, additional warranty is given at the time of sale of product or separately. If the additional warranty is given at the time of sale of product, then the rate applicable to the product should be taken. For example, you are buying a refrigerator and normal warranty 2 years. If you pay 5,000 extra, you will get an extra 3-year warranty. For this 5,000, what is the rate of GST? Whether the 5,000 is paid at the time of sale or separately. At the time of sale means take the rate applicable to refrigerator. Separately means you take the separate rate applicable to the warranty, that is general rate 18% should be taken. So, amount paid towards additional warranty taxable at the rate applicable for the product for which warranty is taken, provided amount paid at the time of purchase of product. If the additional warranty is taken separately, then it will be taxable at what rate? General rate 18%. Then we are moving on to exemptions in GST. So, in that exemptions, so just concentrate and listen. So, all these exemptions, to the extent possible, these exemptions under GST, you revise it multiple times, because one day before the exam also you need to revise and go, because in exam it will be very simple. By the time you see the question, automatically it will strike that it is exempted or not. Don't by heart, you cannot by heart also. So, you need to just understand these exemptions and revise as many times as you can. So, first we have agriculture related services. In agriculture related services, the first exemption is any service provided in relation to agriculture or agricultural produce. You are carrying out agriculture, or there is some agricultural produce. For that, if I provide any service like harvesting service or supply of farm labor or seed testing, soil testing, like that, any service in relation to agriculture or agricultural produce is exempted. What is the meaning of agriculture? Agriculture means cultivation of plants and rearing of all life forms of animals. So, for what purpose? For food, fiber, fuel, raw material or any other similar produce. Agricultural produce means what? Agricultural produce means the primary produce out of agriculture on which no processing is done, or some processing as is usually done by a cultivator, which does not alter its essential characteristics. So, paddy is an agricultural produce, but rice is not an agricultural produce. Why? Because rice is processed, and that process is not done by the cultivator. But in case of mango, raw mango is agricultural produce. Mango fruit is also agricultural produce, because that process is usually carried out by the cultivator, which does not alter its essential characteristics. So, in case of rice, as rice is not an agricultural produce, they have given separately the exemption for rice. In case of rice, only 4 activities are exempted. What are they? Loading, unloading, packing and storage. What about agricultural produce? These 4 activities, not only these 4 activities, all activities for agricultural produce is exempted. As rice is not agricultural produce, separately this is given. Then artificial insemination of livestock, through artificial process, through injections, when the reproduction happens, that injections, artificial insemination is exempted. Then service by way of storage or warehousing of cereals and pulses. What about storage of agricultural produce? That's already covered in the first point. So, it is only cereals and pulses and minor forest produce. The cereals and pulses and minor forest produce is not agricultural produce, even though its storage will be exempted. But warehousing of fruits and vegetables and other agricultural produce is covered in one above, that is any service in relation to agriculture or agricultural produce. So, these are the various exemptions. Then the second one is pension services. When it comes to pension services, remember only 2 pension schemes, the money collected is exempted. What are the 2 pension schemes? Atal Pension Yojana or any state government operated pension fund. Under these 2 pension schemes, the money collected will be exempted. Then banking and other financial services. So, transaction in money, the first exemption that you need to remember is interest on loans, advances, deposits is exempted. So, there is a transaction in money without consideration. It is neither goods nor services. If the transaction in money is for a consideration, then it will be treated as service. Suppose if that consideration is by way of interest or discount, it is exempted. If it is any other consideration, including interest on credit card, it will be taxable. So, whether interest on loan is taxable or exempted, exempted. Interest on FD, exempted. But interest on credit card will be taxable. Apart from that, other charges, NEFT, RTGS charges, debit card, credit card charges, minimum balance non-penalty charges, like that, all these charges will be taxable. Then second point, services provided by a banking company to basic savings deposit account holders under Pradhan Mantri Jan Dhan Yojana. So some accounts are opened, basic savings schemes, and for them if any service is provided, that is exempted. And next one, forex transactions, foreign exchange transactions which is taking place between banks, between forex dealers, between banks and forex dealers will be exempted. Whereas between bank or forex dealer and the customer, then it will be taxable under FCM. We don't have RCM. What is FCM, RCM? You don't have to remember, because already you know what are the list of services which are covered under RCM. Then services provided by acquiring bank. So there is an acquiring bank which do the settlement of transaction, card transaction. Example, whenever we go to a vendor, we make a card transaction. So the settlement bank will debit the money into our bank account and will be crediting into the vendor account. For doing this, they will collect a processing charges. If the transaction amount is up to 2000 rupees, there will be processing fees, but on that processing fee, GST will be exempted. So remember, GST on processing charges for a transaction up to 2000 is exempted. Then this point we already know. Services provided by a business facilitator, business correspondent, agent of business facilitator or agent of business correspondent in rural area. If they are working in rural area, that is exempted. And there is an intermediary of financial service located in a multi-service SEZ in India. They are providing service to their customers outside India and in relation to currency other than Indian rupees. Now whatever money that they receive will be exempted. So multi-service SEZ in India is in gift city. So if there is an intermediary in India who is providing service to their customers outside India, so that service is exempted. Then next one we have healthcare services. Healthcare service only two exemptions, that is healthcare service by a clinical establishment, authorized medical practitioner or paramedics including ambulance service is exempted, and healthcare service in relation to animals or birds is exempted, only these two. Now what is the meaning of healthcare service? Healthcare services means any service pre-treatment, before treatment, diagnosis, treatment, post-treatment care for what? Any disease, illness, injury, pregnancy in any recognized system of medicine, and it includes transportation and ambulance. So transportation and ambulance, whether as a part of healthcare or separately also, it will be exempted, but it should be transportation of patient only in the ambulance, and but does not include cosmetic surgery, plastic surgery and hair transplantation will not be treated as healthcare services. But if these three are carried out to restore the anatomy of body parts affected due to congenital defects, that is by birth or during the growth stage or injury or trauma, if they carry out plastic surgery, hair transplantation or cosmetic surgery, that will come under healthcare services. Healthcare services provided by a clinical establishment. Clinical establishment means hospitals, nursing homes, etc. will come under clinical establishment. Authorized medical practitioner means doctor, MBBS degree and registered with the medical council, and paramedics means nurse, lab technician, physiotherapist who assist the doctors. All these people's services will be exempted. Then healthcare service in relation to animals or birds means veterinary clinic services, but related to room charges. For room charges we have one special point. What is that? Suppose if a hospital is collecting room charges, if it is ICU charges, any ICU charges, that will be exempted irrespective of the amount. If it is other room charges, that other room charges we need to check how much is the charges per day. If the charges per day does not exceed 5000 rupees per day, then it will be exempted. If the charges exceeds 5000 per day, then entirely it will be taxable. Then CBIC circulars we have related to this, renting of room to inpatients in hospitals apart from that 5000 per day. Then food supplied to inpatients is part of healthcare service and it is exempted. What if the food is supplied to outpatients? Who is outpatient? Those who come for consulting. Who is inpatient? Those who are admitted. Food sold to outpatients will be taxable. We don't have any exemption. Service provided by consulting doctor to hospital. So one hospital, there will be one consulting doctor. That consulting doctor gets money from the hospital. That is exempted. Hospital collecting the money from the patient is also exempted. Then services by way of ART or IVF for infertility treatment. These are infertility treatments, that is also coming under health services, because infertility is an abnormality. To cure that abnormality, they will provide this IVF treatment, that is exempted. Then there is a rehab professional. This rehab professional is not an authorized medical practitioner but a psychology expert. They will be working in medical establishments or educational institutions. Let it be government or private, it is exempted. But if they are working in rehab centers, if it is a government or trust operated rehab center, then only it is exempted. If it is a private rehab center, then it will be taxable. Then next we have entry tickets. Following entry tickets are exempted irrespective of the ticket price. Some entry tickets are exempted. What are they? Entry to So total we have, so 3 things related to animals. What are the 3 things related to animals? National, that is tiger reserve, zoo and wildlife sanctuary. These 3 things related to animals. Then 3 places, that is museum, national park and entry to protected monuments. These 6 only you remember. So tiger reserve, wildlife sanctuary, zoo, and then museum, national park and entry to protected monuments. And these 2 are sporting events which was already held. And then 9 entry tickets are exempted if the ticket price does not exceed 500 rupees. So in that 4 related to performance, that is dance, music, concert and theatrical performance, and 4 events, circus, award function, then pageant and sporting event, and then 1 activity, that is planetarium, like 1 place, that is planetarium. These are the 9 entry tickets, that is dance, music, concert, theatrical performance. And theatrical performance includes drama, stage shows, etc. Even stand-up comedy show also will come under theatrical performance. Then 4 events, that is circus, award function, then pageant, that is beauty show, and then sporting event, and finally planetarium. These 9 entry tickets if the ticket price does not exceed 500 rupees per person. Then services by specified organizations. What are those specified organizations? ESIC, EPFO. ESIC full form Employee State Insurance Corporation. EPFO, Employee Provident Fund Organization, that is any amount collected by these people is exempted. ESIC, EPFO, NCCCD, National Center for Cold Chain Development, Foreign Diplomatic Mission in India, that is UN organization, embassies or consulates, CMPFO, Coal Mine Provident Fund Organization, and NPS Trust, National Pension System Trust. Any amount collected by these organizations is exempted. Then insurance services, already we have seen just now, National Pension System Trust, they will collect some money towards insurance premium, that is exempted. Any amount collected by NPS is exempted. Even if they collect by way of insurance also, it will be exempted. Then next, there is a group life insurance collected by Army, Navy, Air Force, Coastal Guard and Central Armed Police Forces. That insurance premium collected is exempted. Then services of general insurance business. So there is an insurance company providing general insurance services under government notified schemes. How do you know it is a government notified schemes? These are targeted to agriculture and farmers, below poverty line, women and infants. Then it is exempted. One more point, Nirmaya health insurance is also exempted. Then next one, there is a insurance company which is providing life insurance under government notified schemes. How do you know it is a government notified scheme? The scheme will be ending with the word Yojana. Then it is a government notified scheme. And micro life insurance having sum assured as 2 lakh rupees, maximum sum assured as 2 lakh rupees. So not all micro life insurance is exempted. First it should be a micro life insurance and the sum assured should not exceed 2 lakh rupees. Then insurance service provided to government, any insurance, life insurance or general insurance. Then apart from this, these 5 insurances, its reinsurance is also exempted. If the main insurance is exempted, its reinsurance is also exempted. Then services provided by business facilitator or correspondent in insurance rural area. So insurance agent working in rural area, the commission received by him is exempted. Then next one, charitable and religious service. There is a charitable trust under 12A or 12AB of Income Tax Act. They are providing charitable activities. What are those charitable activities? Public health, advancement of religion, spirituality, yoga. First one is public health. And second, advancement of spirituality, religion, yoga. All Baba Swamijis. Then educational programs to orphans, physically, mentally traumatized persons or prisoners or persons over 65 years residing in rural area. And fourth one, environmental preservation. So these 4 activities are only charitable activities. Any money collected by the charitable trust will be exempted for this. Then there is a old age home. That old age home is operated by central government, state government or charitable trust under 12A or 12AB to its residents against a consideration of 25,000 per month. So to old people, they should be providing old age home. Who is considered as old people? 60 years or more are old people. For that up to 25,000 rupees per month, then it is exempted. Beyond 25,000, entirely it will be taxable. Then services by a person by way of conduct of religious ceremony, like this purohit, priest, etc., money collected is exempted. Then there is a specified organization providing religious pilgrimage. First it should be a specified organization providing religious pilgrimage, then it is exempted. So what is considered as religious pilgrimage? Kailash, Manas Sarovar and Hajj Yatra. Then education services exempted. In that education services, first point, there is a education institution which is providing entrance examination collecting entrance exam fees. So educational institution collecting fees by way of conduct of entrance examination is exempted. And here that educational institution need not be an approved educational institution. Even there is a examination board which is just conducting the exams and giving the result. Even that examination board is also treated as education institution. So that is this. Central and state education boards are treated as education institution for the limited purpose of conducting the entrance exam. Therefore, NBE or National Testing Agency, which will conduct IIT, JEE and NEET exam, is also education institution, and the services provided by them is exempted. Then next one, amount paid to training providers under Deen Dayal Upadhyaya Gramina Kaushal Yojana, wherein under this DDUGKY scheme, volunteers will go to the rural area and provide the training, for which they will get some money from government, that is exempted. Any service provided by National Skill Development Corporation or Sector Skill Council or assessment agent or training partner, so any course offered by them, they will provide lot of skill development courses, that skill courses will be exempted. Then service provided by education institution, this is by education institution to its students, faculty and staff, any service, any service. What is an education institution? Category 1 up to 12th standard, category 2, so education as a part of curriculum for obtaining a qualification recognized by law, and category 3 approved occasional education. Then suppose if they are collecting money as application fee or prospecting fee from the students, prospective students, or from the school leaving students, they are collecting transfer certificate fee or migration certificate fee, even that is also exempted. Yes, application fee for entrance or fee charged for issuing eligibility certificate or fee collected for issuing migration certificate to ex-students is also exempted. So by any name, whether it is from the students or prospective students or from the ex-students, if they collect, that will be exempted. Then services provided to education institution. Don't get confused, usually in exam we get confused between by and to. So by means education institution is the supplier, to means education institution is the recipient. So one person is providing services to the education institution. In that case, transportation of students, faculty and staff, catering, security and housekeeping. Remember, this security and housekeeping should be within premises. This security and housekeeping should be within premises. Within premises. So these 4 services provided to category 1 institution is only exempted. Transportation, then security and housekeeping within premises, catering services. Whereas admission to or conduct of examination, all 3 categories it will be exempted. Category 1, category 2, category 3. Whereas online periodicals and journals, only for category 2 it is exempted. So these are the exemptions that we have with respect to services provided to education institution. And next one, suppose if there is an Anganwadi school will come under category 1 education institution. So any catering service provided to Anganwadi school will be exempted, because catering service provided to category 1 institution is exempted. Then training in recreational activities relating to arts and culture. So arts and culture means like Bharatanatyam or dance or music, etc. It should be only by an individual, then only it will be exempted. Whereas training in sports should be by a trust, then only it will be exempted. Then next, services by assessment bodies under skill development initiative. Under skill development initiative, some assessment bodies are created by the government for the purpose of reviewing the curriculum, and they will be given some money. The money collected by these assessment bodies is exempted. Then services provided by government. So with respect to services provided by government, only 4 activities of government is covered under supply. What are they? Department of Post, transportation of goods or passengers, so airport or port services, and services to business entities. All other activities of the government is excluded from supply. In case of Department of Post, we have 3 exemptions. All other cases it will be taxable. What are the 3 exemptions? Postcard, inland letter or envelope weighing less than 10 grams. All other cases taxable. Transportation of goods or passengers, we have a separate charge. Airport or port service always taxable. For services provided to business entities, already we discussed in liability to pay GST, 14 specific exemptions and 2 general exemptions. Then services provided to government. We are discussing services provided to government. So here only government, not government authority or government entity, it is only government. So there is a government, that is central government, state government or local authority. There is government. Government is required to do some activity as per the constitution. Now they are outsourcing that activities to us. Now when we provide services to the government, if it is a pure labor service, it is exempted. If it is a composite supply of goods and services, then also it will be exempted if the value of goods does not exceed 25% of the total, then it is exempted. For example, government is required to do the solid waste management, cleaning, and for which they outsourced it to me. We are providing solid waste management service, it's a pure service, it is exempted. Suppose if it is laying down road, in the road if the value of goods exceeds 25% of the total, it will be taxable. If the value does not exceed 25% of the, that is if the value of goods does not exceed 25% of the total, it will be exempted. But remember, first condition you need to see is that that is an activity which the government is required to do as per constitution. They are outsourcing it to another person. If it is a pure service, it is exempted. If it is a composite supply of goods and service, check the value of goods. If the value of goods out of total is less than or equals to 25%, then also exempted. Then government includes public works department. Then composite supply by way of milling of wheat into wheat flour. So government is procuring wheat flour and for distribution it in the public distribution system, ration shops. Now in the wheat flour, what is the value of goods? Goods is wheat. Wheat is only high value, so therefore it will be coming under exemption or not? No exemption, because the value of goods involved is more than 25%. Then next one, this is an amendment, services provided to government authority. The first point what we have seen is not applicable to government authority or government entity, it is only to government. Whereas the second point is services to government authority. What services provided to government authority is exempted? Only these 5 activities: water supply, public health, sanitation conservancy, solid waste management. Solid waste management means cleaning activity. Sanitation conservancy means pesticides, gases, etc. Slum improvement and upgradation. Only these 5 activities provided to government authorities exempted: water supply, public health, sanitation conservancy, solid waste management, slum improvement and upgradation. Then any training program for which greater than or equals to 75% of the total expenditure is borne by central government, state government or local union territory is exempted. Means there is a training program for which 75% or more expenditure is paid by government and remaining amount is paid by the student. Now the entire training program is exempted. Then suppose if it is scholarship for students with disabilities where the total expenditure is borne by government, then it will be exempted. Then we have a CBIC circular, services procured by Indian Army which does not perform any functions listed in Article 243G or H of the Constitution are not covered under above exemption. So because basically Indian Army is not required to do any activities as per the Constitution. Then look into the next one, renting. Renting services, in case of renting of movable property, already we have seen 4 exemptions. So renting of motor vehicle that can carry more than 12 passengers to a state road transport undertaking, renting of motor vehicle that can carry more than 12 passengers, electric motor vehicle to a local authority, renting of motor vehicle to a GTA, renting of bus to a person who provides transportation service to education institution up to 12th standard or equivalent, category 2. So these 4 exempted. For movable property, building already we know the exemption. What is the exemption for residential property? Residential property given to an unregistered person is exempted. Residential property to a registered individual for his family stay is also exempted. Then land. So renting of land. Upfront charges in case of long-term lease. So we are giving the land on lease. So that lease is for a period 30 years or more. 30 years or more. And for which we are collecting some upfront charges. So this land is industrial land or development of infrastructure for finance business by state government industrial development corporation. The charges collected is exempted. Then next one, second renting is renting of precincts of a religious place meant for general public. So there is a place meant for general public, precincts of the place like a temple, etc. that is registered as a trust. They are giving it for accommodation. So how much the charges should be per day so that it is exempted? Less than 1000 rupees per day. Suppose if they are giving for marriage or any hall, etc., then how much the charges should be per day? Less than 10,000 per day, not less than or equals to, less than. Suppose if it is for shop, how much it should be? Less than 10,000 per month. So less than 10,000 rupees per day, less than 10,000 per day, less than 10,000 per month. Then it is exempted. Then next, sports services. In case of sports services, already we have seen sponsorship of a recognized sporting event is exempted. What is a recognized sports body? You can see below. Recognized sports body means National Sports Federation, Inter-University Sports Board, Paralympic Committee, Indian Olympic Association, Central Civil Services, Culture and Sports Board, and Panchayat Sports Board. These are the 6 sports bodies which are recognized sports bodies, and any sponsorship money collected by them will be exempted. Other cases it will be taxable, and we need to see recipient body corporate or firm, it is RCM, otherwise it will be FCM. For example, BCCI is a recognized sports body. They collect sponsorship money from a body corporate or firm or sole proprietor, that will be exempted. Whereas IPL is not a recognized sports body. They are collecting money from a body corporate or firm, it will be taxable under RCM, body corporate or firm will pay. If they collect money from a sole proprietor, it will be covered under FCM. So liability to pay GST is on the supplier. Then services provided by individual as a player, referee, umpire, coach or team manager to recognize sports body is exempted. Who are they? Player, referee, umpire, coach, team manager to recognize sports body exempted. Apart from these people, if others are providing services, that will be taxable, like curators, commentators, etc., that will be taxable. That too, they should provide service only to a recognized sports body. What if they provide service to unrecognized sports body? That will always be taxable. Then service provided by one recognized sports body to another recognized sports body is also exempted. There is one recognized sports body which is providing services to another recognized sports body. For example, BCCI providing services to Indian Hockey Federation, that will be exempted. Then next, services by unincorporated body or non-profit entity. There is an unincorporated body or a non-profit entity providing services to its members and they are collecting some money. Suppose if it is a trade union, association of traders, exempted. Suppose if that service itself is exempted, no need to pay GST. Suppose if it is a resident welfare association, how much is exempted? Per month, if they are collecting up to 7,500 rupees per member, it is exempted. Suppose if it is an agricultural, industrial, labor organization or association, entirely exempted. So apart from these 4, any other association, if they are collecting up to 1,000 rupees per annum per member, not per month, per annum, then it is exempted. Beyond this 1,000 rupees means entirely taxable. Then in this regard, there is one circular. So usually electricity charges recovered by the Resident Welfare Association from its owners. Suppose if they are recovering on an actual basis, means electricity bill is in the name of the member and that bill is paid by the association and recovered from the member, it will not be included in the value. Suppose if the bill is in the name of the association and the association is recovering it from the members on actual basis, then also it will not form value. Suppose if they are apportioning it between the members and because of it they get some profit also, then it will be included in the value entirely and they need to pay GST on that. Means while counting the 7,500, we need to add this. Okay. Then suppose if it exceeds 7,500 per month per member, entirely it will be taxable. Then transportation of passengers. For transportation of passengers, first for railways, you just remember exemption. So remaining and all will be taxable. So transportation of passengers, railways, 2 exemptions. What are the 2 exemptions for railways? Other than AC or first class is exempted. Other than AC or first class is exempted, means general ticket, sleeper ticket, etc. exempted. Then metro, mono, tramway will be exempted. Remaining and all will be taxable. Then for airways, airways also 2 exemption. Starting point or ending point is in northeastern states or Bagdogra in West Bengal in economy class. Or consideration received for viability gap funding up to 3 years from the date of commencement of operations, these 2. Then in case of waterways, again 2 exemptions. Inland waterways fully exempted. Coastal waters means seaways between place in India, only specified goods. What are the specified goods? For GTA, what are the specified goods? The same specified goods. So but here we are talking about passengers. So passengers, everything will be exempted. Coastal waters within India other than for tourism purpose. So inland waters passengers fully exempted, coastal waters other than tourism purpose, but it should be within India. Then for roadways we have 3 exemptions. Non-AC contract carriage, non-AC contract carriage other than tourism or hire, non-AC stage carriage, metered cab or auto rickshaw, these 3 are exempted. So this simple chart you need to remember for exemptions, and all other cases transportation of passengers will be taxable. Same way transportation of goods. And what are northeastern states I have given here. And one more point, generally in case of roadways, non-AC stage carriage, non-AC contract carriage other than tourism or hire or metered cab or auto rickshaw is exempted. Suppose if it is through e-commerce operator, then it will be taxable. Generally auto is exempted, but if it is Ola auto or Uber auto, it will be taxable. Then transportation of goods. For transportation of goods by railways, only one exemption, that is specified goods. And airways outside India to India is only exempted. Then waterways, two exemptions, inland waters, coastal waters, specified goods. And roadways other than GTR courier agency, everything is exempted. So small trucks, if they transport goods, that will be exempted other than GTA or courier agency. Now this specified goods point comes in three places. Transportation of specified goods is exempted in three places. One is railways, another is coastal waters between India, and GTA. What are those specified goods? Same list of specified goods, that is agricultural produce, food grains including flours, pulses, milk and salt, organic manure, newspapers and magazines, defense and military equipments, relief materials for natural and man-made disasters. Then when it comes to GTA, so we already saw these three exemptions that we have, and GTA has two options. Either they can go for FCM or RCM. In case of FCM, again GST 12% with ITC, 5% without ITC. RCM always 5%. They need to select this option in the financial year, and they need to decide it between 1st January to 31st March of the previous year. And amount collected for transportation of passengers in private ferry in coastal waters. Generally, transportation of passengers in coastal waters other than tourism purpose is exempted. So should it be by government or private also? Either government or private, it will be the same. Then next one, you see, there is a owner of the vehicle who is giving a non-AC vehicle to a person requiring the vehicle for transportation. So like a renting, okay. But how it is rented? Operated on a predetermined route based on a predetermined schedule. Predetermined route based on a predetermined schedule means what? That is, so you have to pick the person here, here, here and drop them like that. Predetermined schedule, predetermined route. Then it will be treated as contract carriage other than tourism or hire. Non-AC contract carriage is exempted. Then suppose if the vehicle is at the disposal of the recipient, you are taking the vehicle, it is with you only for a particular voyage or journey, 3 days, 4 days trip, then it will be called as contract carriage for hire or tourism, it will be taxable. Suppose if it is for a period of time, 1 month, 2 months, 6 months like that, if you are taking it on rental basis, then it will be called as renting of motor vehicle and it will be taxable. In case of renting of motor vehicle, we have FCM as well as RCM. Contract carriage we have only FCM, but renting of motor vehicle we have FCM, RCM. Three conditions RCM. Supplier other than body corporate, recipient body corporate, rate of GST 5% RCM, all other cases it will be FCM. Then construction services. In case of construction services, construction of an individual house irrespective of the floor area or cost, not as a part of complex is exempted, but remember only construction of individual house is exempted. If it is repairs of individual house, it will be taxable. And construction or repair or renovation, construction, repair, renovation or alteration of project. Which project? Housing for all mission or Pradhan Mantri Awas Yojana. But for individual house only construction is exempted. For this project both construction, repair and renovation is exempted. Then whenever we are charging some amount towards the flat, so whenever we are selling the flat, we not only sell the flat but we also sell the land below that flat. So in that case we don't have to pay GST on the full value. 1/3 of the flat value will be excluded towards UDS, undivided share of land. 1/3 of the gross value of flat is exempted towards land or undivided share of land when gross value includes value of land. Then this TDR, FSI and long term lease, we have seen the exemption. What is that exemption? Value of inward supply into 18%, floor area of the residential units booked before completion certificate divided by total floor area. For example, we already discussed this example. For example, the value of inward supply of TDR FSI is 10 lakhs, excluding GST 1,80,000. So 1,80,000. What is the formula? 1,80,000 into numerator, residential units, carpet area of residential units booked before completion certificate, 28,000 square feet, divided by total carpet area, 50,000 square feet. So how much is exempted? 1,80,000 into what by what? 28 divided by 50 will be exempted. So remaining they need to pay GST under RCM. Then, so previously annuity, that is charges, toll charges payable by way of annuity was exempted. Now toll charges payable by way of annuity will be taxable. These advocate services already we have discussed. What are the exemptions? And next one, exemptions under IGST Act. See this, first point, sir, if supplier of service and recipient of service both are outside India, all activities will be exempted, okay. So but this point you omit now. This is not relevant. This is not relevant. All services are exempted if both supplier and recipient of service is located outside India. Previously, transportation of goods by vessel outside India to India, like that we had one point, but that is also not relevant now. All service exempted if supplier of service is outside India and recipient of service is located outside India. Then there is an Indian tour operator who is providing tour operator service to a foreign tourist wholly outside India, that will be exempted. What if the tour is partly in India, partly outside India? Then proportionately it is exempted. How much it is exempted? Total consideration into number of days the tour conducted outside India divided by total number of days, or total consideration into 50%, whichever is lower is exempted. While taking the number of days, if it is more than or equals to 12 hours, you take it as full day. If it is less than 12 hours, you take it as half day. Then fourth point, there is an intermediary, that is a broker, who is connecting a seller outside India, buyer outside India. This broker gets a brokerage, that brokerage is exempted. So intermediary getting money for transaction made to seller outside India and buyer outside India. Then next one, miscellaneous exempted services. I am transferring the business as a going concern, slum sale, etc., for which I get some consideration, that is exempted. Supply of service associated with transit cargo to Nepal and Bhutan. I am taking a cargo to Nepal and Bhutan. For the transportation charges or loading charges, unloading charges, everything will be exempted. Service by way of collecting or providing news by independent journalists, Press Trust of India or United News of India is exempted. Then services of public libraries. So public libraries will be giving lending, for which they get some lending fees, that is exempted. And there is an organizer who is organizing a business exhibition where the business exhibition is held outside India. So that is exempted. What if the business exhibition is in India? Then it will be taxable. Then service by way of public conveniences like public toilet. For the public toilet, whatever money that is collected is exempted. Then toll charges. Usually for using highways, we need to pay toll charges, that will be exempted. And even overloading charges. So sometimes when we carry the huge goods, overloading charges or higher toll charges for not having FASTag is also exempted. Then there is a performance artist. That performance artist is performing before the audience. So in music, dance or theatre, in folk or classical genre, and if they are getting consideration up to 1,50,000 per performance, then it will be exempted, but the exemption is not available if they are acting as a brand ambassador. Then this point we have seen, training in arts or culture should be only by an individual, sport should be by a trust. Then satellite launch services provided by any person. Previously this Indian Space Research Organization, Antrix Corporation was there, but by any person. So that is an amendment. Satellite launch services provided by any person will be exempted. Then liquidated damages, what is the treatment? Liquidated damages means consideration for tolerating an act. So when a contract got breached, the person who breaches the contract will pay to the other person some amount called as damages. So that is called as liquidated damages. See this. When a contract has been broken, the party which suffers such breach is entitled to receive from the other party compensation for any loss or damage caused to him. So that particular amount, if it is a mere compensation, so to compensate the loss or damage or injury, that will not be treated as consideration. You just connect that here. That will not be treated as consideration and not chargeable. Suppose if it is specified in the contract, but the charges are in the nature of penalizing a person to discourage such act. Sir, suppose if it is mere compensation not arising in the contract, it is not consideration. Even if it is specified in the contract, but the objective is not to earn money, but to discourage a person from doing it, like traffic fine and penalty, check dishonor charges, etc. So example, traffic fines, then check dishonor charges, these are all like not treated as consideration and not taxable. Any other amount will be treated as consideration, and taxability depends upon principal supply. For example, ticket cancellation charges, railway ticket cancellation charges. If it is a AC ticket, as AC ticket is taxable, the AC ticket cancellation charges also taxable. Whereas in case of sleeper class ticket is exempted. So cancellation charges for sleeper class ticket is also exempted. That is this. So this is about exemptions under GST. So look into the next area, that is composition scheme. Composition scheme is given under section 10 of CGST Act. We have two types of composition scheme. One is composition scheme under section 10 subsection 1 and composition scheme under section 10 subsection 2A. To whom composition scheme under 10(1) is applicable? To a manufacturer or trader or supplier of food service provider. Whereas to whom 10(2)A will be applicable? Manufacturer, trader or any service provider. Now 10(1) is also applicable to any other service provider, but with a limit. What is that limit? Up to 10% of turnover during previous year or 5 lakhs, whichever is higher. However, they can provide, that is being a manufacturer, trader and supplier of food service provider. So they can provide service, any service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. But this restriction is not there for 10(2)A. 10(2)A, manufacturer, trader, service provider, for any amount they can go for 10(2)A. But when 10(1) will be applicable, if their aggregate turnover during the previous year does not exceed 1.5 crores, in case of 8 states, it will be 75 lakhs. What are those 8 states? MMTN, USAM. Manipur, Mizoram, Tripura, Nagaland, Uttarakhand, Sikkim, Arunachal Pradesh and Meghalaya. Then next, when composition scheme under 10(2)A will be applicable, if aggregate turnover during previous year does not exceed 50 lakhs, then 10(2)A will be applicable. What is the benefit of reduced rates? So if they are under composition scheme 10(1), so being a manufacturer, the rate of GST is 1% on what turnover? Total turnover. If they are a trader, 1% on taxable turnover. If they are food supplier, then 5% on total turnover. So say this, 1% on total turnover in case of manufacturer, 5% on total turnover in case of food service provider, 1% on taxable turnover in case of trader or services up to the 10% limit. Okay. Whereas under 10(2)A, the rate will be always 6% on total turnover. Current year limit for reduced rates. So previous year, if it does not exceed 1.5 crores or 75 lakhs, current year they can go for composition scheme. Current year also they should ensure that they are not crossing 1.5 crores or 75 lakhs. In case of 10(2)A, 50 lakhs. Then difference in conditions. So S9 RCM, they cannot go for composition scheme. What is this S9 RCM? S for service provider other than supplier of food or beyond 10% limit, they cannot go for composition scheme 10(1). N for non-resident taxable person cannot go. Then I for a person who is making interstate supply of goods or services cannot go for composition scheme. Another N, non-taxable supplies. E for supply of services through e-commerce operator. Sir, can supplier of goods through e-commerce operator go for composition scheme? Yes. But supplier of services through e-commerce operator not possible. That's an amendment. Then R, RCM under 9(4), not paid on stock. So then C for casual taxable person, M for manufacturer of notified goods. What are those notified goods? Ice cream, edible ice, pan masala, tobacco and tobacco products, aerated waters, bricks and roofing tiles. Then they cannot go for composition scheme. Can a trader of these goods go for composition scheme? Yes. So these are the restrictions for 10(1). Whether we need to check this for previous year or current year? Current year. Current year only we should not make interstate supplies. Can previous year we can make interstate supplies? Yes. Current year we should not make interstate supplies, non-taxable supplies, etc. Now, in case of 10(2)A, it is 9 RCM. That is yes, because any service provider can go for 10(2)A. So 9 RCM. This is the difference in the condition. Then next, disadvantage of composition scheme. Person opting for composition scheme cannot avail ITC on their inward supplies, and even they cannot charge composite tax to the customers. And what is the document that they will be giving? Tax invoice or bill of supply? Bill of supply. Then next one, what is the meaning of aggregate turnover? So generally what should be taken as the aggregate turnover? Normal meaning of aggregate turnover with some adjustments. Generally aggregate turnover is taxable supply, exempted supply, non-taxable supply, zero rated supply. It excludes inward supply under RCM, and even it excludes CGST, SGST, etc. Now two more adjustments you remember for aggregate turnover. Interest on loans, advances, deposits will not be taken, and even pre-registration turnover. Before you are getting registered, you have some turnover that will be included in the aggregate turnover. Then interest income will not be considered for calculating aggregate turnover as well as turnover in a state. Then person opting for composition scheme can provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. And again, while computing this 10%, also interest on loans, advances, deposits should not be taken. And what is the rate applicable for this 10% services? The rate applicable to trader. What is the rate applicable to the trader? 1% of taxable turnover. And other procedural aspects, suppose if the person is already registered, they need to apply in CMP2 before commencement of the financial year. Suppose if they are already registered. Suppose if they are not already registered, now only they are getting registered, at the time of registration itself they can come into the composition scheme. But if they are already registered, they need to wait till beginning of the financial year, and then only they can come into composition scheme by applying in CMP2. But not already registered, now only they are getting registered. So then apply in GST REG1 and select composition scheme anytime during the financial year. And they need to display composition taxable person in every notice signboard displayed at the principal place of business and every additional place of business. And what is the return that they need to file? They need to file a quarterly return. In what form? CMP 8. By when? By 18th of the month following every quarter. And they need to pay GST. GST payable on advances, because we have seen, so composition scheme person is required to pay GST based on time of supply, due date of invoice, actual date of invoice, or date of payment, whichever is earlier. So they need to pay GST on advances. So what they need to do? First they need to see what is the value of bill of supply during current quarter, plus advances received in the current quarter for which supplies will be made in future, minus advances already received in the past quarter for which bills are raised in the current quarter, because that advance already taxed, that should be removed. So value as per bill of supply during current quarter plus advances received during current quarter pertaining to next quarter minus advances received during the previous quarter pertaining to current quarter. And they need to file an annual return in GSTR4 by 30th April of the succeeding financial year. Then the validity of the composition scheme, if all conditions are satisfied, the option remain valid. If the conditions are not satisfied, they need to pay tax as a normal taxpayer, issue a tax invoice for taxable supply, and they need to exit from the scheme. What is the time limit for exit from the scheme? Within 7 days, they need to exit from the scheme when the conditions are breached, and they need to file one form, that is CMP4. Voluntarily also, whenever they want to exit from the scheme, they can exit by filing CMP4. And proper officer, suppose if the taxpayer is not eligible or contravened the rules but continued in the composition scheme, officer will give a notice in CMP5. They need to give reply to the notice within CMP6 within 15 days. Thereafter, within 30 days, either officer will allow them to continue in the composition scheme or deny the composition scheme. And next, these are the various forms. Whenever they enter into composition scheme, so then they need to reverse the ITC on closing stock. So therefore, ITC 3. These two will be one combo. And whenever they exit from the composition scheme, they go for regular scheme, which means they can avail ITC on closing stock. So ITC 1 needs to be filed. And CMP 5, 6, 7, 8. Then denial of composition scheme will be prospective or retrospective, either prospective or retrospective, but not before the date of breach. For example, one date we have breached the conditions. Thereafter, we continued in the composition scheme. Now, officer is denying the composition scheme. Either it can be prospective with effect from today, or it can be retrospective, but not before the date we committed the breach. Then, meaning of various turnovers. In composition scheme, we will come across these 3 turnovers. Aggregate turnover for determining eligibility for composition scheme, or turnover for determining 10% limit of services, and turnover for payment of GST under composition scheme. Aggregate turnover for what? If the previous year aggregate turnover does not exceed the limit, we can go for composition scheme for deciding the eligibility. Then turnover for computing 10% limit, we can provide service up to 10% of turnover during previous year or 5 lakhs, whichever is higher. Then turnover for payment of GST under composition scheme, current year. So aggregate turnover previous year, turnover for 10% previous year, but turnover for payment of GST under composition scheme current year. Now, what will be taken as the aggregate turnover? It should be computed on all India basis, but turnover will never be all India. Turnover will be state wise. That is the difference. So highlight this. So aggregate turnover is on all India basis, but this turnover will be state wise. And so for payment of GST, we need to take current year turnover. Then what should be taken in aggregate turnover? So taxable supplies will be coming exempted. Interest on loans advances will not be taken. Non-taxable supplies will be coming, exports will come, interstate supply will come, inward supply and RCM will not come, taxes will be excluded, pre-registration turnover included. Now, from aggregate turnover to turnover for determining 10% limit, what is the difference? So the difference is that, so aggregate turnover is on all India basis, but turnover for computing 10% limit is state wise, rest of the thing is same, ditto, copy paste. then what is the difference between turnover for computing 10% limit and turnover for payment of GST under composition scheme? That is for previous year and this is for current year. And next one, so non-taxable supplies should not be there, interstate supplies and exports should not be there. If they are having, then they are disqualified from composition scheme. And one more difference is that pre-registration turnover should be excluded, because before registration they don't have liability, so only when they register their liability shall arise. So pre-registration turnover should be excluded. What is the meaning of not applicable? Not applicable means these supplies cannot be made during the current year, and if made, the person is disqualified from the composition scheme. So this is about composition scheme, and we'll take a break. So and lunch break, and thereafter we will continue with the remaining aspects. So we'll meet at 2:15. Okay. And after completion of this, we will do the MCQs. One student asked me RTP. We will do RTP if the time permits. Mostly we will try to do, because we are left with only registration, payment process, returns, these topics only. We will quickly complete that, and we will do RTP also in today's session itself. Okay. Thank you. Okay, so we'll start with registration. So far we have seen composition scheme up to composition scheme. The next area is registration. In this registration, total we have 9 sections. Section 22 talks about when a person is required to get registered. Section 23, exemption from registration. Section 24, compulsory registration. So when a person is required to get registered as per 22, whenever their aggregate turnover exceed threshold limit. What is the threshold limit? Suppose if you are doing business in MMTN, Manipur, Mizoram, Tripura, Nagaland, any state, so then the applicable limit will be 10 lakhs for both goods and services. Suppose if you are doing business in U-Stamp, that is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, then the limit will be 20 lakhs for both goods and services. For all other remaining states, if you are exclusively engaged in supply of goods, it will be 40 lakhs, otherwise the limit will be 20 lakhs. So aggregate turnover we need to compute on an all India basis and not state wise, and the limit of 40 lakhs is applicable only in case of exclusive supply of goods. If a person is supplying both goods and services or services, then the limit of 20 lakhs or 10 lakhs is only applicable. Suppose if you are doing business from multiple states, then what you should remember? So whether one of the state is a special category state and taxable supplies are made from that state, so then the limit will be 10 lakhs. Suppose if none of the states is in MMTN U-Stamp and if you are exclusively engaged in supply of goods, then it will be 40 lakhs. Suppose if you are doing business in U-Stamp, then the limit will be 20 lakhs only. So therefore, so you need to remember total 6 points. First is if you are doing business in a single state and if that single state is in MMTN, the applicable limit will be 10 lakhs. If that single state is in U-Stamp, the applicable limit will be 20 lakhs. Suppose if it is other state, exclusive supply of goods 40 lakhs, other cases it will be 20 lakhs. Then in case you are doing business in multiple states, one of the state is in MMTN and taxable supplies are made from that state, then it will be 10 lakhs. None of the state is in MMTN U-Stamp and you are exclusively engaged in supply of goods 40 lakhs, in the remaining cases balancing figure it will be 20 lakhs. So the limit of 40 lakhs is not applicable in the following cases: if a person is voluntarily getting registered, or those who are compulsorily required to get registered under 24, or person making supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles. This list of goods we have even in composition scheme, but the difference from there to here is that their manufacturer of notified goods cannot opt for composition scheme. Here supplier of these goods, supplier can be manufacturer or trader, will not get 40 lakhs limit. Also there we have aerated waters, here we don't have that aerated waters, and the remaining goods will be the same. Then, so as and when aggregate turnover exceeds the threshold limit in a financial year, so as discussed above, the person is liable to get registered as per 22 subsection 1. As per 23, a person is exempted from registration if they are exclusively engaged in making exempted supplies, including non-taxable supplies, means they are making only exempted supplies or non-taxable supplies, or they are an agriculturist, they are engaged in supply out of cultivation of land. So means they will not be doing anything, whatever cultivation of land they get, if they are selling only that, they are not required to get registered. If they are exclusively engaged in RCM supplies, for example, advocates outward supply is fully covered under RCM, so advocate is not required to get registered. So then if a person is making both exempted and taxable supply, then the above exemption is not available. Then next one, person who makes supply of goods through e-commerce operator is generally compulsorily required to get registered, but we have seen some relaxation. So that is an amendment. What is that? So if a person is making only intrastate supply, he should not make interstate supply. So a person making supply of goods through e-commerce operator whose aggregate turnover does not exceed threshold limit is not required to get registered. However, they should ensure the following conditions. What is that? They should not make interstate supplies, they should not make supplies through e-commerce operator in the other state, and they should have a valid permanent account number, state, and on portal they need to get a validation and obtain a unique enrollment number. So no supply shall be made through ECO unless the person is granted unique enrollment number. Condition number 1, they should not make interstate supplies. Condition number 2, they should not make supplies in the other state through e-commerce operator. They should have a valid permanent account number and they should obtain a unique enrollment number from the portal, and that unique enrollment number should be updated with the e-commerce operator, and once their aggregate turnover exceeds threshold limit, they will get a normal registration and this enrollment number cease to be invalid. Then next, compulsory registration we have in 22 as well as in 24, but the difference in compulsory registration 22 is that so they can make application for cancellation if their aggregate turnover falls below threshold limit, but in case of 24, if a person is covered under compulsory registration, they can never make application for cancellation of registration. Irrespective of threshold limit, they are liable to get registered. Now what are the three cases of compulsory registration in 22? If they are already registered under the earlier indirect tax regime, they should also be registered under GST, transfer of business, or transfer pursuant to scheme of amalgamation, merger or demerger. But in these three cases, they need to compulsorily register, but if their aggregate turnover falls below threshold limit, they can make application for cancellation of registration. Whereas section 24 compulsory registration, I creations, I for interstate supply of goods, not services, only interstate supply of goods other than handicrafts. C for casual taxable person other than handicrafts. Casual taxable person means a person who is coming from other state to this state and is not having any physical place of business in this state. And then recipient who is liable to pay GST under RCM is also compulsorily required to get registered. Then e-commerce operator liable to pay GST under 9(5), that is the head, housekeeping service, accommodation service, transportation of passengers and eating food from restaurant, and e-commerce operator liable to deduct TCS. You can simply remember e-commerce operator is compulsorily required to get registered. Then A, agent making supply on behalf of the principal. So then T for TDS deductor, I for input service distributor, that is the head office which takes the credit and distributes the credit to the branch offices, that head office should get registered compulsorily. O for OIDR supplier, so located outside India and making supply to non-taxable online recipient in India, that supplier is liable to pay GST, so they need to compulsorily get registered. And N for non-resident taxable person who come from outside India to India, not having any physical place of business in India. Then yes, supplier of goods through e-commerce operator, any supplier who is making supply of goods through e-commerce operator other than those making only intrastate supplies. So these people are compulsorily required to get registered. Now, if a person is exempted from registration, for example, I am making outward supplies and it is covered under RCM, so I am exempted from registration. I have some inward supply on which I need to pay GST under RCM. Am I compulsorily required to get registered? No. Once a person is exempted from registration, they are exempted from registration even though they are covered under 24, which means section 23 overrides section 22 as well as section 24. Same way, section 24 overrides section 22. Even though my aggregate turnover does not exceed threshold limit, if I am covered under 24, I am compulsorily required to get registered. So the priority is what? First you need to see 23. If you are exempted from registration, you are exempted from registration. That's it. Then don't refer anything else. If you are not exempted from registration, then you need to check 24 compulsory registration. If you are not coming there also, then only other cases. If your aggregate turnover exceeds threshold limit, you need to register. Then section 25 talks about procedure for registration. In this procedure, you need to remember these 6 forms: REG1 application for registration, REG2 acknowledgement, REG3 notice, and REG4 reply to the notice. Thereafter, once you give reply, either they will be rejecting the application in REG5 or they will give certificate of registration in REG6. And the time limit in all these cases is 7 working days. So once you make the application for registration, what is the time limit within which you need to make application for registration? Within 30 days from the date you are liable to get registered, you need to make application for registration. REG1 to REG2, once you make application, you will get acknowledgement immediately. Then within 7 working days, either you will get a notice or you will get a certificate of registration. So from application, either you will get a notice or you will get certificate of registration within 7 working days. So that is this, REG1 to REG3 or REG1 to REG6, 7 working days. Suppose if you get a notice, thereafter you need to give reply to the notice, and that reply to be given within 7 working days. So REG3 to REG4 will be 7 working days. Once you give reply to the notice, thereafter either rejection of application or certificate of registration should be within 7 working days. So REG3 to REG4 to REG5 or 6 will be within 7 working days. Then at the time of making application for registration, we don't have to furnish the bank details. We can furnish the bank details at a later point of time also. There is an amendment here, and that time limit is 30 days. Previously it was 45 days. Now they have amended it to 30 days from the date of registration or date of filing GSTR1, whichever is earlier. Previously it was 45 days and the due date of filing GSTR3B, whichever is earlier, but they have made it as 30 days from the date of registration or date of filing GSTR1. It's not due date of filing GSTR1, date of filing GSTR1, whichever is earlier. And this provision is not applicable for those who are required to deduct TDS or TCS, which means that they need to give the bank details at the time of registration itself. But all others, they can give bank details at a later point of time. And this above registration procedure is not applicable to not you. So that you need to remember what is that not you. So not you is N for NRTP, O for OIDR supplier, T for TDS TCS deductor, U for UIN holder. For these people this registration procedure is not applicable. Then every person who is making application for registration has the option to choose Aadhaar authentication or not. Suppose if they choose the Aadhaar authentication, they need to complete the authentication within 15 days from the date of submission of application form, and date of authentication or 15 days, whichever is earlier, will be deemed to be the date of submission of application. Suppose if they have opted for Aadhaar authentication, the day when they complete the authentication is the date of application. If they are not completing within 15 days, so then on expiry of 15 days, it is deemed that the application is made without Aadhaar authentication. Now, physical verification shall be conducted within 30 days. Suppose if you are making application without authentication, or we made application with authentication but authentication not completed within 15 days, then in that case they will do the physical verification. That physical verification will be taking 30 days to grant the registration certificate. So shall be conducted within 30 days of submission of application, and that is 15 days from part B if the authentication is not done. And applicability of Aadhaar authentication, to whom authentication is applicable and not applicable. If you are an individual or sole proprietor, if you are citizen of India, then it is applicable. If you are not a citizen of India, then it is not applicable. HUF, only Karta is required to undergo authentication, but other members not required to undergo. Firm or LLP, only authorized or managing partner is required to undergo, and others not required, other partners not required. Company or body corporate or any other entity, only authorized signatory is required to undergo authentication, and other members not required to undergo authentication. In case of government, central government, state government department, local authority, statutory body or PSU, not required to undergo authentication. Even UIN holder is also not required to undergo authentication. So total 9 people not required to undergo authentication, not a citizen of India, members other than Karta of HUF, partners other than managing or authorized partners, members other than authorized signatory. First 4 points. Next 4 points, government and its family, central government and state government, local authority, statutory body and public sector undertaking, and finally UIN holder. So even after getting registration also they are not required to undergo authentication. Then time limit for uploading the details of physical verification. So there is an amendment related to this. So once the physical verification is completed, what is the time limit within which the report should be submitted in the portal? Suppose if the physical verification is conducted after the grant of registration, they granted the registration and thereafter they are doing the physical verification, then within a period of 15 working days from the date of such verification, they need to upload the report in the portal. Who? The proper officer. Suppose if the proper officer is doing physical verification before the grant of registration, what is the time limit within which physical verification should be done? Within 30 days from the date we submitted the application. So at least 5 days before, 30 days. So at least 5 days, 5 working days prior to the completion of specified period. What is the completion of specified period? 30 days. So they need to upload the report of the physical verification. Then there is something called as deemed registration. That is, you are making application for registration without authentication. Then they need to grant the registration within 30 days from the date of submission of application, otherwise deemed registration. Suppose you make application with authentication, but you have not completed authentication within 15 days. Then also on expiry of 15 days, within 30 days, if they are not granting registration, then it is deemed registration. Suppose you made application with authentication and authentication completed within 15 days, but they gave a notice and you gave a reply to the notice. Thereafter, within 7 working days, if they are not granting registration, then it is deemed to be granted. Suppose you make application with authentication and completed authentication, and so they are not granting registration within 7 working days from the date of authentication, then also registration deemed to be granted. Suppose you completed the authentication within 15 days, but based on risk parameters, officer wanted to conduct physical verification, then within 30 days, wherever physical verification, 30 days time limit should be taken. In case no physical verification, 7 working days. So 30 days from the date of application, then it will be deemed to be granted. So what are the 3 cases where physical verification is required? If you make application without authentication, or you made application with authentication but not completed within 15 days, or you made application but you completed authentication but officer wanted to take physical verification based on risk parameters. In these 3 cases, there is physical verification required and 30 days is the time limit for that. Then the time limit for making application for registration, if you are CTP, NRTP, at least 5 days before commencement of business you need to make application. In all other cases, within 30 days from the date you are liable to get registered. Then section 27 talks about special provisions for CTP, NRTP. CTP, NRTP should compulsorily get registered, and the registration granted to them is a temporary registration, and the validity will be maximum 90 days. It can be extended for a further period of 90 days on sufficient cause being shown, and therefore you need to remember up to 90 days plus up to 90 days. Means it is not always 90 days. Suppose if they are asking 60 days, if 60 days only it will be given. If they are asking 120 days, only 90 days will be given. And for the period for which they are operating as CTP and RTP, they need to deposit advance tax. What is that advance tax? They need to estimate their gross liability and estimate their input tax credit, estimated liability, net tax liability, they need to deposit as advance tax. Suppose if they are asking for any extension, for that extended period also they need to deposit the advance tax. Whatever advance tax that is deposited will be credited in their electronic cash ledger and it will be adjusted towards their actual liability. If there is any excess balance, that will be refunded to them. If there is any shortfall, that they are required to pay. And the distinguishing points CTP and NRTP is that CTP, a person who occasionally undertakes transaction involving supply of goods or service in the course or furtherance of business, so in a state where he has no fixed place of business. But NRTP also occasionally undertakes transaction involving supply of goods or services in a place where there is no fixed place of business in India. So that is the difference. Means CTP come from other state to this state, NRTP come from outside India to India. And CTP undertakes a transaction in the course or furtherance of business, but NRTP no such requirement. CTP will be getting registration using his permanent account number, but NRTP will not have a permanent account number, so using their passport, so they will be getting the registration. And application form for registration for CTP is REG1 and NRTP is REG9, and CTP will file the regular returns GSTR1, GSTR3B, but NRTP will file GSTR5. Then the amendment in registration section 28. Section 28 says that whenever there is a change in particulars initially submitted, so we need to go for amendment registration. But remember, if there is any change that leads to change in permanent account number, so then we need to go for new registration only, and we cannot go for amendment in registration. Apart from change in permanent account number, any other change, we can go for amendment in registration. Here we have two things, core field and non-core field. What are considered as core field? Change in name, change in address and change in top management is core field. Whereas other changes is non-core field. Non-core field, we don't need any approval from the commissioner, automatically it will be updated in the portal. But change in core field, change in name, change in address and change in top management requires the approval of the proper officer. And usually there will be prospective amendment, but retrospective amendment is possible only with the order of the commissioner. Change in constitution resulting in change in permanent account number requires cancellation of old registration and obtaining new registration. And what is the procedure? So we have REG 14 is the application for amendment in registration, and the time limit is within 15 days of such change. And REG 3, suppose we make application, what is the time limit for making application for amendment in registration? 15 days. And once we make application, officer, if he has any queries, he will give a notice in REG 3, and within 15 working days he will be giving notice. So usually within 15 days we need to submit the application, but they will give within 15 working days. They will be giving within 15 working days. And after they give the notice, we need to give reply. Usually what is the time limit for giving reply? 7 working days in REG 4. Once we give reply in REG 5, so they will be rejecting the application if they are not satisfied within 7 working days. If they are satisfied, they will grant the registration. Then cancellation of registration section 29. So total 8 situations there will be cancellation of registration. First 3 cases, either application can be made by the registered person or suo motu proper officer can initiate cancellation. What are the 3 cases? If there is any transfer or discontinuance of business, or change in constitution of business, or the taxable person no longer liable to be registered, in these 3 cases either application can be made by the registered person or officer can cancel. What is that? Transfer or discontinuance, no longer liable to be registered, change in constitution. Change in constitution means what? Change in permanent account number. Then other authentication is required for making application for cancellation of registration. Then in the remaining 5 cases, proper officer suo motu will initiate cancellation. When? If there is any contravention of the provisions of act or rules, or you are under composition scheme but you have not filed annual return within 3 months after the due date, or you are under normal scheme, you have not filed return for consecutive 6 months or 3 quarters, or registration obtained by fraud, or you voluntarily obtain registration and not commence business within 6 months. So in these 5 cases, suo motu cancellation by officer. Even TDS, TCS deductor also can make application for cancellation. Now what is the meaning of contravention of provisions of the act or rules? So that we have 7 points. So wrong address means you are not doing business from the place where you have obtained registration. Wrong invoice, you have not given the correct invoice, you have mentioned incorrect particulars in the invoice. Or wrong ITC, you avail ITC in contravention of section 16. So wrong address, wrong invoice, wrong ITC, or you have violated the anti-profiteering provisions. You should have passed on the benefit to the consumer by way of reducing the price because of the reduction in rate of tax, but you did not do that. That is anti-profiteering. Or you have not furnished the bank details within the specified time, 30 days from the date of registration or date of filing first return, GSTR1, whichever is earlier. You have not submitted the bank details, or you have not paid 1% of your liability through cash ledger even though your monthly turnover exceeds 50 lakhs. That is rule 86B. These 3 violations. That is 6th point. And 7 is, if your liability in GSTR1 is greater than 3B for 1 or more tax periods, or ITC in 3B greater than 2B for 1 or more tax periods. Means in GSTR1 you showed more liability, but you paid less liability in 3B, or you have availed more ITC in 3B than the ITC in 2B. These are the 7 cases or 7 contravention of the provisions that leads to cancellation of registration. Then suspension of registration. Whenever proper officer initiate cancellation of registration, they may suspend the registration, or whenever we make application for cancellation, they may suspend the registration. So suspension of registration, suppose if you make application for cancellation from the date you selected in the application or from the date of submission of application, whichever is later, pending the completion of cancellation proceedings, your registration will be suspended. Suppose if proper officer initiates cancellation, they will specify the date. From that date till the conclusion of cancellation proceedings, our registration will be suspended. What is the consequences during the suspension of registration? For our outward supplies, we cannot collect the GST by issuing tax invoice. For our inward supplies, we cannot avail the ITC. So the suspension of registration, so during that period, can we file the returns for the period before the date of suspension? Yes. For example, you got a notice for non-filing of returns. Suspension is initiated. From the date suspension is initiated till the conclusion of cancellation proceedings, you can file the returns of the prior period, but you cannot file returns of the suspension period. So if you file the returns, automatically the suspension will be revoked and you will continue in the registration. Then revocation of cancellation of registration. Say proper officer cancelled our registration. If they have cancelled our registration, we can make application for revocation of cancellation. What is the time limit for making application for revocation of cancellation? Within 90 days, and it can be extended for a further period of 180 days. So it's 90 days plus 180 days by commissioner or joint commissioner or additional commissioner. And before filing the application for revocation of cancellation, all the pending returns needs to be filed. And if the proper officer is satisfied, yes, within 30 days they will pass the revocation order. If the proper officer is not satisfied, they will give a notice in REG 23 and within 30 days, and thereafter within 7 working days we need to give reply in REG 24. Thereafter within 30 days, either they will revoke the cancellation order or they will reject the application. And even other authentication is required for making application for revocation of cancellation of registration. So for making application of cancellation of registration, for making application for revocation of cancellation, other authentication is necessary. So these are the points, important points for registration. Then the next one, payment process. In payment process, we have total 2 sections, section 49 which talks about various ledgers and section 50 which talks about interest on account of delay in payment of tax or wrong availment and utilization of ITC. Section 49 says that every registered person, GST portal will maintain 3 ledgers. What are those 3 ledgers? Electronic liability ledger, electronic credit ledger and electronic cash ledger. And whatever balance that is there in the electronic credit ledger can be used only for payment of tax dues, but it cannot be used for payment of interest, penalty, fee and others. So the dues of a registered person will be T, tax dues, I, interest on account of delay in payment of tax, P, penalty for contravention of provisions, fee, late fee for delay in filing returns or any other amount. But the balance in credit ledger only for tax dues. But the balance in cash ledger can be used for payment of tax dues as well as other dues. And how money will come into the credit ledger? Whenever they avail the ITC through GSTR 3B or ITC 1, 2 or 2A, so they will be getting ITC 1 is availment of ITC and closing stock, ITC 2 transfer of business, ITC 2A single registration getting separated into multiple registration or any refund. So whatever money that comes into credit ledger is used for payment of liability. Then how money will come into cash ledger? Whenever we make a deposit through payment challan or TDS, TCS deducted or refunds, and that will be used for payment of liability. Usually electronic liability ledger will be PMT1, credit ledger will be PMT2 and cash ledger will be PMT5. And for deposit we use PMT6 challan. Balance in the credit ledger or cash ledger after payment of the interest, penalty, etc., we may be able to get as a refund. Suppose if there is any discrepancies in the balances in this ledger, we need to communicate the discrepancy to the portal through PMT4. And special points with respect to cash ledger. What are the various modes of deposit into the cash ledger? PMT6, total 6 modes we have. Either we can deposit through internet banking, debit card or credit card, NEFT, RTGS, then over the counter cash deposit. But over the counter cash deposit is up to how much? 10,000 rupees per tax period, then UPI and IMPS. These are the 6 modes of deposit. Then when the payment is debited in our bank account but not reflected in the electronic cash ledger, then we need to make a complaint to the portal, and that complaint will be made in PMT7. So PMT4 is for communication of discrepancy. PMT7 is for payment debited in our bank account but not reflected. Then for transfer of balances between minor heads and major heads. So in the electronic cash ledger, there will be CGST, SGST or UTGST, IGST and cess, 4 major heads, and 5 minor heads will be tax, interest, penalty, fee and others. In order to shift the balance between one head to another head, we use PMT9. And balance available in electronic cash ledger can be transferred between distinct person, not credit ledger balance, cash ledger balance can be transferred between distinct person. For that also we use PMT9, but we should ensure that transferor is not having any unpaid liability. So then special points on electronic credit ledger. So whatever balance that is there in the credit ledger, we can get it as a refund only in 2 cases. One is zero rated supply, export of goods or service supplied to SEZ, or inverted tax structure. What is inverted tax structure? The tax rate on outward supply is less than the tax rate on inward supply. Means my output will be 5%, my input will be 18%. That is inverted tax structure, then also I will get the refund. So only in these 2 cases we will get refund from the electronic credit ledger. Refund to the original sources ledger, that is whenever we have made the payment of liability from both credit ledger and cash ledger. Suppose some excess payment is being made, in the ratio in which we have made the payment from credit ledger and cash ledger, in the same ratio it will be credited or refunded. For example, for the month of July 2023, in GSTR 3B, we have made a liability of 20 lakhs. 20 lakhs is our liability, but this 20 lakhs we paid using electronic credit ledger 15 lakhs and we paid using electronic cash ledger 5 lakhs. So this is how we have made the payment. Now in this 20 lakhs there is some excess paid. Excess GST paid is 1,20,000. Now we will get the refund. How we will get the refund? Out of this 1,20,000 we will be getting the refund. How we will get the refund? So proportionate to credit ledger, proportionate to cash ledger. So refund will go to electronic credit ledger and bank account. Okay. So to what extent it will go to electronic credit ledger? Refund will go to electronic credit ledger. 1,20,000 into 15 divided by 20 will go to electronic credit ledger, because what is the ratio in which the payment is made using credit ledger and cash ledger? 15:5. So 1,20,000 into 15 by 20 will go to the credit ledger. How much is that? 1,20,000 into 15 divided by 20, that will be 90,000 will go to electronic credit ledger, and 1,50,000 into 5 by 20, 1,20,000 into 5 by 20, that is 30,000 will go into the bank account, because that proportion is paid using the cash ledger. This is known as refund to the source ledger, that is this. So where the registered person has claimed refund of any amount paid as tax, wrongly paid, any amount wrongly paid or paid in excess, then if found admissible for refund, proportionate amount debited from credit ledger shall be recredited to credit ledger. For that they will pass an order in PMT3. Then PMT3A is there, that is by mistake we have claimed excess refund. So that excess refund from the credit ledger, when the registered person claimed the erroneous refund of ITC, upon payment of such refund along with interest and penalty, the proper officer will pass an order in PMT3A for recredit into electronic credit ledger. Then whatever balance that is there in electronic credit ledger can be used only for payment of tax, but cannot be used for payment of interest, penalty, others. Also we know that. And balance in credit ledger can be used only for payment of GST under FCM. So RCM liability cannot be paid using credit ledger. And balance available in credit ledger may be restricted for utilization by the proper officer. Accordingly, we have 2 rules, Rule 86A and Rule 86B. Rule 86A says that in 5 situations, whatever credit that is there in our credit ledger will be suspended for a maximum period of 1 year. What are those 5 cases? we have availed ITC against an invoice and issued by a supplier. Supplier is not in existence or not doing business from the place where they have obtained registration. Second, recipient is not in existence or not doing business from the place where they have obtained registration. Or we have availed ITC without receipt of goods, or invoice is missing, or supplier has not paid GST to government. So these are the 5 cases. If these 5 things happen, then officer will disallow the credit in our credit ledger maximum for 1 year, and after 1 year, if it is a genuine credit, it will be given back to us and we can utilize for payment of liability, otherwise it will be permanently suspended. Then rule 86B talks about usage of 99% of the liability from the credit ledger and 1% of your liability you have to pay through cash ledger. So if your turnover in a month exceeds 50 lakhs, you have to pay 1% of your liability through cash ledger, even though you have sufficient balance in the credit ledger. What is the meaning of turnover? Generally turnover, while calculating monthly turnover 50 lakhs, we should take only taxable turnover. So zero rated, exempted turnover, taxes and non-taxable should be taken, which means turnover is only taxable turnover, and these provisions are not applicable to government and its family members, that is central government or state government department, PSU, local authority, statutory body. Also, if such person or proprietor or karta or managing director or any of its 2 partners has deposited more than 1 lakh as income tax in the 2 preceding financial years, 86B not applicable, or they have received a refund of unutilized ITC more than 1 lakh in the preceding financial year, 86B not applicable. If they paid greater than 1% of their total liability through cash ledger, means during the current year, already from April to this month, they have paid more than 1% of their liability through cash ledger. So for this month, they don't have to pay anything through cash ledger. So this is about 86B. Then the next section, section 50, interest on account of delay in payment of tax. In 3 situations, this interest will be applicable. There is a delay in filing 3B. When there is a delay in filing 3B, so then interest will be computed, because there is a delay in filing 3B means there is a delay in payment of tax. Interest will be computed at the rate of 18% from the first date after due date till the actual date of payment. And this interest is computed on gross liability or net liability? Only on the net liability. Net liability means what? Gross liability under FCM minus input tax credit plus GST payable under RCM. So on that net liability, interest will be computed. So till which date the interest will be computed? Till the date of payment. What is the date of payment? Either actual date of filing 3B. Then second situation is invoice not reported in GSTR1 and 3B of a month. In a particular month, we have not reported the invoice, but we paid that liability in another month. Now interest will be at the rate of 18% from the first date after due date till the actual date of payment. And this interest is computed on what liability? Net liability or gross liability? On gross liability, that is total amount, even though we paid partly through credit ledger, partly through cash ledger. And what will be the date of payment? Either filing of 3B or you can also make payment through DRC3. Then third situation is ITC wrongly availed and utilized. In that case, interest will be at the rate of 18% from the date of utilization till the date of reversal, and it will be computed only on the utilized amount of ITC. How to compute the utilized amount of ITC? That month in which the balance in ITC falls below the wrongly availed ITC. So the extent to which the balance in ITC falls below availed ITC. And date of utilization means what? Actual date of 3B or due date of 3B, whichever is earlier, with respect to the month in which balance in ITC falls below wrongly availed ITC. And there is one clarification, that is, suppose if there is a balance in ITC, should we see headwise or should we see all the heads together? We should see all the heads together. For example, we have wrongly availed IGST. Don't see only IGST head, see all the heads, CGST, SGST, IGST. Together, if you are maintaining that much of balance, that is okay. So in case where IGST credit has been wrongly availed and subsequently reversed on a certain date, there will not be any interest if during the period starting from the date of availment up to such reversal, the balance in ITC under the heads taken together has never fallen below the wrongly availed ITC of IGST. But what if there is GST compensation cess? Don't take GST compensation cess head. GST compensation cess head should be taken separately, because GST compensation cess credit can be utilized only for payment of GST compensation cess. So credit of compensation cess available in cash ledger cannot be taken into account while considering the balance of electronic credit ledger for the purpose of calculation of interest. So here this ECL means electronic credit ledger, okay, it's not electronic cash ledger, because ITC information will not be in electronic cash ledger, it will be electronic credit ledger. Then the next area is returns under GST. So there are various returns. GSTR1 is a return to be filed by every registered person containing the details of outward supplies by a person other than those opting for QRMP. It will be 11th of the month following every month. Whereas for those who are under QRMP, what is the full form of QRMP? Quarterly return, monthly payment. They need to file returns on a quarterly basis by 13th of the month following every quarter. Whereas IFF, Invoice Furnishing Facility. So in case of QRMP scheme, so for first 2 months in the quarter, they need to file Invoice Furnishing Facility. So this will be 13th of the month following every month in the first 2 months of the quarter. GSTR 3B is a summary return that contains the details of outward supplies and input tax credit. If QRMP is opted, what is the time limit? 20th of the month following every month. If QRMP is not opted, 22nd of the month following every month for notified states, and for other states it will be 24th of the month following every month. So actually it is 22nd of the month following every quarter and 24th of the month following every quarter. And when it will be 22nd for notified states. So you remember GMCA and below. What is GMCA and below? Gujarat, Madhya Pradesh, Chhattisgarh and Andhra Pradesh, and states below that. So it will be 22nd of the month following every quarter. For other states it is 24th of the month following every quarter. Then CMP 8 is a return that is to be filed by a person opting for composition scheme by 18th of the month following every quarter. GSTR 4 is an annual return to be filed by a person opting for composition scheme by 30th April of succeeding financial year. GSTR 5 is NRTP, non-resident taxable person, 13th of the month following every month, or they will not get a permanent registration now. So 7 days from expiry of registration, whichever is earlier. GSTR 5A is a return to be filed by OIDR supplier located outside India. So it is like a GSTR 3B return 20th of the month following every month. GSTR 6 is by input service distributor by 13th of the month following every month. GSTR 7 talks about TDS, GSTR 8 TCS. These two returns to be filed by 10th of the month following every month. GSTR 9 and 9B is an annual return to be filed by a normal person. 9 is a normal person, 9B is e-commerce operator by 31st December of the next financial year. But remember, only if aggregate turnover during a financial year, previous year, exceeds 2 crores, then only annual return is applicable. Otherwise, annual return is not applicable. There is something called as GSTR 9C, reconciliation statement. That is also by 31st December, but it is applicable only for a person whose turnover exceeds 5 crores in the financial year. GSTR 10 is a final return. That final return needs to be filed within 3 months from the date of cancellation, or B, order of cancellation. A is 3 months from the date of cancellation, B is order of cancellation, whichever is later, not whichever is earlier, whichever is later. GSTR 11 is a return filed by UIN holder for making application of refund. UIN holder is, so that is UN embassy or consulate, etc. Their outward supply is exempted. On their inward supply, so they cannot take ITC, but they can get the refund. For claiming refund, they will be given a status called as UIN holder. They need to file GSTR 11 at the time of making refund claim. Then some special points on return. There is a sequential filing of returns, which means that without filing GSTR 1 of the month, you cannot file the 3B of that month. Without filing 3B of the previous month, you cannot file the GSTR 1 of the subsequent month. You understood? So like that we have a sequential filing of returns. Then government on the recommendations of GST Council allow a person to file one GSTR 1 even if GSTR 1 not filed for prior periods. In the following cases, even though supplier declared the details of outward supplies in GSTR 1, but ITC will be restricted in 2B. So what are the cases where ITC is restricted in 2B as per section 38? Suppose if the supplier is a newly registered business, or supplier has filed GSTR 1 but not filed 3B, or supplier liability in GSTR 1 is greater than his 3B, or supplier has availed ITC in his 3B more than his 2B, or supplier has received demand notices for non-payment of taxes, or supplier default in payment of 1% of their liability through cash ledger. So in these cases, even though they are filing GSTR 1 reporting invoices, but in our 2B, it will come as ITC not available. We cannot take that ITC. Then communication of discrepancies and recovery mechanism 88C and 88D. So what is that 88C? When 88C will be applicable? First we will see 88C. So whenever our liability in GSTR 1 is greater than liability in GSTR 3B, which means we have reported more liability in GSTR 1, but paid a lesser amount in 3B. So then in that case 88C will be applicable. So we will get a notice in DRC 1B, either uploaded in the portal or it will be made available to us in email, and we need to respond to that within 7 days. In GST DRC 1B, what are the options? Either pay the difference or explain the difference, or partly pay and partly explain the difference. Suppose if you are not responding, what they will do? They will initiate recovery under section 79 and they will recover the money from us. And what is the impact of filing of returns? We cannot, till the time we make payment of this difference, we cannot file GSTR1. As we cannot file GSTR1, we cannot file 3B. As we cannot file 1 and 3B for 2 consecutive tax periods, we cannot generate e-way bill, and even this is one of the reasons for suspension of registration. Then 88D is there, which says that whenever we are availing ITC in our 3B more than our 2B, ITC claimed in 3B is greater than 2B, then we will get a notice in 1C, and that will be uploaded in portal. We need to respond within 7 days, DRC 1C, and either pay the difference or explain the difference, or partial payment and explain the difference, same, and they will give a notice again for recovery. Here also same, other things are same, that is we are not allowed to file GSTR1 till the time we pay the difference, even 3B not possible, e-way bill will be blocked, and this will lead to suspension of registration. So 88C and 88D, more or less it is the same with respect to slight changes. Then next, who are not required to file GSTR1 or GSTR3B? Remember tonic. So in the tonic, T square, T for TDS deductor, TCS deductor. Then because they will be filing GSTR7 and GSTR8, then O for OIDR supplier because they will be filing GSTR5A, then NRTP because they will file GSTR5, I for input service distributor because they will file GSTR6, and C for composition scheme taxpayer because they will be filing CMP8. Then who are not required to file annual return? CAG tonic, that is persons whose books of accounts are subject to audit by CAG, Comptroller Auditor General. T, TDS deductor. So, but TCS deductor will be required to file annual return, GSTR 9B, e-commerce operator. O for OIDR supplier, same. N for non-resident taxable person, same. I for input service distributor, same. But C is not composition scheme, because composition scheme is required to file annual return in GSTR 4 by 30th April of succeeding financial year. So, here C is the casual taxable person. Then we can file returns through SMS, GSTR1, GSTR3B and CMP8. These 3 returns we can file through SMS if all the entries in the return are nil. And first return is immediately after registration, we need to file the first return, and that first return should contain the details from the date we are liable to get registered till the end of the month for which we are filing the return. Then notice for return defaulter, section 46. Whenever you are required to file returns but you have not filed the returns, we will get a notice in GSTR 3A. Once we get the notice in GSTR 3A, within 15 days of such notice, we need to file the returns. Then QRMP scheme. So QRMP scheme is applicable to whom? A person whose aggregate turnover during the previous year does not exceed 5 crores. What they will do? They will file returns on a quarterly basis. GSTR1 on a quarterly basis by when? 13th of the month following every quarter. GSTR3B by 22nd or 24th of the month following every quarter. And they will pay tax on a monthly basis. So that they have 2 methods. Either they can pay under self-assessment method or they can pay under fixed sum method. So self-assessment method or fixed sum method, they have to pay tax by 25th of the month following every quarter for the first and second month. What about third month? Anyhow, for all these 3 months, they will file a 3B by 22nd or 24th of the month following every quarter. And B2B invoices, that is whenever they are filing return GSTR1 on a quarterly basis, the recipient will be able to take ITC on a quarterly basis due to that reason. So they can file a IFF, invoice furnishing facility, reporting the details of B2B supplies. So that is optional. And whenever they file it on a monthly basis for first and second month. Why about third month? Anyhow, for all these 3 months they will file a GSTR1. So first and second month they need to file IFF, and that will be reflected in 2B of the recipient. So recipient can take the ITC. And QRMP scheme is GSTIN wise. GSTIN wise means what? Suppose if I have 4 registrations, with respect to each registration I can decide whether to go for QRMP or to go for the normal. Not like composition scheme. Composition scheme is like all in, all out. All the registrations will be in composition scheme or all registrations will be out of composition scheme. Then time frame to opt in. So within 1 month after commencement of the quarter and 2 months before commencement of the quarter, they need to decide. For example, April is the commencement of the quarter, April 1st. So 2 months before means, 1st February, and 1 month after means 30th April. They need to decide for going for QRMP for the first quarter, like that. So 1 month after commencement of quarter and 2 months before commencement of quarter. What is the condition to opt in? The last return must be furnished, means whatever monthly returns that should be furnished, then only you can go for quarterly return. GSTR1 are availing IFF facility. Either you can file GSTR1 on a quarterly basis, or monthly. For first month and second month you can file IFF by 13th of the month following every month. Whatever details that you have entered in IFF need not be re-entered in GSTR1, otherwise all 3 months data you need to enter in GSTR1. But when you are filing IFF, ensure that you are not uploading the details of invoices more than 50 lakhs in each month. Then you have two methods, fixed sum method and self-assessment method. In self-assessment method, you will compute how much is your actual liability, that is gross liability minus ITC, that is your self-assessment. Whereas in fixed sum method, you will take the previous quarter 3B and 35% of that liability you will pay as the liability for first month and second month. Whereas if the previous 3B is monthly, 100% of that monthly liability you will pay for the first month and second month. Any change in the manner of filing 3B? No, normally we will file 3B. Compulsory opt out. Whenever your aggregate turnover in the financial year exceeds 5 crores, you will compulsorily coming out of QRMP. And levy of late fees, there is a late fee that will be payable. So for delay in GSTR1, GSTR3B, but for IFF there is no late fee. Also for delay in payment also there is no late fee. And there is something called as interest on account of short payment or non-payment under QRMP. Suppose if you are under fixed sum method, you have to pay first month and second month liability by 25th of next month. If you miss that, you need to pay interest at the rate of 18% from 26th of next month till the date of payment. Suppose if your actual liability is more than fixed sum month liability, are you required to pay any interest on the difference? No. Under fixed sum method, you are not required to pay any interest if that interest is paid by due date of 3B. That is, if the difference is paid by due date of 3B, you don't have to pay the interest. Suppose if 3B liability, that is for the quarter, you have to file the 3B by 22nd or 24th. If there is any delay, then interest will be applicable at 18% per annum from 23rd or 25th. Suppose if due date is 22nd, from 23rd. If the due date is 24th, from 25th. Till the actual date of filing 3B, you need to pay the interest. Whereas in self-assessment method also, first interest and last interest is same, but extra we have the second interest. What is that? So if there is any difference in your actual liability minus self-assessment liability, on the difference you need to pay interest at the rate of 18% per annum from 26th of the next month till the date of payment. This is the extra interest that we have on the difference amount. Then last, late fee for delay in filing return, section 47. For GSTR1 and GSTR3B, what is the late fee? If it is nil return, 10 rupees per day subject to maximum 250 under each act. This is under CGST Act. The same late fee is payable under SGST Act, but we don't have to pay late fee under IGST Act. Suppose if your aggregate turnover, it is other than nil return. If it is other than nil return, we have to pay a late fee of 25 rupees per day, and maximum will be different. If aggregate turnover during previous year does not exceed 1.5 crores, 1000. If aggregate turnover during previous year exceeds 1.5 crores but does not exceed 5 crores, 2500. If aggregate turnover during previous year exceed 5 crores, then the maximum will be 5000. Then GSTR 5, 5A and GSTR 6, nil return other than nil return same, 10 rupees per day, 25 rupees per day, but the maximum we don't have any slabs, always 5000. For 1 and 3B, what is the slab? Aggregate turnover during previous year exceeds 5 crores, 5000. Aggregate turnover during previous year exceeds 1.5 but does not exceed 5, 2500. If it does not exceed 1.5 crores, 1000. Then GSTR 7 and GSTR 8. 7 is a TDS return, 8 is a TCS return. For 7, it will be 25 rupees per day subject to maximum 1000. So TDS return is required to be filed by government, but TCS return is required to be filed by private. For private person, 100 rupees per day subject to maximum 5000. So there is a difference in the late fee. For TDS, 25 rupees per day subject to maximum 1000. TCS 100 rupees per day subject to maximum 5000. GSTR 4 is a return to be filed, annual return to be filed by a person opting for composition scheme. Who can opt for composition scheme? If their aggregate turnover does not exceed 1.5 crores during previous year. If their aggregate turnover does not exceed 1.5 crores, what is the maximum late fee? 1000. So nil return 10 rupees per day subject to maximum 250. Other than nil return 25 rupees per day subject to maximum 1000. Then annual return, what is the late fee? If their aggregate turnover during previous year does not exceed 5 crores, 25 per day subject to maximum 0.02%, 0.02%. If their aggregate turnover exceed 5 but does not exceed 20, double, 50 rupees per day, but the maximum is same, 0.02%. Suppose if the aggregate turnover during previous year exceeds 20 crores, again, so double, 100 rupees per day, subject to maximum 0.25, not 0.02, 0.25% of the turnover. So this you need to remember. And an equal amount of late fee is also payable under SGST Act, but we don't have late fee under IGST Act. Then rectification of GSTR1 and GSTR3B, we can rectify the details submitted already in GSTR1 and 3B by 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. But remember, the rectification is not possible if it is identified by the department. Voluntarily by the taxpayer only they can do rectification. If it is identified by department, they cannot do rectification. Even we don't have the concept of revision of returns like income tax. Then how to report the details of outward supplies in GSTR1? If it is B2B supplies, always we need to report invoice wise. If it is B2C supplies, we need to check whether it is interstate supplies or intrastate supplies. If it is intrastate supplies, always consolidated. So B2B always invoice wise, B2C intrastate always consolidated, B2C interstate. Now we need to see what is the value of invoice. If the invoice value is more than 250,000 per invoice, we have to report invoice wise. If the invoice value does not exceed 250,000 per invoice, then we need to do state wise consolidation. So this is about returns under GST. Then look into the next area, e-way bill. So e-way bill is to be generated before movement of the goods. So before causing movement of the goods, e-way bill is a document to be generated by the person who is causing movement of the goods, and e-way bill is not applicable in case of exempted goods, only in case of taxable goods. And what should be the value for which e-way bill is applicable? If the value of goods including GST, not excluding GST, including GST does not exceed 50,000, we don't have to generate e-way bill. However, in case of job work and handicrafts, even if the value does not exceed 50,000, e-way bill is required. But for others only we need to check that 50,000 limit. And e-way bill will have two parts. Part A contains the GST and details of supplier and recipient, document number and reason for transportation. So all the invoice details will be there in part A, and part B contains the vehicle details, that is transport details. And what is the validity of e-way bill? Once e-way bill is generated, the validity will be 1 day for every 20 kilometers or part thereof if it is over dimensional cargo or multi-mode transportation where one leg of the journey is by waterways. Over dimensional means the length of the vehicle is big, or multi-mode means one up to some distance by roadways, thereafter railways, thereafter waterways. Then in that case, it will be 1 day for every 20 kilometers or part thereof. In all other cases, the validity of the e-way bill will be 1 day for every 200 kilometers or part thereof. For example, 480 kilometers is the distance. What is the validity if it is other than over dimensional cargo? So 1 day for every 200 kilometers. So 480, first 200 kilometers 1 day, next 200 kilometers second day, remaining 80 kilometers third day. So 3 days will be taken as a validity. And the validity should always be counted from the midnight of the day in which e-way bill is generated to the midnight of the next day as 1 day. For example, if today morning e-way bill is generated, today midnight to tomorrow midnight will be 1 day, tomorrow midnight to day after tomorrow midnight will be second day, like that it will be counted. So always e-way bill expires by midnight. So it should be renewed within 8 hours from its expiry. Validity counted from the midnight of the day in which e-way bill is generated. The validity of e-way bill may be extended within 8 hours from the time of its expiry. Then we have some FAQs on e-way bill. When e-way bill is not required. So if you are transporting the goods by non-motorized vehicle, bullock cart, horse cart, etc., that do not require e-way bill. Goods transported from the customs port, airport or land customs station, so that will be within the control of customs. So even that do not require e-way bill. And transit cargo transported to Nepal and Bhutan. Goods are unloaded in India, but it is going to Nepal and Bhutan, that do not require e-way bill. Movement of goods for Ministry of Defence. Then empty cargo containers are being transported. Then consignor transporting goods to or from between place of business and a weighbridge for a weighment at a distance of 20 kilometers. So from the factory to the weighbridge within 20 kilometers, if they are transporting the goods, that do not require e-way bill. Then goods being transported by rail belonging to government, and some states may specify some goods as exempted from e-way bill, and some goods are specified by central government also, that is LPG for household and non-domestic exempted category, that is gas cylinders, that red color gas cylinders. Then kerosene oil sold in ration shops, postal baggage, natural or cultured pearls. Then jewelry also do not require e-way bill, but if it is a imitation jewelry, that requires e-way bill. And used personal and household effects, so like used household goods, we are relocating house from one location to another location, that do not require e-way bill. Whether e-way bill is required if movement of goods is not for supply, whether the movement is for supply or not for supply, e-way bill is required. Whether the 50,000 limit is for taxable goods or exempted goods, that is for both, like taxable goods. If you have both taxable and exempted, take out the exempted goods. See the value of taxable goods. If it exceeds 50,000, then only e-way bill is required. While computing the invoice value, whether GST to be included or excluded, GST to be included. And who will generate e-way bill? If the supplier is registered, supplier will generate e-way bill. If the supplier is unregistered and the recipient is registered, recipient will generate e-way bill. What if both supplier and recipient are unregistered? The transporter will generate e-way bill, or alternatively either supplier or recipient by enrolling as citizen of India can generate e-way bill. Then suppose if the person supplier has not generated e-way bill because the value of the consignment is less than 50,000, you are the transporter, you are transporting goods like this belonging to 10 different people. So each and every person not generate e-way bill because the value is less than 50, but cumulatively if you put all those goods in your truck, the value of the goods exceeds 50,000, whether you need to generate e-way bill? Yes. For each consignment you need to generate separate e-way bill, plus consolidating all these things, one consolidated e-way bill also should be generated by the transporter. Then next, blocking of e-way bill. If you are not filing, suppose for example if I am not filing returns for 2 consecutive tax periods, if I am not filing GSTR 1, 3B or CMP 8 for 2 consecutive tax periods, then my e-way bill will be blocked for my outward supplies. But for my inward supply, e-way bill can be generated. For my outward supply, it will be blocked. Neither me nor my recipient nor any other person can generate the e-way bill. So e-way bill generation facility is blocked only with respect to outward movement of goods by a registered person who has not filed returns as above. However, e-way bill can be generated in respect of inward supplies of that person. Then other points, in case of bill to ship to transactions, in bill to ship to transaction there will be 2 supplies, one between original supplier and the billing address, another between billing address and the shipping address. In that case only one e-way bill is sufficient, we don't need 2 e-way bills. Multi-vehicle updation is possible in e-way bill. Up to some distance in one vehicle, thereafter in another vehicle, we can update the vehicle details in part B, not necessary that we need to generate a new e-way bill. Part B should be updated within 15 days from updation of part A, and e-way bill should be accepted by the recipient within 72 hours of its generation or delivery of goods, whichever is earlier. And who can update part B? Either supplier, recipient or transporter. And if there is, and also remember, once e-way bill is generated, it can be cancelled within 24 hours of its generation. If there is any movement of goods, if it is taxable goods and covered under supply, invoice plus e-way bill is required. If it is without supply, delivery challan plus e-way bill. Suppose if it is exempted goods, so e-way bill not required. But if it is under supply, bill of supply is to be taken, without supply, delivery challan, only that document is required. So these provisions are the important provisions. One more point, e-way bill generated can be cancelled. E-way bill generated can be cancelled within 24 hours, within 24 hours of its generation. Within 24 hours of its generation, once the e-way bill is generated, it can be cancelled. Then look into the next area, that is GST Practitioner, section 48. So what are the activities that can be done by a GST practitioner? They can apply for registration, they can file the returns, and they can act as authorized representative, they can make the payment of tax and apply for refund. Plus they can also furnish information for generation of e-way bill, they can furnish the details of ITC4, that is goods sent on job work and receipt from job work. They can make application for amendment or cancellation of unique enrollment number. They can file an intimation for either opting for composition scheme or withdrawal from composition scheme. These are the activities that can be done by a GST practitioner. Then what are the eligibility conditions? They should be citizen of India, person of sound mind, not adjudged as insolvent, not convicted by the court for imprisonment for a period greater than 2 years. Not less than 2 years means what? Greater than 2 years. And what is the responsibility? Suppose if there is any mistake in the GST returns, who will be held responsible? GST practitioner is not held responsible. The registered person is only held responsible. So the GST practitioner, before filing the returns, should get an approval from the registered person. So registered person should give the approval, and based on that only GST practitioner will file returns. So the responsibility will be on the registered person only, not on GST practitioner. So these are the points we have. Then next area we will see accounts and records. So have a look into accounts and records. Last, accounts and records. What are the various accounts and records to be maintained by a registered person? As per section 35, section 35 contains the details of what are the accounts and records to be maintained by a person. As per section 35, every registered person is required to maintain certain accounts and records under GST, that is I formats. I for inward supply, records related to inward supply. F, records related to foreign trade, that is import or export. Records related to outward supplies. Okay, so but you don't write I formats, you just write these points. All accounts and records related to inward supply, foreign trade, import and export. O for outward supply. R for RCM purchases. Then M for manufacture and production related records, and A for advances received, paid and adjusted. T for tax details, input tax and output tax. S for stock of goods. So these records to be maintained. But if a person is under composition scheme, they are not required to maintain T and S. They are required to maintain only I pharma. So this TS is not required for a person who is opting for composition scheme. And as per section 35, the above records to be maintained by every registered person, which place? In principal place of business pertaining to the principal place as well as additional place. Whereas in additional place, they need to maintain records pertaining to only additional place of business. And section 36, what is the period for which they need to maintain these accounts and records? So normally they need to maintain the accounts and records for a period of 72 months from the due date of filing annual return for the relevant financial year. 72 months is 6 years, but you don't remember as 6 years, you remember as 72 months only. 72 months from the due date of filing annual return for the relevant financial year. Suppose if you are going for appeal with respect to a particular financial year, then we need to maintain records for 72 months from the due date of filing annual return, or 1 year from the outcome of the appeal. So whichever is later, that is 1 year from the disposal of appeal proceedings or 72 months from the due date of filing annual return, whichever is later, up to that we need to maintain the accounts and records. Then every transporter or warehouse keeper, even though not registered, should obtain unique enrollment number and maintain necessary records. That is, there is a transporter or there is a warehouse keeper. Basically, they are not required to get registered because their aggregate turnover does not exceed threshold limit. Even then, they need to get a unique enrollment number. So in entire GST, 2 people are required to get a unique enrollment number. One is supplier of goods through e-commerce operator. If they are making only intrastate supplies, they should get unique enrollment number. Then transporter and warehouse keeper is also required to get a unique enrollment number, even though their aggregate turnover does not exceed threshold limit. This transporter or warehouse keeper should get a unique enrollment number and maintain certain necessary records. These are the only 2 sections that we have in accounts and records chapter. Then we are left with this place of supply, TDS and TCS. So we will see this. You need a break? Okay, one small break will take for 5 minutes, just for relaxation purpose, a pass, and thereafter we will see these 2 topics. These are 2 important topics. Okay, we'll start. Say this. The next area is TDS and TCS. TDS refers to tax deducted at source and TCS refers to tax collected at source, and we have these provisions in section 51 and 52 of CGST Act. When TDS is applicable, whenever we are making supplies to the notified recipient. Who are the notified recipients? Central government, state government, union territory, local authority, or government agency, or public sector undertaking, or government body where government has invested greater than or equals to 51% are called as notified recipients. Whenever we are making supplies to these notified recipients, then they will be deducting TDS. And who is liable to deduct and at what rate? So what is the rate at which TDS will be deducted? At the rate of 2%. And non-applicability of TDS. So in some cases, this 2% also how we need to calculate. If it is intrastate supply, CGST 1%, SGST 1%. If it is interstate supply, IGST 2%. But in these following cases, TDS will not be applicable. Number one, if the supplier is unregistered, because whatever TDS that is deducted by the recipient will be remitted to the government against the supplier. So it will come in the electronic cash ledger of the supplier. Due to that reason, if the supplier is not registered, so then there won't be any reflection in the cash ledger. So if the supplier is unregistered, TDS is not applicable. Number two, supplies are exempted or non-taxable. First of all, there is no GST, so then there is no question of TDS. And then contract value does not exceed 2,50,000. If value of supply is under the contract, not the amount remitted, total value of supply under the contract does not exceed 2,50,000, that is excluding GST. And then supplies between notified recipients, that is between these notified recipients, between government, government agency, PSUs, etc. Between them, if there is any transaction, TDS will not be applicable, and recipient is liable to pay GST under RCM. So when the transaction is under RCM, so TDS is not applicable. And the last point, it is an intrastate supply, means supplier and the place of supply is in one state, but the recipient is in the other state. Supplier in Tamil Nadu, place of supply Tamil Nadu, but the recipient in Karnataka, then they cannot deduct TDS, because the TDS will be 1% CGST, 1% towards Tamil Nadu SGST, but the recipient in Karnataka cannot pay 1% towards Tamil Nadu SGST due to that reason. So TDS is not applicable, that is location of recipient and place of supply not in the same state. These are the 6 situations where TDS is not applicable, and TDS will be computed on the amount remitted to the supplier by the recipient. So to decide whether TDS is applicable or not, we need to see the contract value, but ultimately TDS will be computed on the amount remitted by recipient to supplier, and TDS not applicable if it is an intrastate supply and recipient is in the other state. And computation, TDS will be computed on the value of supply excluding GST, and whatever TDS deducted shall be reported in GSTR 7, and TDS deducted should be remitted to the government by 10th of the month following every month. Even they need to report these details in GSTR 7 by 10th of the month following every month, and they need to give a TDS certificate in GSTR 7A, and there is no time limit for the TDS certificate. Then they have to pay a late fee for delay in filing GSTR 7. GSTR 7 is the return for TDS. What is the late fee for GSTR 7? 25 rupees per day, subject to maximum 1,000 under each act. And annual return not required to be filed by TDS deductor. And if there is any delay in payment of TDS, they need to pay interest at the rate of 18% per annum for the delay. Even there will be penalty also for delay in paying TDS and TCS. Now these are the provisions related to TDS. Now we will see TCS, so that we will understand. I have given this adjacent so that you know the differences between this. TCS under section 52, when is it applicable? Whenever we are making supply of goods or services through e-commerce operator. So here supplier should be different from e-commerce operator, and the e-commerce operator should not be mere agent, that is payment gateway or logistics operators. So whenever we are making supply of goods or services through e-commerce operator, then TCS will be applicable. And what is the rate at which TCS will be computed? 1%, which means TDS is 2, TCS is 1. So if it is an intrastate supply, 0.5 CGST, 0.5 SGST, if it is interstate supply, 1% IGST. And non-applicability, supplier is unregistered. Here also supplier is unregistered. Then supplies are exempted or non-taxable. Same, supplies are exempted or non-taxable. Then notified service under 9.5. We have seen that 9.5 and 52 are mutually exclusive. Whenever the transaction is 9.5, e-commerce operator only will pay GST. So TCS is not applicable, and the payment is not collected by e-commerce operator, means payment directly collected by the supplier. Then also TCS not applicable. But we don't have any threshold limit like 2,50,000 in case of TCS. So TCS is always applicable. Then, so TCS is computed on what? payment towards the contract value minus returns. So how much is the sales made through the platform minus sales returns through the platform, on the TCS will be computed, and that TCS deducted should also be remitted by 10th of the month following every month, and they need to file one return. What is that return? GSTR 8 by 10th of the month following every month, and there is no such requirement of certificate. And here what will be the late fee? 100 rupees per day subject to maximum 5,000 under each act. And even TCS deductor is required to file an annual return in GSTR 9B by 31st December of succeeding financial year. Here also they need to pay interest on account of delay in like remittance of TCS at the rate of 18%, and penalty also will be applicable. Whatever TDS TCS deducted will be reflected in GSTR 2A, not 2B, 2A of the supplier, and that they can use it for payment of any liability because it will come into cash ledger. So once it comes into cash ledger, it can be used for payment of tax dues or other dues, interest, penalty, etc. And TCS return GSTR 8 can be rectified. The time limit for rectification of GSTR 8 is 30th November of the succeeding financial year, or date of filing annual return, whichever is earlier, that's the time limit. And you can see next, place of supply. So this is the last area that we have. Place of supply, we have 2 sections that is applicable for your exam. So total there are 4 sections that we have in place of supply in total. So place of supply in case of goods, import and export is section 11, but that is not in syllabus, but other cases section 10 that is in syllabus. So goods, we have only one section for your syllabus, that is section 10. So place of supply in case of goods, section 10. Place of supply in case of services, if both supplier and recipient are located in India, then section 12, and suppose if one in India, other outside India, section 13, but 13 is not in syllabus. So what you have is only 10 and 12. 10 is applicable in case of goods, 12 is applicable in case of services. So we don't have to get confused there. 10 is for goods, 12 is for services. Now, so when this 10 will be applicable goods, so for that goods we have 5 situations. Supply involves movement of goods. Supply involves movement of goods means under a contract of supply, goods are taken from one location to another location. What should be taken as a place of supply? Ending point should be taken as a place of supply if it is to B2B, that is applied to registered person. If it is supplied to unregistered person, we need to take location of recipient in the records of supplier, otherwise location of supplier. But for the time being, we will try to remember it as simple as possible. First one, supply involves movement of goods. Ending point should be taken. Okay. Then bill to ship to transaction, B for billing address. So billing address should be taken as the place of supply. Supply does not involve movement of goods, means the location of goods, wherever the goods are there, that should be taken as the place of supply. Then, so assembly or installation at site, location where it is assembled or installed should be taken as the place of supply. Supply of goods on board a conveyance, that is during the journey. So we need to take starting point of the goods should be taken. For the first case, it is ending point of the goods. For the last case, it is starting point of the goods. Can you remember it simply? So what are they? First, supply involves movement of goods, ending point. So bill to ship to transaction, billing address. Supply does not involve movement of goods, location of goods. Assembly or installation, location where it is assembled or installed. Supply of goods on board a conveyance, starting point of the goods. Over. Then in the first case and the third case, supply involve movement of goods, supply does not involve movement of goods. If it is B2C, that is supply to unregistered person. Common point, what is that? So the location of recipient in the records of supplier, otherwise location of supplier. That's it. This is what you need to remember for goods. Over. And in case of conflict of provisions between 10(1)C and 10(1)D and 10(1)E, which will prevail? So this 10(1)D and 10(1)E will prevail because this is specific provision over general provisions. Okay. So for example, I am supplying the goods that requires assembly or installation. Now location of installation should be taken, not the ending point of the goods. So therefore 10(1)D and 10(1)E are specific provisions. So therefore 10(1)D and E shall prevail over 10(1)A,B,C. Specific provision prevail over general provisions. Then next one we have section 12. So 13 we don't have, only section 12 we have. Place of supply in case of services. This place of supply in case of services, so I have given in like book 13 also. At that time thinking that 13 is there, but 13 is not there, just 12 related provisions you need to remember. This 12 related provisions we can easily remember. Okay, there are many services. First listen. So I will tell you how to remember this. There are many services for which different place of supply is there. Okay. So first we need to see, general provisions. First we need to know the general provisions, and when general provisions is applicable, when there is no specific provisions. Okay, and what are the cases where we have specific provisions? So we have to remember fit test. Okay, FITTEST. So F for food and beverages. F for food and beverages. I for immovable property. Immovable property services. T for transportation of goods or passengers. Then next one, training and performance appraisal. Training and performance appraisal. E for event related. In event related there are two things: admission to an event, organizing an event. Admission or organizing an event. And S for supply of service on board a conveyance. Supply of service or service on board a conveyance. Service on board, that is during the journey we receive the service. Service on board a conveyance. And telecommunication service. Okay. And A, remember, A fit test. Okay, A fit test. A for advertisement services to government. Advertisement services to government. So these are the specific provisions. Okay, in these specific provisions, what should be taken as the place of supply? Easily you try to remember. For immovable property services, we need to take location of property. Easy. Immovable property, what should be taken as the place of supply? Location of property. So the place of supply is location of property. Same way here. For transportation of goods or passengers, what will be the place of supply? Starting point. Starting point of what? Goods or starting point of passengers? Starting point of goods or passengers. Then for training and performance appraisal, where it is performed. Okay. So place of supply is location of performance. Location of performance. Then event related. Location of event. Super. Location of event. Service on board a conveyance. Starting point of what? Conveyance. Starting point of conveyance. Starting point of conveyance. Okay. Then food and beverages, same location where it is performed. Wherever the food and beverages is provided, so that will be taken. So place of supply will be location of performance. Then in case of advertisement services to government, place of supply is each state. Each state where the advertisement is provided. Telecommunication service. For telecommunication service we have many points. What is that? telecommunication service if it is fixed line or mobile. If it is fixed line or if it is mobile. If it is fixed line, what will be the place of supply? Billing address. The place of supply is billing address. If it is mobile, again prepaid, postpaid. Sorry, if it is fixed line, it is location of installation. Location of installation. If it is mobile only, postpaid, place of supply is billing address. Place of supply is billing address. If it is prepaid, online or other, online place of supply is location of recipient in records, and others place of supply is location of dealer. Location of dealer. Okay. So this is what easily you can remember with respect to general specific provisions. Okay. Somewhere backside admit ka, don't write this and go. Don't write this and go. Okay. So don't write this and go and get caught and tell our sir only told this, because this book, that's it book, I stopped giving because many students are taking this book to the exam hall, inside the exam hall and all. Okay. So too much it is, and no, my name is only there, my photo and all is there. So that's why no, I don't. PDF you download, you take micro Xerox and take, but don't ask me. And see this. So what is that? You need to remember A, fittest. A for advertisement service to government. So what is the place of supply? Each state where it is provided. Food and beverages. So place of supply is location of performance. And I, immobile property, location of immobile property. T, transportation of goods or passengers, starting point of goods or passengers. And another T, training and performance appraisal, location where it is performed. Event related, admission to an event or organizing event, location where the event is held. Service on board a conveyance, so starting point of the conveyance. Telecommunication, fixed line or mobile, fixed line, location of installation, mobile. So postpaid it will be billing address, prepaid online means location of recipient in records, otherwise location of dealer. Easy? Now this is the first thing you need to remember. Now what is that second you need to remember is that, so far whatever we have seen, B2B, B2C classification, B2B, B2C classification, we have not seen. Only in 3 cases we have B2B, B2C classification. What are the 3 cases? TOT, TOT, B2B versus B2C classification. B2B versus B2C classification only in case of TOT. What is the TOT? TOT. T is training and performance appraisal. Training and performance appraisal. Training and performance appraisal. O, organizing an event. Organizing an event. And T, transportation of goods or passengers. Goods or passengers. Now in these 3 cases, if it is B2B, what will be taken? Location of recipient. If it is B2C, as above. What is it as above? Specific point we have na, training and performance appraisal, location of performance. Organizing event, location where the event is held. Transportation of goods or passengers, starting point of goods or starting point of passengers. You need to see only for these 3 B2B, B2C. In all other cases we don't have to bother. In these 3 only, TOT, training and performance appraisal, organizing an event, transportation of goods or passengers. There only you check whether it is to registered person or unregistered person. If it is to registered person, blindly you take location of recipient. If it is to unregistered person only, you see that specific provisions. You understood the second point? Then third point. Third point. So here, in case of immobile property and organizing an event, IO, immobile property and organizing an event outside India. Immobile property immovable property or organizing an event. Immovable property or organizing an event outside India. Okay, don't see anything. Always we need to take place of supply as location of recipient. Is it clear here? These two alone. Which two alone? Immovable property, organizing an event outside India. What should be taken as a place of supply? Location of recipient. Then apart from these three, last point, general provisions. Sir, you read this question. You don't know it is covered under anywhere. So therefore we need to take the general provisions. General provisions. What does the general provision say? General provisions. In all other cases we need to take general provisions. So we need to see B2B or B2C. B2B, what will be taken? Location of recipient. B2C, location of recipient in the records. Otherwise, in the records. If you don't have, then location of supplier. That is the general provisions. B2B, location of recipient. B2C, location of recipient in the records of supplier. Otherwise, location of supplier. So in 4 points we completed place of supply for services. Easily you can remember this. Okay. First A fit test, specific cases. Then TOT, B2B, B2C classification. Immovable property, organizing an event outside India, location of recipient. And then general provisions. In all other cases we need to apply general provisions. So this chart, like this points, is easy for you to remember rather than this table. Okay. Next, we have some IGST rules. This IGST rules is for the purpose of apportionment of the common expenditure, like common value between the states. For example, advertisement services to government. What should be taken as the place, like place of supply? We need to take each state where the advertisement is provided. Suppose if the advertisement is provided across the country, how will you apportion between the states? First you need to check, is the advertisement through train? Then you need to take on the basis of what? Train means what basis should be taken as apportionment between the state? Length of track. Suppose if it is on the train ticket, number of stations in each state. Suppose if it is advertisement in television, you need to take on what basis? Viewership data. Thereafter you need to divide between population census. Super. And then if it is advertisement in internet, deemed to be across India, and we need to divide it over internet subscribers. Suppose if it is advertisement in SMS, then we need to take which data? Telecom subscriber data for apportionment. Is it clear? So if it is train, length of railway track. If it is train ticket, number of stations. TV channels, viewership data, thereafter population. Internet, internet subscribers. SMS, telecom subscribers. Apart from this, anything else? Expenditure ratio. That is a general apportionment is what? Expenditure ratio. Then suppose if it is immovable property services, accommodation service, what will you take as a base of apportionment? Number of nights stayed in each state. If it is houseboat, time spent in each state. If it is any other service in relation to immovable property, area of immovable property in each state. That is the base of apportionment. Just like overheads, how will you divide? On what basis you will divide? No, that one. And next one, suppose if it is organizing an event, more than one state, on what basis? Expenditure ratio. I told you general rule is expenditure ratio. And suppose if it is a leased circuit, so telecommunication installed in multiple places, so number of circuit points in each state or number of installation points in each state, that will be taken as the base of apportionment. Then there is one circular related to advertising services. Usually you will be seeing lot of hoardings in the roadside and you want to display ad in the hoarding. Now when you want to display the ad in the hoarding, there are two supplies in that. Number one, first I have a place and one advertising company will approach me to put their hoarding in my place. That is number one, supply number one between the property owner and the advertising company. Now you want to put your advertisement on the hoarding. So the advertising company will put your ad on the top of that. So now that is a second supply provided by advertising company to the product owner or the service owner. You understood or not? Now between me and the advertising company, it will be renting of immovable property. So therefore we need to take service in relation to immovable property, location of property. between advertising company and you, they are allowing your advertisement to be placed on that hoarding. So that will be as per general provisions. So don't take service in relation to immovable property. Are you getting this clarity? So between property owner and the advertising company, service in relation to immovable property. So location of property. Between the advertising company and the product company or service company, it will be general provisions that should be taken. General provisions means what? B2B, location of recipient, B2C, location of recipient in the records, otherwise location of supplier. Then next one, what is the meaning of export of goods and export of services? Generally, export of goods means taking goods from India to a place outside India is known as export of goods. Consideration in foreign exchange is not a condition. But for export of services, total 5 conditions should be satisfied. What are the 5 conditions? Supplier should be located in India, recipient should be located outside India, and place of supply should be outside India, and how the consideration should be in convertible foreign exchange, and wherever it is permitted by RBI, it can be in Indian rupees. Where is permitted by RBI? Nepal and Bhutan. It is permitted by RBI, it can be in Indian rupees. Supplier and recipient are not establishments of the same person. Suppose if the supplier is in Indian company incorporated in India and the recipient is the subsidiary of this Indian company, will it be considered as establishment of the same person or different persons? Different persons, because it is incorporated outside India. Incorporated outside India means it's a different person. That is this note. Supply from a company incorporated in India to its establishment outside India, which are incorporated under the law outside India, would qualify as export of services subject to fulfillment of other conditions. Then there are few transactions which will always be treated as deemed interstate supply. Generally, what is the meaning of intrastate supply? If location of supplier and place of supply in the same state or same union territory, it is intrastate. If location of supplier and place of supply is in 2 different states, 2 different union territories, a state and a union territory, it is interstate supply. But there are some transactions which will always be treated as deemed interstate supply, supplied to or by SEZ. Don't see location of supplier, place of supply, to SEZ or by SEZ. Then import of goods or import of services, export of goods or export of services. Then supplier in India and place of supply outside India. Then supply of goods to a tourist. Then supply of goods or services beyond territorial waters and up to exclusive economic zone. What is territorial waters? 12 nautical miles from baseline. What is exclusive economic zone? 200 nautical miles from baseline, because India extends up to 200 nautical miles from baseline. Then location of supplier in India, place of supplier in India determined as per section 13. Security lending under SEBI, we have seen RCM, security lending. Then next one, trading in priority sector lending certificates. Then we have got some advances and we don't know whether it is intrastate or interstate. That also should be treated as deemed interstate. And we need to take the rate of GST. Whenever we don't know the rate of GST, we need to take 18%. Whenever we don't know the nature of supply, we need to take it as deemed interstate supply. Then suppose if the supply takes place in territorial waters, how to determine the place of supply? See the nearest coastal state or union territory. For example, supply takes place in union like territorial waters. Within 5 nautical miles we have Tamil Nadu. Within 7 nautical miles we have Andhra Pradesh. Which will be taken as a place of supply? Tamil Nadu, because the nearest coastal state will be Tamil Nadu. So that will be taken as the place of supply. And accordingly the nature of supply will be determined. So I have given one example also related to that. There is a marine engineer who go to the ship which is in territorial waters and provide the repair services. That marine engineer is from Tamil Nadu. The ship nearest location is Tamil Nadu. It's an intrastate supply. If the ship nearest location is Andhra Pradesh, then it will become interstate supply. So that's it. We have completed. That's it. Okay. So therefore, all the portions we have seen, and we will move on to RTP discussion. So now that we learned the revision, okay, we know the provisions. So RTP questions, if we will see, if you are able to solve these RTP questions, which means that happily you can go to the exam and write the exam. 50 marks is in your pocket, okay. So we'll see the RTP discussion. Please look into the screen. If you have the RTP, you can take that. Otherwise, look into the screen. So usually what will happen is that you will get a integrated MCQ question, case scenario MCQ question. This is like a case scenario MCQ question. They will give one big paragraph. After this paragraph, there will be some questions based on this paragraph. So 5 questions, each question carries 2 marks. So 10 marks, like that they will be giving. So now what is the approach for these questions? So you need to first see the MCQ. Don't read the paragraph. If you read the paragraph, you will not know why you are reading and what is the purpose of that also. It will be like reading a novel only. So see the MCQ first. Only when you see the MCQ, you will know actually what is the question. Then when you read the paragraph, you can correlate it. Okay. First question. So don't see the paragraph, jump from the paragraph to the MCQ. For the transaction related to renting of commercial space, what should be the rate of tax charged by ABC Limited? So some renting of commercial space, what is the rate of tax that they are asking? Means there is something related to composite, mixed, something of that sort. So that one question is there, renting of commercial space. Then second question, what is the value of supply under section 15 made by ABC? So we have one question on value of supply also. So while reading, we need to keep that in mind. Then with respect to hotel accommodation service provided by Mr. X, GST payable by ABC Limited. So related to hotel accommodation, there is one question. Which of the following options is correct with regard to availability of ITC to ABC Limited in respect of GST paid on procurement of goods meant for the purpose of corporate social responsibility? ITC not available. We know that. We don't have to read itself because CSR is now a blocked ITC. We cannot take, but we will read the question. Then, which of the following options are correct with regard to advice given by GST officer in respect of auditing of accounts? Now, these are the 5 questions. Now we will read the paragraph. So we understood what are all tested. Mainly they are testing what? Value of supply they are testing, and they are testing on the transaction. One commercial space and one accommodation service and CSR and some audit related expenditure. What should be the advice of the officer like that? Now, unrelated information or unwanted information, we don't have to break our head. That if you eliminate itself, you will be able to arrive at the answer. First paragraph, there won't be anything relevant. It is about a story, what they are doing, etc. ABC Limited has its manufacturing unit in the state of Rajasthan. Further, it has ancillary units in the state of Madhya Pradesh and Gujarat and is registered in each of these states. Okay, let them have business in multiple states. Moreover, ABC Limited owns and operates a hotel in Udaipur, Rajasthan. They also have one hotel. Okay, this is about the knowledge of their business. In addition to the aforesaid, ABC Limited owns a commercial space which is rented out to a registered person at a monthly rent of 50,000. Related to commercial space, one question is there. Okay, so now ABC Limited owns a commercial space which is rented out to a registered person at a monthly rent of 50,000. The maintenance of the premises is the responsibility of ABC Limited. In pursuance of the same, during the month of April, ABC Limited incurred certain expenses on the purchase of maintenance related materials. The said expenses are recoverable from the tenant along with the invoice issued for rent. The rate of tax applicable on the material used for maintenance was 5%. Now, first, renting of commercial property. Renting of commercial property, it's not a residential property, it's a commercial property. Okay, is there any exemption? No, we don't have any exemption. It will be taxable, correct or not? And who will pay GST in this case? Because we have an MCQ related to that. With respect to hotel accommodation service provided to Mr. X, GST payable by ABC Limited. Okay, so whether this person is an unregistered person, registered person, okay, registered person, and we don't have any exemption in this case, then what it will be? Taxable, correct? Renting of commercial property will always be taxable. Taxable under what? FCM or RCM? Taxable will be FCM. And what is the location of supplier? What is the location of supplier? It is taxable under FCM. One second. So related to this paragraph, we are trying to understand, it will be taxable under FCM. It will be taxable under FCM. And what is the location of supplier? Where is ABC Limited operating a hotel, commercial space rented out to a registered person? So they have not given anything, na? Monthly rent of 50,000. So then they operate a hotel in Udaipur, Rajasthan, that only will be taken. Fine. So we will get that information, otherwise we will take the Rajasthan, and place of supply will be location of the property. So they have not given where the property is also located. Is it given? Maybe in the next paragraph it is given. Fine. So next one you see, we need this information, otherwise you will not be able to know whether it is CGST, SGST. Maybe in the subsequent paragraphs it will be given. During the year, ABC Limited agreed to provide the hotel to Mr. X. Where is the hotel located? In Rajasthan. To Mr. X for a business conference to be held at Udaipur. Mr. X is an unregistered person residing in Maharashtra. Okay. So they gave a hotel. Again, hotel is what type of property? Commercial property. Commercial property given on rent to a unregistered person. Do we have any exemption? No. It will be taxable. And what is the location of place of supply? Location of immovable property. So therefore the nature of supply will be intrastate. So chargeable to CGST and SGST. Okay. So these aspects you need to keep in mind, because we have a question related to that. So this renting of hotel or hotel accommodation is taxable under FCM. Location of supplier will be Rajasthan, and place of supply also will be Rajasthan. It will be intrastate. Why it is location of supplier Rajasthan? Because they have a hotel in Rajasthan, means that will be the location of supplier, because in every state they will get a separate registration and intrastate. So what will be the GST? CGST plus SGST. Why place of supply will be Rajasthan? Any service in relation to immovable property, location of that immovable property will be taken as a place of supply. Then ABC Limited made a supply of machinery in the month of June, details of which are as follows. Basic price of the machinery before TCS under Income Tax Act is 45. So this will be the transaction value. Tax collected at source under income tax, already we discussed. TCS under income tax should not be included, because TCS is an interim levy. This is not a tax on income. So a car dealer getting a TCS from the customer should not be included. It should not be included in the value. It received a subsidy of 3,500 from Green Foundation Private Limited. Is it from CGST or others? Others, for usage of green energy, and the subsidy was linked to the units of energy saved and not aforesaid machinery. Means this is not a directly linked to price. So this is not directly linked to the price. So what is the treatment? We need to ignore it for the purpose of valuation. In addition to the aforesaid transaction, ABC Limited spent an amount of 5 lakh on procurement of certain goods which were distributed as a part of CSR. Can they take ITC on that? No. Then during the scrutiny proceedings in the state of Gujarat, jurisdictional GST officer asked ABC to submit a copy of audited financial statements for Gujarat, and was of the view that ABC Limited is required to get his accounts audited by a chartered accountant separately under GST law for filing annual return and reconciliation statement. Now we don't have audit. I told you, self-certified reconciliation statement. GSTR 9C is a self-certified reconciliation statement. That too it is applicable when their aggregate turnover exceeds 5 crores. 5 crores. So all amounts are exclusive of GST. The rate of GST on all inward outward is 18% unless specified. Assume that there is no other outward or inward transaction apart from the aforesaid transactions. This is the question. Now we will read the MCQ again. For the transaction relating to renting of commercial space, they gave some renting of commercial space now. What is the monthly rent? 50,000. And there is some maintenance of the commercial space. Who paid the maintenance charges? ABC. Whether they recovered that maintenance charges? ABC Limited incurred certain. The maintenance of premise is the responsibility of ABC Limited in pursuance of the same. During the month of April, ABC Limited incurred certain expense on the purchase of maintenance related materials. The said expenses are recoverable from the tenant along with the invoice issued to the tenant. So what they are asking here is that what is the rate of tax charged by ABC Limited for the transaction relating to renting of commercial space? Sir, for this maintenance materials only it will be 5%, correct? But all transactions will be taxable at what rate? 18%. So therefore the rate of GST on rent and maintenance material related recovery shall be 18%. Why sir, maintenance material also 18%? Because maintenance material will be included in the value of the rent. We are getting 15(2)(c), any expenditure incurred by the supplier and charged to the recipient should be included in the value. So therefore, the rate of GST will be taken as 18%. Okay. Now let us see what is the answer that they have given. Yes, the rate of GST on rent and maintenance material related recovery shall be 18%. You understood now the reason? The next one, compute the value of supply under section 15 made by ABC Limited in the month of June. What will be taken as a value of supply? Only 45,000, because these two should not be included. So 45,000 will be taken as the answer. So see the answer for this A, 45,000, understood? The next one, with respect to hotel accommodation service, already we discussed, hotel accommodation service provided by as ABC to X, GST payable by ABC is, they need to pay GST, taxable, it is not nil, correct. So A is wrong, B is wrong, it is taxable, and that to what? CGST plus SGST. So option C is the answer. So see here, in the nature of CGST, SGST. Then next one, which of the following options is correct with regard to availability of ITC in respect of CSR expenditure? Can they take ITC or they cannot take ITC? Amount of ITC related to such procurement of goods is not available to ABC Limited. Available to ABC Limited, wrong. Only to the extent of 50%, wrong. Shall be available to registered person to whom goods are distributed, no. So it is not available. Option A is the answer. Yes, got it? Then next one, which of the following options is correct with regard to advice given by GST officer in respect of auditing of accounts? There is no requirement of separate audit of financial statements from the perspective of GST provisions. Yes. Only reconciliation statement shall be audited by chartered accountant. No. The annual return as well as reconciliation statement shall be audited by chartered accountant. No. Separate audit of financial statements at each state level is required by ABC under GST law. No. So there is no requirement of audit. So answer is A. You understood? So previously we had audit and now they have omitted it. We don't have. So this is about the answer for this MCQ, case scenario MCQ. Mostly you can expect this kind of questions only in exam. So first read the MCQ, then read the paragraph, and then automatically you will be able to know what you need to do. Then next, question number 6, Messrs. Cute & Co., a partnership firm, registered supplier under GST in Bengaluru, Karnataka state, has provided the following information for the month of October 2023. So they gave lot of transactions, some 6 transactions are there. That's what I told you, a flow chart. First you need to check, is it a supply? Then you need to check, is it outward supply or inward supply? When you get a question like this is actually a consolidated question. Okay, all provisions will be there. You need to prepare the answer for this in 4 statements. You need to prepare the answer for this in 4 statements. First statement is statement showing computation of GST payable on outward supplies. Statement showing computation of GST payable, computation of GST payable on outward supplies. GST payable on outward supplies. Statement showing computation of GST payable on outward supplies. What you need to do is that first you need to see the activity. First you need to see the activity given in the question and then check, is it supply? Okay. And then check, is it exempted or taxable? If it is exempted, you just write a note. It is exempted, we are not required to pay GST. If it is taxable, then again you check, is it FCM or RCM? If it is RCM, just write a note, because it is not liable in the hands of the supplier, it is liable in the hands of the recipient. Na? Don't add it to the liability of the supplier, just write the note. You got it? And in these 2 cases there is no GST. Are you understanding? Whereas if it is FCM, then add it to the liability in statement 1, correct? So in statement 1 you need to add the GST payable. Is it clear? In the statement 1, you need to take it to the GST payable. And so how the format should be? Simple: particulars, amount, then CGST, SGST and IGST. Like that you prepare a table, so that in particulars itself you make particulars as a bigger column, amount, CGST, SGST, IGST. So accordingly in the particulars column you will be able to write the note also, okay, activity, and include the note, also, include the note in the particulars itself. Amount, if it is intrastate you mention in CGST, SGST, if it is interstate you put it in IGST. You understood now? I am just giving you a template as to how to present it. And thereafter, second statement. What is the second statement? The second statement is related to RCM, inward supplies. Second and third statement parallelly you need to prepare. So in that second statement it is inward supply, third statement also inward supply, but second statement is inward supply on which GST payable under RCM, third statement is inward supplies on which ITC can be availed, okay. So second statement is statement showing GST on inward supplies, statement showing GST on inward supplies under RCM. See, this may or may not be there in the question. Sometimes it will be there, sometimes it may not be there, but I am just giving you a format. Then third one is statement showing ITC available, okay, and here RCM, whatever is RCM, even you can take it as ITC also. So whatever is coming in second statement will definitely come in third statement, but whatever is coming in third statement may not come in second statement, because if it is FCM it will not come, correct. So whether it is FCM or RCM GST paid, that will be coming in third statement. You understood? And same way template will be same: particulars, value, CGST, SGST, IGST. And note also you try to write here itself, include note here itself, because so that we will not miss writing the note in the last, means we may miss some points. And ITC computation also simple: particulars, and we don't have any value column, just CGST, SGST and IGST, and you need to include the note. We need to check if there is any opening balance. I will tell you the format for this also. First you need to take the opening balance. After that you need to see, is there any inward supplies? That you need to take, whether you pay GST under FCM or RCM. And then you need to reverse the ITC, proportionate ITC. Understood? Proportionate ITC, if you have anything, that should be taken. So check for proportionate ITC. Why proportionate ITC will come? Sometimes there will be inward supplies which is common for both taxable and exempted. So then you need to check for proportionate ITC. So that treatment you need to see. Okay. Now you will get the ITC. Now fourth statement is simple: statement showing computation of net GST payable. Statement showing computation of net GST payable. What is that you need to do for that? First you need to take statement 1, GST payable under FCM, minus statement 3, ITC you need to reduce, add GST payable under RCM. That will be called as the net GST payable. You understood? This is GST under FCM. GST under FCM. Then third statement is ITZ utilized. While utilizing the ITZ, be careful. We have some principles. That is, IGST credit should be utilized only for payment of IGST first, thereafter CGST, SGST, like that we saw na that. And finally, RCM, GST under RCM. So when you add this, you will get net GST payable. So this is how you need to do the presentation. In that, the first transaction you see, finished. The first transaction you see, Messrs. Q10 Company, a partnership firm, registered supplier under GST in Bengaluru, Karnataka, has provided the following information for the month of October 2023. Intrastate taxable, intrastate, they gave in the question itself, intrastate, taxable supply of direct selling agent, inward or outward? Outward. They are providing here, they are providing service outward, direct selling agent service to public sector bank. Now, outward, do we have any exemption for direct selling agent? No. So, outward, it will be taxable. The next thing that you need to see, first you need to check is the supply, outward supply and taxable. And is it FCM or RCM? Direct selling agent, we have RCM. What is the condition? Supplier should be other than body corporate or firm. But here supplier is firm. You understood? So it will not come under RCM. What is the condition for direct selling agent? Supplier should be other than body corporate or firm. But if the supplier is firm, it will not come under RCM. Therefore, it will be FCM. So means we need to include it in the liability of Messrs. Q10 Co. You understood? So in which statement we need to put it? First statement. First statement. Then next, services provided to means outward. Services provided to means it's an outward. Outward. To a government authority. Government authority. Government authority. We saw one exemption. Amendment. Government authority. What are the activities which are exempted? Sanitation conservancy, solid waste management, water supply, slum improvement and upgradation. Few activities we saw na. In that, is sanitation conservancy in the list of activities? So it's like we saw in the exemptions. So this is how the questions are being tested. Okay. So what we will do, we will read. While reading it is okay, but while application we will miss out. This amendment they tested. What are the activities? Water supply, public health, sanitation conservancy, solid waste management, slum improvement upgradation, government authority. What is the question they have given? Sanitation conservancy. So because of that sanitation conservancy, therefore it will be exempted. Correct? Outward exempted. The second one will be exempted. So don't put it in first statement. I mean, don't add it to the liability. Just write the note that it is exempted. Why? Services, notified services provided by any person to government authority is exempted. So you write the list of notified services. As they are providing sanitation conservancy, therefore the said activity is exempted as per notification 12/2017. All exemptions will be given in notification 12/2017. Section 11. Section 11 read with notification 12/2017, like that you write. Okay. So valuer will think, who is this student? I have to give marks like that. Okay. So we will confuse him. You understood? He should not know what is our capability. Reality we only will know, but he don't know na what we are. So therefore, by seeing the answer sheet, he should see like he is a ranker and all, but we only know the reality. Okay. Then next, it is exempted. But whenever you are writing exempted, what you need to write? As per section 11, read with notification 12/2017, the said activity is exempted. Then next, third one, rent paid to a residential dwelling taken for running an office for providing DSA services, direct selling agent services. Okay. So they have taken the rent paid for to a residential dwelling. So outward or inward? Inward. the rent paid. Owner of the residential property was not registered under GST. This is an intra-state supply. Now, if you see here, residential property taken on rent by a registered person. For what? Family use? No, business purpose, for providing direct selling agent. Therefore, it will be taxable under RCM, not FCM. Renting of residential property to a registered person is covered under RCM. If it is to unregistered person, it is exempted. And if it is to registered individual for family stay, he is registered partnership firm. There is no family for partnership firm. How partnership firm will marry and they will have kids? You understood? So partnership firm would have any family and all. So definitely it will be taxable under RCM. So which statement it should come? Second statement. And can we take ITC on this? Can we take ITC? Yes, we don't have any blocked credit. It is used in the course or furtherance of business. So we can take ITC. So it should come in second statement and third statement. Understood? Then next. So in exam itself, in a pencil, you write like this. So when you prepare the answer, it will be easy for you. While reading itself, you need to. As I am taking it slowly, it will not take that much time when you start, putting it. Then purchased a car, inward or outward? Purchased a car, inward. Purchase a car for official use of managing partners of the firm for business use, interstate purchase. So inward, it will be taxable under FCM. So car purchase, we don't have RCM, correct? Car purchase, we don't have RCM, FCM. We would have paid GST. But can we take ITC? No, because car is a blocked credit. We have exceptions to the car. If it is for further supply, is it for further supply? No. Is it used in the business of transportation of passengers? No. Imparting driving skills? No. It is for the official use of managing partners, irrelevant. So it will not come anywhere. First, we are not paying GST under RCM, so it will not come in second statement. We cannot take ITC, so it will not come anywhere, but we need to write the note. What is the note that you will write? As per section 17 subsection 5, blocked credits is in 17 subsection 5 of CGST Act. So car, motor vehicle purchased, used for transportation of passengers, capacity does not exceed 13, is a blocked credit and it is not covered under the exception. Therefore, ITC is not available. You understood? Then availed information technology services for their business from partner's friend Mr. Alan Walk from Melbourne, Australia. This is inward, correct? This is inward. Information technology services. Mr. Walk refused to take any consideration. So import of services without consideration, Is it from a related person or other establishment located outside India? Is it from a related person? Partner's friend is not related, and not from an establishment, another establishment located outside India. So it is not a supply. It is not a supply. Don't put it under import of services. It is not a supply. Why not a supply? Sir, import of services without consideration should be from a related person or another establishment located outside India in the course or furtherance of business. Let it be in the course or furtherance of business, but first of all, it is not from a related person. So due to that reason, it is not a supply and it will not come, but we need to write a note. Okay. Then provided training and performance appraisal services, inward or outward? Outward. Training and performance appraisal, what will be taken? So we should check B2B or B2C, because training and performance appraisal is in TOT, T-O-T. Okay. So training and performance appraisal, B2B, location of recipient, B2C, location of performance, location where the service is actually performed. So provided training and performance appraisal services in Bengaluru to following persons: ABC Private Limited, a registered supplier in the state of Kerala. What will be the place of supply? B2B means location of recipient. Babu Cons, a proprietorship concern Rajasthan which was not registered. So B2C, what will be the place of supply? Location of performance, where they have performed it. Karnataka, Bengaluru, training in Bengaluru. So Karnataka will be taken as the place of supply. So first one will be inter. First one will be inter because supplier is in Karnataka na, and place of supply Kerala. Second one will be intra. Why? Supplier in Karnataka and place of supply also Karnataka. Therefore, it is intra. It will be outward, taxable under FCM because training and performance appraisal is not under RCM. Okay, so it should come in which statement? First statement. Then rate of CGST, SGST and IGST are 9%, 9%, 18% respectively. All the amounts given above are exclusive of taxes. All the conditions necessary for availing ITC have been fulfilled. There was no opening balance of any input tax credit. The turnover of Messrs. Cute and Co was 2 crores in the previous year. Why they gave that? Actually, it is irrelevant. There is not necessary that. Okay, means their turnover during previous year exceeds the threshold limit. Compute the net GST payable in cash for October 2023. Okay, now we will see the answer. We understood, okay, where and all it will come. So see the answer here. First, working note number 1, computation of GST payable on outward supplies. Transaction 1, DSA service, taxable under FCM. Correct? That's what we have seen here. Remember here, outward taxable under FCM. That too it is intrastate. So which column it will come? CGST, SGST. Okay. Then service provided to government authority, exempted, but we need to write the note. Information technology service, import of services, not a supply, without consideration, not in the course or furtherance of business. Training and performance appraisal services, 3 lakhs will be interstate, Kerala, place of supply. So IGST, and 1 lakh will be intrastate, CGST, SGST. Over. So statement 1 total. Okay. Then statement 2. What is statement 2? Inward supply under RCM. Is there any inward supply under RCM? Yes. Rent paid for residential dwelling. So rent paid for residential dwelling, intrastate. Supplier Karnataka, place of supply also Karnataka, intrastate. So CGST, SGST under RCM. This should come in ITC also. Correct. This should come in ITC. So see this 2250, 2050 come in ITC column also. ITC statement 3 also. Because whatever is there in statement 2 should come in statement 3 also. GST paid under RCM. Then next one. So any other inward supply on which they can take ITC? No. There is no inward supply on which they can take ITC. So because blocked credit, na car purchased is blocked credit. So only one inward supply they have on which ITC can be taken. Now listen. What is their gross liability? 31,500, 31,500, 54,000. Can we use this 2,250, 2,250 with 31,500, 31,500? Yes. But RCM again we need to add. Why we need to add again RCM? Because RCM liability we have to pay by cash. Gross GST under FCM. Okay. See the computation. Gross GST under FCM minus ITC 2250, 2350, again 2250, 2250 you need to add GST under RCM because we need to pay that using cash ledger. Easier. Can you stick on to this format and arrive at the answer? Then next one. This question, this type of question, if you are not getting an exam, return the paper and come. You went for some other exam. It is not CA intermediate exam. By mistake you would have went for some exam. The first question will be this only, okay, in descriptive. Not necessary this, but like this. All inward, outward, everything will be mixed and given. Place of supply also you need to apply and arrive at the answer. Then question number 7. From the information, following information provided by Messrs. Sasta Bazaar, determine the time of supply for the purpose of payment of GST. It issued coupon, voucher, time of supply for voucher. It should strike in your mind. Identifiable voucher at the time of issuance of voucher, not identifiable voucher at the time of redemption. That should come in your mind. Flash, okay. So coupon on 26 worth 2,000, redeemable against purchase of specific plastic items. Okay. Identifiable or non-identifiable? Identifiable. The coupon was redeemed on 31/7, but we will take time of supply as issuance of coupon. What is the issuance of coupon? 26/2023. So see the answer. So time of supply will be 26/2023. That's the answer for first one. Then next one, it issued coupon on 1/8 worth 3,000, which is redeemable against purchase of any item, non-identifiable voucher. What is the time of supply? At the time of redemption. What is the redemption date? 18/8/23. But you need to write the provision first. What is that you need to write? As per section. This is what? Plastic item, any item, goods given, means section 12. As per section 12. Subsection not required. If you remember, you write subsection 4, otherwise section 12 of CGST Act. The time of supply in case of vouchers is as follows. If it is an identifiable voucher, at the time of issuance of voucher. In case of non-identifiable voucher, at the time of redemption of voucher. First point, in this case, the voucher can be redeemed against specified plastic items, means it is an identifiable voucher. So therefore, the place of supply will be the date of issuance of voucher, that is 26/2023, like that. If you write only time of supply, like how I am writing, if you write 1 mark also you will not get, okay. You need to write the details, okay. They don't need summary, they don't need a final answer, they need explanation, okay. So you have to write. Then next, second one, third one. It received interest. Come on, what is the time of supply in case of interest? Interest, late fee or penalty for delay in receipt of consideration. The time of supply will be on receipt basis whenever it is actually received. So it received an interest of 10,000 for late payment from a customer on 11/11/2023 for supply of goods, which was originally made on 24/6/2023. When are they receiving? So time of supply will be 11/11/2023. So see the answers for this. First one 26, next one 18/8, and third one will be 11/11/2023. And for this, what is the subsection? If you are able to remember, 12 subsection 6. 12 subsection 6. The next one, with reference to GST law, determine the place of supply with reasons in the following independent cases. Place of supplier, be careful. Miss Kanika of Kolkata, West Bengal, visited to Jodhpur Law University and paid her college fees by purchasing a demand draft from a bank located in the university campus. Miss Kanika did not have any account with the bank. Banking services, did we discuss any specific provision? Banking services, whether we discussed any specific provisions? No. And therefore it will be B2B or B2C? B2 student, na? B2C. So location of recipient in the records of supplier? Not available. Why? Read. Miss Kanika did not have bank account with the bank, which means location of recipient not available. So location of supplier. What is the location of supplier? Bank, where the bank is located? Rajasthan. Correct. So see this paragraph. First you need to write the place of supply, general provision. Therefore, since the location of recipient is not available in the records of supplier, the place of supply is the location of supplier, that is Rajasthan. Good, very good, you answered perfectly. I helped. Then second one, Mizu Machine Limited, registered in the state of Andhra Pradesh, supplied a machine to KN Wind Farms Limited, registered in the state of Karnataka. Supplier is in Andhra Pradesh, recipient is in Karnataka. However, this machinery was assembled and installed at the windmill of KN Windmills Limited, which was located in the state of Tamil Nadu. Location, assembly or installation. So we need to see location where the machinery is assembled or installed. So we should not see the general, we should see the specific. So location, where is it installed? Tamil Nadu. So the Tamil Nadu will be taken as the place of supply. See, place of supply is the site of assembly, that is Tamil Nadu. Understood? Then next, question number 9A. Happy Constructions Limited, a registered builder under GST in Bengaluru, Karnataka, has got permission to build 5 floors from the municipal projects for one of its project at Suraj Nagar. Okay, they got a permission to build 5 floors. They are a registered builder and project at Suraj Nagar. Aditya Constructions, a neighboring housing project, approved Happy Constructions Limited to discuss regarding blockage of sunlight arising out of construction of 5 floors and asked it to build only 3 floors, for which 20 lakhs was offered as compensation. Happy Constructions Limited agreed to the offer. It may be noted that Aditya Constructions is not ready to pay any further amount to Happy Constructions in addition to the amount already agreed. Briefly explain with correct legal provisions whether the amount received as compensation is liable to GST or not, and if consideration is taxable, then calculate the total GST payable by Happy Constructions Limited. Assume the applicable rate of CGST SGST as 9%. Here it is like consideration received 20 lakhs for not doing an act, correct? So not doing an act. What is that not doing an act? Not constructing 5 floors, instead they will be constructing only 3 floors. So this will be coming under supply of service. And as there is an activity for consideration, it is supply under 7(1)(a), and we don't have any exemption in this regard, therefore it will be taxable. And as they are not paying anything in addition, means what? The 20 lakhs is all inclusive of GST. Got it? They are not paying anything beyond that, which means that 20 lakhs is all inclusive. Then how will you calculate GST? On inclusive basis. So 20 lakhs into, so 18%, 18 divided by 118, you will get one amount na, that you bifurcate between CGST, SGST. So see the answer. So it will come under supply of service, consideration for tolerating an act, and whatever money that they have received will be inclusive of GST. Is it clear? So how much you calculate? 20 lakhs into 18 by 118. 20 lakhs divided by 18 by 118 will be 9,41,619. Sorry. 20 lakhs into 18 divided by 118. Sorry, 3,05,084. Correct? 3,05,084 is total. Now divided by 2. Why divided by 2? CGST, SGST. 1,52,542. You understood? So it's like a simple question on the supply chapter. Then next one, B. The aggregate turnover of Messrs. Mangal and Co., a registered person for the financial year 22-23 was 8 crores. It approaches you as a GST consultant for issuance of e-invoicing. Advise whether it is mandatory to issue e-invoice. Yes. So when e-invoice is applicable, any registered person whose aggregate turnover during any previous year from 17-18 exceeds 5 crores, then they are required to give e-invoice. Here it is 8 crores, it exceeds 5 crores, therefore they are required to give e-invoice. Also list out the entities which are exempted from mandatory requirement of invoicing. What you need to write? Biggest, biggest, biggest. B for, don't write biggest, write the full. B for, first one, the following persons are not required to give e-invoice. Number 1, banking company or financial institution including NBFC, insurance company. G, goods transport agency. Next G, government department, central government or state government, local authority. E, exhibition of film in a multiplex theatre. Yes, SEZ unit. T, transportation of passengers. Goods already GTA is there, passengers through any mode. So that is what you need to write. Okay. E-invoicing applicable. These are the list of cases where e-invoicing is not required to be issued. Next one, question number 10. Ram Lala Enterprises, registered in Delhi, is engaged in supply of interior decoration services to Andhra Bhavan located in Delhi. So where Ram Lala is located? Delhi. They provide interior decoration to Andhra Bhavan located in Delhi. Service contract is entered into with government of Andhra Pradesh. TDS not applicable. This is the answer. Okay, you read. The total contract value inclusive of GST is 15,50,000 and the payment for the same is due in October 2023. You are required to determine the amount of tax, if any, to be deducted in the above case, assuming the rate of GST is 9%, 9%, 18% respectively. TDS is applicable if the contract value exceeds 2,50,000 excluding GST. What is the contract value including GST? 15,50,000. Take out the GST. 15,50,000 into 100 divided by 118. Why 100 divided by 118? inclusive of GST. So that will be somewhere 13,13,000, which is more than 2,50,000. Correct. Another condition is there. It should be an intra-state supply, and if the recipient is in the other state, TDS is not applicable. Now we need to connect this with place of supply. In case of interior decoration services, service in relation to immovable property, what will be the place of supply? Location of immovable property. So see darling, location of supplier will be Delhi, location of recipient is Andhra Pradesh, because it is government of Andhra Pradesh. Got it? And place of supply will be, it is immovable property services. Any service in relation to immovable property, what will be the immovable what will be the place of supply? Location of immovable property. Where the immovable property is located? Delhi. So whether it is intra or inter, supplier Delhi pa, place of supply Delhi, therefore it is intra. But where the recipient is located? Other state. The recipient is in the other state. So TDS is not applicable. That's what we have seen. So if it is a intra-state supply, but if the recipient is in the other state, TDS is not applicable. I highlighted that point here. While discussing TDS TCS, I told you TDS not applicable if it is intra-state supply and recipient is in the other state. So on this point they created one question itself. So TDS is not applicable. Then will your answer be different if Ramlala Enterprises is registered under composition scheme? The answer remains the same. There is no difference whether they are registered under composition scheme or normal scheme. So first, as per section 51, you need to write what is the TDS, contract value, etc. Further, see this much not required, okay. Further, for the purpose of deduction, so they have given no tax shall be deducted if the location of supplier and the place of supply is in a state which is different from the state of recipient. Therefore, in this case, TDS will not be applicable. The answer will remain unchanged even if Ramlala Enterprise is registered under composition scheme. Then next, examine the implications of GST on supply of food and beverages at cinema halls. We discussed this. What is that? If the ticket is booked separately and the food is purchased separately, the GST rate of cinema ticket is different and the GST rate on food and beverages will be at the rate applicable to food and beverages. However, if the food and beverages is received as a part of purchase of ticket, then in that case, as cinema theatre is the principal supply, exhibition of film is the principal supply, the rate applicable to exhibition of film will also be applicable on the rate of food and beverages. That point we need to write here, okay. Supply of food and beverages in a cinema hall is taxable as a restaurant service as long as the food and beverages is supplied by way of or a part of service and supplied independent of the cinema exhibition service. Where the sale of cinema ticket and supply of food and beverages are clubbed together and such bundled supply satisfies the test of composite supply, the entire supply attracts the GST rate of what? Principal supply, that is exhibition of cinema is the principal supply that will be taken. Over. So these are the questions that we have in the RTP. Now tell me here whether you got the confidence. Yes, okay. So this revision will be sufficient because I covered almost all the points on how the questions, because not even one point in this RTP is missed. Every point we have seen in the revision, okay, fine. And what you need to do is that I will be uploading 2 more videos, that alone in your free time you complete watching it. One is MAY 50 questions, another one is MCQ discussion, because many students ask like BOS MCQs, that I will upload, you watch it. But one day before the exam what you need to do, so we started at 10 o'clock today and excluding breaks etc, and we completed this at what, some 4 o'clock like that we have completed, okay. And hardly it is like some 5 hours, excluding break it's like 4 hours, 4 hours. If you watch it in 1.5 speed, 3 hours you will be able to complete the revision, okay. So you just keep the headphones, one day before the exam, 3 hours constantly you sit and complete this. Anyhow, that's it, book is there with you. If you don't want to read from that, I uploaded the PDF, you take a print of it and you can read from that also, whichever is convenient for you, you do that. And this revision will be more than sufficient. Okay. Thank you and all the best for your exams, and whatever doubts you have, you can post it in the Telegram. Take care. Okay. And don't forget to vote on April 19th if you are having voting right. Okay. So evaluate the right candidate and please cast your vote. Don't miss that. Okay. Thank you.